I know we're cold, but we're here to have a good time, isn't it? I hope you're all well. Welcome to the Actuarial Society of Zimbabwe annual conference. It's fantastic to see so many brilliant minds gathered here today under the theme, Actuaries as Strategic Partners, Building a Sustainable Financial Services Ecosystem for Zimbabwe. My name is Tinoda, and I am going to be your host and the driver of this ship for the next 2 days. And it is my hope that we are all going to be excited and share ideas that are going to enhance the financial ecosystem of our country. Now, I know I have to address the elephant in the room, which is, am I an actuarial scientist? The answer is yes. I am, I believe, for today, since I am going to be with you. I do have experience in mathematics and calculation of risk and all these predictions that you guys do. I did do O-level mathematics. I'm sure like most of you guys did. And then I was smart enough to avoid mathematics during my A-levels. So I took the safer option of accounting, economics, and business studies. But the thing is, people didn't really tell me that you can't really completely get rid of maths. So I found myself with business maths and statistics at university for my undergrad, and I had no idea what I was doing. So I decided to take a break for a few years, and then I said, you know what, let me do my MBA, and maybe it'll be a different thing, you know, and guess what, maths again. So I actually believe, because of the little information and the knowledge that I have, and because I'm here today to celebrate this with you and to discuss about how best we can enhance the ecosystem, the financial ecosystem in Zimbabwe. So from today, you're going to have to address me as an actuary. This conference is a chance for us to showcase the role actuaries play. You guys and all of us are the risk whisperers, the data detectives, the future forecasters. We don't just crunch numbers, we make them sing in a beautiful risk-adjusted harmony. And I think we deserve a round of applause for that, don't we? There's going to be so many things that are going to be exciting for us today, but because we are running behind time, I will not take much of your time. I'm going to introduce our first speaker, who is going to come and tackle the issue of climate change, food security, and poverty. What can actuaries do about some of the big problems of our time? With us today is Agrotosh Mookerjee. Agrotosh is an actuary and a fellow of the Institute of Actuaries, UK, with over 17 years of experience in actuarial topics, agriculture insurance, index insurance, different types of microinsurance and inclusive insurance products, climate risk modeling, capacity building, project management, and leadership roles. He has worked in over 50 countries in Africa, Asia, Australia, and Europe. Agrotosh has worked on over 170 products and projects on a consultancy basis, and also via a firm he co-founded, Risk Shield Limited, which is a technical services provider and consultancy that specializes in inclusive insurance. Agrotosh has designed and priced index insurance products, which have insured approximately 9 million smallholder farmers since 2015. He's an expert on various inclusive insurance products, including weather index, satellite remote sensing, and weather station-based, yield index, crop, livestock, and aquaculture, indexed and indemnity insurance, life, health, MSME covers, flood and storm index, mobile-based insurance, other digital financial services, linked products, meso and micro-level insurance solutions, and other emerging lines of inclusive insurance product categories. Now, how's that for a profile? Ladies and gentlemen, without further ado, please, with a warm welcome, help me to welcome to the stage Agrotosh Mookerjee.
Okay. Thank you very much for the very flattering introduction, and it's great to be here at this conference. So I'm really glad that I could attend this conference, and albeit for a short while, just as a speaker. So as it happened this week, I had some other work in Harare as well, so it was a very good coincidence that the conference was also taking place, so it was possible to attend. So maybe before I go into the presentation, I'll just give a very quick sort of summary of my actuarial journey so far, or how I ended up in this sector, because it's often, I think, even last night at the dinner, some people were asking, but how and why did you end up in this microinsurance sector and so on. But so basically I started off in a very mainstream actuarial context. So I did my studies in actuarial maths and stats at Heriot-Watt University, which seems like a lifetime away, or was a lifetime away. And then after that, I worked with Aviva in the UK for about 5 years. So this was both in life and non-life roles. And I think that was, of course, a very interesting experience. But I think that also, from that experience, I was also quite sure that I don't want to be doing like very typical mainstream actuarial work, because it wasn't really for what I was looking for. But also, what I got quite interested in at that time was the concepts of catastrophe bonds and so on, partly due to all the notes I had to read for CA1. So one thing led to another, and so I got involved in microinsurance initially from a research perspective through the Institute of Actuaries, and then I started working in it as well. I did some consulting work, and then I joined. I did there's this ILO fellowship. So the ILO, the International Labour Organization, they have a facility that works on microinsurance. It's known as impact insurance now, or social finance. So I did a fellowship with them for a year in Bangladesh. And that was a great experience, because I think the point I'm trying to make here is basically what I realized when I did the fellowship is when you're working in microinsurance, or so-called inclusive insurance, you have to do much, much more than just the actuarial work, as it were, because there are very few people with technical skills working in these sectors. So when you're working in microinsurance, the people you're working with, they see you as the resource person. So, anything and everything gets thrown your way. So you get to do, or you might have to do trainings. You might have to do focus group discussions with the beneficiaries. You might have to talk to different, potential partners to convince them that it's a good idea to partner with the organization that you're working with. So it's much, much more than just the actuarial focus. And I think this is relevant not only in microinsurance, but I believe in all types of insurance, pensions, and other products, that I think the actuaries, because they have such a detailed knowledge on the technical side of things, they should get more and more involved in these other areas as well. So I noticed there's a talk on softer skills later on. So I think those were all extremely relevant, in order to be most effective in terms of in different areas. But coming back to my sort of summary very quickly, so essentially after that I worked with a company called Microinsure for a few years, and with Microinsure it was all about microinsurance, so both in agriculture as well as life, health, mobile-based, and other types of products. And then since 2015, basically I've been effectively self-employed, so I started a firm called Risk Shield that's based in Zambia. So the work that we've been doing the last 9 years, it's been a combination of work through Risk Shield as well as on an individual consulting basis. So that's in short the sort of my actuarial journey so far. So let me go straight into the presentation, because I wanted to cover quite a few things before we open up for questions. Which way should I be pointing is the question. Is it there? No. Maybe you could go to the next slide in that case. Thanks. Yeah. All right. Okay. So again, I won't go into this too much, but essentially we're a service provider and working in many different countries. Maybe we can move on to the next slide. So that's just a very colorful map of the different countries where we've done some work in, either through Risk Shield or as an individual as well. So you'll see a lot of the work has happened actually in Eastern and Southern Africa, including Zimbabwe, and then of course West Africa as well, a little bit in Asia, in a few different parts of Asia, a little bit in Europe as well. So moving on to the next slide. So I wanted to point out that, the kind of areas that we get involved in, it's, again, there is some actuarial work to do with valuation or reviewing pricing and so on. But a lot of it is, when it comes to microinsurance, it relates to things like product design, pricing, also on capacity building of different stakeholders, including insurance companies, but also other types of stakeholders. So, for example, government entities, agriculture, extension staff, and so on. And then, of course, we get involved in product development, in regulatory best practices as well, in terms of both trainings related to regulations as well as supporting the regulatory application process for new types of products, as well as many different operational areas that we also get involved in, including awareness raising on new insurance products, and so on. So moving to the next slide. So yes, this is to give an idea about the types of products that we're talking about, and I think this is where I'll be focusing quite a lot on the key topic of this talk, which is on index insurance. What's it all about, and some of the key, some of the successes as well as some of the challenges, and how actuaries can get more involved in the space if they want to. So one of the key types of products which has been around for quite some time is weather index insurance. So weather index insurance, so I've worked in it in various different countries, including Zimbabwe. But essentially the concept is that, unlike indemnity-based insurance, or let's say the traditional agricultural insurance, for example, where, with traditional agriculture, or let's say crop insurance, the insurer would need to, collect a lot of information about the farmer, would certainly need to visit the farm, ideally 3 times during the season, at the start of the season, then during the season, in the middle, and at the end of the season. A lot of data is required. Then when it comes to claims, the farmers would have to, firstly understand how the claims process works, then submit claims that needs to be processed. And of course, that also takes a lot of time. So this is the traditional indemnity-based or multi-peril crop indemnity or named peril, the different terminologies used, but essentially the traditional form of agriculture insurance, which is still around definitely in many countries, including Zimbabwe. So that's one of the options. But one of the big problems with that is, as you can imagine just from this brief description, it would be very difficult to apply this to the farmer who has, 1 acre of land somewhere, or might have, 2 acres scattered in, or 2 hectares scattered in a few different locations, just one farmer. And each, the value of the crop might be quite low, and the sum insured, the premium might only be a few dollars, maybe less than $10 per hectare, potentially. So you can imagine to do this process of going and visiting the field, and then when there's a claim, going again to visit, and for the farmer to properly report the claim and so on, also to manage issues of, adverse selection and moral hazard and so on. So you can, you can see that this was generally not viable for small-scale farmers. And indeed, yes, with indemnity-based products have generally not been successful at all for small-scale farmers anywhere in the world. In some countries, it's been relatively successful, or I won't even say successful, but it's been going on in a way. But if you look at the numbers, it's essentially, extremely high claims ratios, often exceeding, 500% on a consistent basis, like just to give an example. And also, it would require certainly a lot of subsidies from government, and so on. So there are still a few cases where indemnity-based products could work for small-scale farmers. I can talk about that later if you want. But it's usually it's not viable when it comes to small-scale farmers. So that is where this whole category of index or parametric insurance comes in. And so to go back to the main product categories, weather index is one of the major ones, where the index is based on specific weather events. So in this space, we have seen a lot of, I would say changes and, progress over time, albeit perhaps the pace could have been faster, but yeah, it is what it is. So but overall, the products have been based on, weather stations and rainfall gauges. But in more recent years and over the last decade in most countries in Africa, the products have actually been based on satellite data. And this has been a bit of a game changer because basing it on the weather stations, even though there are some benefits in that, but there are also major limitations, right? So one is, of course, the weather stations are not there everywhere. There are issues with data quality in the weather stations and gaps and so on. And then even accessing the weather stations can be quite a challenge. I think an interesting experience of that was here in Zimbabwe about 12 plus years back when, so the team that we were working with, so basically the data was with the meteorological department in Zimbabwe, which is still the case. But at that time, I'm not sure if things have changed much, but at that time, the Met department would not even release the data. So there was this interesting, delegation from insurance companies, even the reinsurers who went to the Met department's office to sit at their computer, run the model, see what the outputs are, and then make a decision based on that. They couldn't even take it out of their office, So maybe that's an extreme example, but at the end of the day, in many countries, there are limitations to how you can access weather stations. But nevertheless, the products can be based on weather stations, rainfall gauges, and satellite data as well. And the satellite data, the other sort of game changer in this sector has been that a lot of the satellite data sets are available, they're open source data sets available freely. So there's no costs attached really with accessing satellite data. What is important is to test the quality and the skill of the satellite data. So that's where, putting in our typical actuarial hats, there's a lot of correlation analysis that one can do and looking at the bias and the root mean square error and all of these kind of things. But that's usually a better way or that's one of the ways of looking at it, of using satellite data as the basis. So so the products typically for weather index would cover risks like drought, variations of drought like dry spells, excess rainfall, flooding, temperature fluctuations, and so on. Can be many other perils covered. It all comes down to what data is available, and both historically and going forward. Typically with weather index, you would need to have, or you would ideally look for at least 20 plus years of data. And again, that's very much possible when you're using satellite data sets. Many of the data sets, goes back to the early 80s, so probably older than many of us in the room here. So so there's about over 40 years of data available, and the data is usually available, for many of the sources that's available going forward as well. Now, weather index products, generally the pricing, it's really a range. So I would say I've seen, I've also priced products in this kind of range between 3 to 12%, which is, it can be perceived as quite high sometimes, but then again, the risks are also very high because it really comes down to the frequency of the events you're trying to insure and also the expected severity of it. But interestingly, unfortunately as well, of course, but this year with very bad drought that's taken place in all over Southern Africa, what we see is the weather index products which were in place have triggered payouts at quite large levels, including in Zimbabwe. There was a pilot going on in Goromonzi where payouts are expected maybe 3 or 4 times higher than the premium level. So the similar in Malawi, similar in Zambia, Angola, and so on. So the good thing in that is it is showing that, if these products are in place or where they are in place, when these major shocks happen, the products can trigger payouts, which can help from both for the farmers' livelihood as well as to enable them to continue the farming in the following season. But apart from weather index, there's also other product categories. There's area yield index. So this is, again, an index insurance product. But now the index is based on the average yield in particular areas. So, and imagine so there are different districts in Zimbabwe, of course, and different wards. So you might have a product based at a ward level, or if possible, even at a village level, but it all comes down to the data limitations. And then if you have the historical data for that ward, you can develop an yield index around that. So if the average yield for, let's say, for maize, drops below that certain level, the so-called trigger level, then automatically there would be payouts that are made to the farmers insured in that particular ward. And the yield can be established through doing randomized crop surveys or crop cutting experiments and so on. So that's one category. And then a third category is hybrid, which is really combining these types of products. And this is something we have seen that has been going on for quite a while now. And in recent years, it's become more of a common approach of combining weather index and yield index, because that's one way of having a product which might pay out quite quickly, because the weather data is available usually on a daily basis or every 5 days, for example. So you might be able, if you have a component linked to the weather data, you could have a quick payout for an early dry spell or even a late dry spell or excess rainfall and so on. But then at the end of the season, you're also looking at the average yield in that area, which could potentially address even the non-weather risks like pest and diseases and so on. So, but again, it comes with some downsides as well. But yeah, that's one of the options. And finally, you have, of course, other product categories like crop indemnity insurance. So even though it's usually not suitable for small-scale farmers, but in certain cases it can be done for small or potentially like medium to large-scale farmers. So we have done some work on that as well. And of course, that's also possible there are products which are being done on life and health insurance and other types of products which are being linked to small-scale farmers as well. So this is a space we don't focus on too much, but when there's a request, we look into it. So we're doing a product currently in Zambia where it's a company called Apollo Agriculture from Kenya, and they're financing about 10,000 farmers. So they're also, apart from the crop insurance, they also wanted to have a simple credit life and funeral insurance product, which is what we did. So in a similar approach, we did products in Malawi. We are working with insurer in Nigeria, looking at micro pensions as well for small-scale farmers. So we see there is a case, there are some cases, not too many, but there are some cases where this kind of cross-selling is going on to small-scale farmers with whom there might already be an agriculture or index insurance product available, and then the insurer might also introduce a non-agriculture product for them. Livestock insurance as well, there are both index and indemnity versions. Maybe I'll go into that a little bit later. And then, of course, there are some other things we have done based on the digital based insurance products. These are mostly been mobile-based products, as well as extension of pensions and other social security tools for farmers and casual workers, which we've done in Zambia. Okay, so now just to sort of summarize, in terms of the main product categories for agriculture, when is it suitable and when might it not be suitable? I'm talking about this in the context of small-scale farming, but many of this would also apply even for large-scale farming, actually. So I would say for weather index insurance, yes, it can be, potentially feasible if the farming is rainfall dependent, which of course the vast majority of farming in Africa is actually rainfall dependent in terms of the number of farmers involved. Yeah. So basically, going back to the earlier one, if you go to the previous slide, please. Yes, thank you. Yeah, okay. So basically, with these major product categories, I mean, just to kind of summarize, with index insurance, it can be quite relevant if it is a rainfall dependent farming or if the farming is exposed to weather risks. which definitely a lot of farming is rainfall dependent, and also, most farming activities are exposed to weather risks. Key aspect is to establish the accuracy of the underlying data. So the accuracy of the data, and also how representative it is of what the farmers are actually experiencing. So this is the case with both weather-based products or even yield-based products. So the point is, when it comes to yield, for example, there is yield data available from different sources, but again, from an actuarial and a technical perspective, you need to understand, or you need to have an idea of how representative that yield data is of what farmers are actually experiencing. Because there are many reasons why there might be a big difference between the yield data that is available publicly, or the official yield data, and then the actual experience that the farmers are actually having. And then, of course, other aspects come in, like the time it takes to access the data, how quickly can the data be accessed, so that claims can be paid out quickly, because a key aspect of index insurance is that claims can be processed very quickly. As soon as the data is available, the claims can be processed without requiring any further loss verification or any loss adjustment and so on. But when it comes to the challenges, or when it is not recommended, it would be if weather risks are not relevant, if we're talking about a very closed farming system, for example, or if from the farmer's perspective, if there is an expectation for indemnity-based loss assessment, so that also would make it difficult to apply an index-based approach. And again, it comes down to the data. If there is not enough data available, or if there's poor correlation between the data that you're using to design the product and for claim settlement and the farmer's actual losses. Concentration risk is another challenge that can be applicable. And then finally, when it comes to the indemnity-based insurance, which is the traditional form of insurance based on farmers reporting losses and losses being assessed and then settled, yes, this could be possible for small-scale farmers, but provided a lot of requirements are met, such as good quality historical yield and loss data, provided there are loss assessors available who specialize in agriculture, and also the cost of this loss assessment can be absorbed within the premium rates. And also, if underwriting is possible, so to actually verify that the crop has emerged and that the farmer has also carried out the required risk management practices and so on. So as you can imagine, a lot of these requirements for the indemnity-based insurance is very difficult to apply for small-scale farmers. And also without good risk management, it's very difficult to do in indemnity-based products. Also, if there's not sufficient data available from individual farmers in terms of their losses and in terms of their actual yields and so on. So those are some of the key, the scenarios where these products may or may not be applicable. I won't go into all of this for livestock, but it's a similar sort of category. With livestock index, one of the types of products which has become quite prevalent in a few countries in Africa, particularly in Eastern Africa, is the so-called vegetation index. So again, there are satellite data sets which are measuring the vegetation index on the ground, so which gives an estimate of the level of greenness on the ground. So, for example, as you can imagine, after the drought that's taken place, many parts of Zimbabwe will be much less green at this time of the year compared to what it is in a good year or even in a normal year. And this will get worse over time until, between now and maybe until the rains come again in November, December, conditions will get even drier. So the vegetation index captures this, can capture this level of, dryness. But again, so this has been used in countries where the cattle is being grazed openly, which is the case in most countries in sub-Saharan Africa. But at the same time, you need to have some information, of course, of where exactly the cattle is being grazed, or if the cattle is moving in different areas. You also need to be aware of that. This is a issue that we have seen in Zambia, for example, where in some areas in the southern province, when there is a drought, the farmers move the cattle far away, maybe even 100 kilometers away, to areas where there is grass throughout the year. So in that case, if you're monitoring the conditions just in the home district of the cattle, it may not reflect what fodder or what grass the cattle actually has access to. And then there is also some other issues which comes up with this. Remember some years back in Eastern Africa, there was an issue of the NDVI picked up the greenery, but the greenery it picked up was of a certain kind of a bush which the cattle don't eat. So there was still a major drought issue, but in this drought conditions, there was this bush proliferated, which the cattle avoid, and it's even poisonous to the cattle and so on. So there was an NDVI-based product in that year, that's the normalized difference vegetative index, which picked up that, this area is quite green, but actually that greenness was not suitable for cattle. So that's just an example of some of the complexities that need to be factored into the design and the modeling of these types of products. And of course, for indemnity-based products, these are also possible to do, but they are often quite difficult to implement for small-scale farmers. But it's possible to do where there is good veterinary practices being followed. It's possible to monitor the livestock rearing practices and to track the livestock. And again, the cost of doing all this can be absorbed within the insurance premium. So in some countries, actually, we see that indemnity-based products are actually working out relatively, even for small-scale farmers. So this is in the context of livestock. So there are more cases where indemnity-based livestock insurance has been seen as potentially feasible for small-scale farmers compared to crop insurance. Okay, so that's just a quick summary of some of the main product categories which are relevant for small-scale farmers. Now, talking a little bit about distribution and some of the operational aspects. So, I know this may not be sometimes the typical actuarial topics, but again, all of this is very much relevant to understand if these types of products can be feasible or not, or what are the success factors, and so on. And they also have an impact on the product design and the pricing and everything else around that. So I'll give some examples from Zambia, which might have not mentioned earlier, but I'm based in Zambia myself. I live in Lusaka. So in Zambia, over the years, there's been a lot of different experiences that we have had. I'll talk a little bit about this here. One of the areas where we have seen these products where these products can be quite successful is if they can be successfully integrated with private sector aggregators. So what do we mean by these aggregators or distribution channels? Are we talking about brokers and agents and so on? Answer is no, not really. We're talking about companies which are working with farmers. So, for example, contract farming companies, which are also quite prevalent in Zimbabwe. So this has been one of the categories which has been relatively quite successful in countries like Zambia, Malawi, Mozambique, where these companies give out inputs to the farmers like seed, fertilizer, other inputs. And at the time of giving out inputs, they have also given out insurance products, or they have sold insurance products to the farmers. And this they have done because, for different reasons, sometimes they've done this to reward certain farmers. So some companies have, they've done it as almost as a part of their CSR to reward loyal farmers and, to improve their relationship with the farmers. But also they have done this from a commercial perspective. That's been quite common. If they are giving out inputs on credit. So in that case, they have a credit exposure, so they have an insurable interest. Yeah. So in this year, for example, with the effects of the drought, apart from the farmers, I'm sure a lot of companies have also suffered financially because they don't have enough crop to buy, or even the inputs they've given out on credit, that credit exposure might not have been recovered. Yeah. So this is something which has been going on in Zambia since 2013, in fact. It's been going on even recently. Then there's another relatively successful channel, I would say, or maybe the most successful channel has been integrating with finance. So again, I'll give a quick sort of anecdote. There is a microfinance institution in Zambia. It's called Agora Microfinance. And what Agora did was, well, they wanted to focus on the rural base. So they wanted to give out, they didn't want to focus on the cities. They only want to focus on the rural areas. But in the rural areas, what the customers really want is, they have different needs, of course, but when it comes to agriculture, they want a product where they only repay the loan at the end of the season. So during the season, they don't pay anything. Because if you think about it, the farmer's cash flow is seasonal, if they are seasonal farmers. So, the farmers won't have much money until it comes to harvesting and so on. So with this microfinance institution, initially they didn't have any insurance in place, and they had some major problems because when there was a drought, which happens quite often, unfortunately, they are not able to recover the loans from the farmers. They try to recover the loans by giving out loans to farmer groups, so-called group lending model. But even the groups, when there is a drought or other reasons for crop losses, all the farmers in the villages might have suffered more or less equally. So no one is able to repay the loan. So that was a big problem, and they had to actually, stop the agriculture loan product that they were giving out earlier until an insurance product was developed for them. And that, along with some other changes in that loan product, enabled them to give out loans again to small-scale farmers. So this is something we have seen in quite a few countries, in Zambia, in Kenya, Rwanda, Malawi, to name a few, where microfinance institutions are, integrating these types of products with their loans as a way of reducing their risk and also as a way of, as a benefit to the farmers as well. So in the event of, like a major crop failure or even different level of crop failure, they would not have to chase the farmers for a recovery. They can get a recovery from the insurance payout. So that's been one category. There's also been examples where certain microfinance institutions have acted as agents to sell these products to their customer base. That's also happening. So on a standalone basis, to sell the products to the farmers. And then there have also been cases where these products have been bundled with farming inputs, seeds, for example. So this has been used by farm input companies as a form of a sales promotion. So certain, seed companies, when they are selling their seed, they have had insurance bundled with their seed. So if there is a loss event, or let's say if there's been a dry spell early on in the year, they can actually tell the farmers that, okay, you can come back and get a free bag of seed, or you can get a discount from a new bag of seed. So they've used it as a form of a marketing tool. Certain farmer organizations have used insurance as an alternative to hard collateral in order to access inputs and loans from, from banks, from agribusinesses as well. So again, this is an interesting application we see of these types of products, that it can actually help to improve farmers' access to credit and potentially, also lower the interest rates at which they can access credit. And of course, a lot of the initiatives have also been linked to development initiatives from agencies like the World Food Programme and the ILO, FAO, and others as well. Now, just to give another quick example, again from Zambia, of this has been the case of, probably the single largest crop insurance scheme in Africa, because here the insurance scheme has been an index-based scheme. That's changed a bit over the years, but still remains an index-based scheme, which has been integrated with the government's farmer input support program. So this has been a subsidy that the government gives to farmers. It's approximately $140 currently, maybe a little bit more, depending on the exchange rate. And this subsidy the farmers use for buying inputs. So the subsidy is given not for insurance per se, but it's given for buying agricultural inputs. So in order to access the subsidy, farmers have to contribute a certain amount of money. So if they contribute about $8, they get $142, so it's a $150 pack. So from the money that the farmers pay, the insurance premium is deducted. So that's the way that the premium has been collected, but it's done on a mandatory basis. So it's mandatory for all farmers receiving these input subsidies to have this kind of product. So over here we see, this is happening at quite a large scale because approximately 1 million farmers get the subsidy every year. And this has been going on since 2017 at scale. And what we have seen here is, of course, the government is playing a key role here in terms of, firstly, making it a mandatory requirement over the last 7 years for this kind of insurance, but also on many other areas, on product sensitization, on pre-financing the premium, because although the premium is being collected from the farmer's contribution, but farmers contribute at different times. Some of them might even contribute after the season is over. So you need someone to pay the premium before the risk cover starts, the risk coverage starts. So that's why the government often pre-finances the premium. And then they also, in other areas to do with the claims payments and so on. So there is, it's been, I would say, quite a good scheme overall, but there is, of course, a lot of areas for further improvement. So I would not say it's a perfect scheme, definitely, but it's, it's something that has been going on for the last 6-7 years at fairly large scale. And what this has done as well is this has really excited the insurance market. As you can imagine, if you're talking of premium levels of $5, or I think it's now more at around $8 or so. So that's about $8 million in terms of premium value, which is quite interesting for the insurance markets then. And so at the time when this was started off some years back, there was only one insurer involved. Now there's about 6 insurance companies involved, and of course many different reinsurance companies and so on. All right, so this is some of the main examples that I wanted to just quickly provide, that apart from the cases I was giving in Zambia, looking at other countries, in Bangladesh, there has actually been quite a lot of experience over the years with different types of products, both in agriculture, index. So apart from the ones I mentioned, there has also been a flood index insurance product that's been going on, linked to river floods that take place. There is even a pest index, which is basing, specifically for potatoes, which are affected by a blight disease. Yeah, it's a form of fungus. And that is triggered by a certain temperature and humidity conditions. So there's a weather index product, effectively, which ensures this combination of temperature and humidity that can lead to bad incidents of blight. And then there's a few other cases which I won't go into too much right now, but from some of the other countries in Africa as well, such as Ivory Coast, Rwanda, and Tanzania. So then in the interest of time, I'll just talk a little bit about some of the high-level success factors as well as some of the challenges, because definitely there are more challenges than one can even imagine in this sector. But because of the, I do think there's a very important sector when it comes to food security, when it comes to, having a product that is providing some form of livelihood protection to farmers, but also to private sector stakeholders and also to governments. So what we've seen is, why would different stakeholders be interested in these types of products? Of course, from the farmer's perspective, it can help with their livelihood protection. But also what's very what's important to recognize is insurance can have a so-called productive impact on the farmers. So if farmers are insured, they could potentially get better access to finance, or finance at potentially lower terms, because now you have arguably reduced a lot of the risks which would have justified the very high interest rates that farmers would have to pay otherwise, and so on. So farmers could get better access to finance, potentially better access to farming inputs and to agriculture markets as well. For the aggregators, such as the financial institutions and the agribusinesses, it can reduce their credit risk, it can improve farmer loyalty, it can be used as an incentive for farmers, and so on. And for the insurance companies, yes, there is a business case out there, although it's definitely not an easy one, but there are cases where insurers, reinsurers are making money from this. So it really comes down to how diversified they are, and also, what are the products that they are doing, and also it's important to have a continuity in the product. So some of the issues I've seen is sometimes you might have a product and then there is maybe 1 or 2 years where claims ratios are high, such as this last season, for example, and that leads to insurers immediately pulling out or reinsurers pulling out and so on. And that, of course, and then they never go back, or they go back after many years. But actually, if they continued for a few more years, then they would have seasons where claims ratios would have been quite low, and there would have been it would have still been quite profitable for them. So it's important for insurers, reinsurers to really look at this with a longer term, or at least a medium term view. So. And that's sometimes difficult to look at in general insurance, but that's important, to look at it more from a 5-year perspective or a 10-year perspective rather than just from an annual perspective. And of course, for service providers such as Risk Shield, it comes down to, if we are working on this on a consultancy basis or on a commission-based model, or if it's being funded by some donor, then that's basically where our revenue model lies. But overall, it's important to have products which are very much farmer-centric. So again, this is something which is not always done, unfortunately, because of practical constraints. But it's important to develop products collecting information from farmers through a range of different means. So, of course, look at what data is out there, but also important to go out and do surveys with the farmers, focus group discussions, and so on. Because from these activities, you can really find out a lot of information, even the risk factors. If you have a 1 or 2 hour discussion with farmers asking the right questions, they will tell you themselves what the risk factors are and what has been the experience and what has been, what coverage they want. And sometimes farmers really give quite sophisticated responses, so they might say, okay, we want this cover, but we don't want the full revenue to be insured. We only want it to be the cost of production insured, because they understand that if the sum insured is lower, then your premiums will also be lower, and so on. So it's important to have farmer-centric products. It's important to have products which are, to look at this at products which are suitable, of course. Important to assess the quality and application of satellite data and remote sensing. So one of the trends in this sector has also been that there is more and more satellite data being used, but also beyond satellite data, I think in the next 5 years, we'll see more types of technologies being used, such as drones, artificial intelligence, machine learning. I think these have also a role to play in terms of improving the data landscape. Currently, we are using machine learning in one scheme where it's a case of using machine learning to convert the yield of the crop from the wet weight to the dry weight. So when you harvest maize initially, and if you measure the yield, it would give you the so-called wet weight. Then after it's dry, it gives you the dry weight. So that is usually, that assessment was done manually, but that is now being done using machine learning. But again, I'm sure these are areas which can be improved much more in the near future. And then very important to understand who are these aggregators and why are they, why would they be bothered to support these insurance schemes, be it through in terms of premiums, or be it even in terms of providing access to insurers to their farmer base. So it's really important to understand what is the aggregator's business case. And also important to, also really important to look at the flexibility with insurers and reinsurers, both in terms of the margins that they would apply for contingency and for return on capital and profits, but also in other ways. What I mean by that is sometimes we see it's important to have more unusual features in the product to make it appealing for the customer base as well. So we have some products going on in 3 countries, Kenya, Rwanda, and Malawi, where we actually have a feature of so-called low claims cashback, which it might sound a little bit strange, but essentially we see that, okay, if claims are very low in a certain year, actually there would be money paid back. So it's almost a form of profit sharing which is done with the aggregator and the insurance company. And then the aggregator uses that money to actually make payouts in certain areas where the insurance payout may not have happened because it's done on an index basis, but they're aware that there have been losses in certain areas. Okay, so then I think we are running short of time a little bit, so I'll just wrap up quickly. I think a key aspect is also around the payment of the premiums. So here also there are different options. One, of course, is looking at the scope of premium subsidies from government, potentially from donors. But also it's important to look at other forms of, other ways in which the premium can be paid. Pre-financing of premium is an important thing to consider. So by pre-financing, we mean where maybe an aggregator or maybe even the government pays the premium on the farmer's behalf and recover from the farmers afterwards. Or maybe the farmers pay themselves, but they might pay from, the proceeds of the crop from the previous season rather than for that particular season. Because if you think about it, asking the farmers to pay a premium at the start of the season, it's usually the worst possible timing for the farmer, because that's the time of the year when they don't want to incur any additional expenses. So you need to think of other innovative ways in which premiums can be paid. And of course, also looking at the efficiency of the overall processes and so on. Okay, so then finally, just to end on looking at some of the relatively more successful and experiences, and also some of the challenges. So overall, we see that when it comes to products which are being distributed through private sector aggregators, this has been going on actually in quite a few countries without any government support. So I would say Zambia is one of them. So in the sense that, of course, in Zambia there is the government scheme as well, but there is also private sector schemes which have been going on for over a decade now without any government intervention. The same in Kenya, the same in Bangladesh, where government is not, not keen on supporting insurance at all currently. But still there is over 1 million farmers have been insured in Bangladesh over the last few years cumulatively. And then, of course, government-linked schemes have also been quite successful in some countries, such as in Zambia, also cases in Kenya, and of course, countries like India, China, the government-led schemes have led to millions of farmers being insured. And also we see from the insurance company's perspective, the so-called first mover advantage has really been there. So some companies which had, which had sort of invested in these types of products and even hired an agriculture team and things like that, they've actually been quite successful now. So in the initial few years, it was loss-making and it didn't really make any money, but after about maybe 3 or 4 years, they've actually been, it has become a profitable venture for them in some of these countries. Reinsurance options, I would say, interestingly, this has actually improved over time, although due to climate change, it is a challenge. It's not easy, but overall, we see there are more and more reinsurers, especially regional reinsurers in Africa, in Asia, which are being more active in this space. Earlier on, it was the usual suspects of Swiss Re and Munich Re and others, but nowadays there's a lot that companies like Africa Re, Continental Re, GIC and others are doing as well. And also, very importantly, at the end of the day, because this is all about applying insurance from a development perspective for the low-income people. So we do see there's some positive impacts of having these types of products on farmers in terms of livelihood protection, in terms of claims being triggered when they are being expected, improved access to credit, improved access to markets, and so on. But of course, in red, we know that there are lots of challenges. So access to data remains a challenge. The limitations of bundling with other services is also a challenge. So it's all well and good saying that it makes sense to bundle insurance with loans. But when you do that, one of the impacts is that it can increase the perceived cost of lending. And it can also be an issue with, if there are caps on interest rates, which applies in many countries, then you may not be able to do it, or the banks may not want to do it because it exceeds that cap. So it's about understanding how that can be done. And also, there's not so much focus on aggregators and distribution channels as well. So I think there's this well-known proverb now in microinsurance that no one wakes up in the morning wanting to buy insurance. I suppose you can apply that to other forms of insurance as well. But the same applies with aggregators as well. So I think sometimes we are still assuming that if you're a bank or if you're a contractor, you will automatically, you will want this product because you understand insurance and so on. That's not the case really. So there's a lot of, it's really about trying to understand what the pain points are of these different companies and to see if an insurance product would be applicable there or not. Lack of continuity in schemes is also a challenge. So this has been the case for crop like cotton, for example, in Malawi, Tanzania, Zambia, I would say probably in Zimbabwe as well, where because there have been lots of changes in cotton in terms of policies, in terms of overall the way the cotton market is, a lot of companies don't want to have either pulled out or they don't want to continue operating in the cotton sector. So as a result, this has affected some of the schemes which were integrated with cotton, country like Mozambique, for example, and also in Malawi, where previously companies which were acting as aggregators stopped and automatically large number of farmers lost insurance coverage. All right, so I won't go into all of the other challenges in the interest of time, but maybe to look at, okay, what can we do about it, or what are some of the things to consider also from the people in this room. So I would say generally for agriculture as well as any other form of microinsurance, you need to really focus on the products being client-centric. So as much as as actuaries, we are trained to I suppose think more from the perspective of the insurance companies, which of course, that's extremely relevant, but it's at the end of the day, if you don't have a product that is really speaking to your target customer base, not in line with their risk priorities, not in line with their willingness to pay, or and they're also the kind of features they want to see in the product, it may not be sustainable. So really try to be as focused on the client at the end of the day. Improved access to data, I think this is also something where both governments have a role to play, and I think as actuaries here, if there's anyone who understands data, it's probably the group over here. So it's really important to see how, what data can be accessed. And because one thing I've also seen is that, we talk about data not being there, or there's a lack of data in something. There is usually data available. It's just a question of figuring out where and what data you need and how you can access it. And if it's not data from secondary sources, you could even collect it from primary sources sometimes, or you can use benchmarking of data as well. So the types of data, like be it from weather stations or satellite-based or yield data or livestock data, market information, it's about looking at how this data access can be improved, and also how data can be made more as how these data sets can be treated as a public good. Because I think one of the challenges is that there's a lot of data available, but of course, if say an insurance company wants to enter the sector, they often have to start from scratch because there is no well-established data set for agriculture insurance or index insurance that they can easily tap into. Better access to market research is important. Capacity building is important for different, of course, for the farmers, but also for distribution channels, insurance companies, and also the policymakers. Assessing the quality or the skill of the data is really important as well. To make it easier for technical service providers and consultants to operate, I would say this is a requirement as well, because what we see is in some countries there are some barriers to outside parties operating in, which then also results in not much happening in the space. But also looking at ways of continuously innovating and improving these products going forward, finalizing these products in good time and having continuity over the years. The point is that often when it comes to agriculture particularly, there's this issue of last-minute requests being made, maybe when a drought is almost upon us, or there are flood warnings in place and things like that, which of course, usually you can't have a product in such cases and so on. But if the products are finalized in time, maybe a couple of months before the season actually starts, and also if the products continue for a few years, not just 1 or 2 years, then it becomes more viable. Farmer level understanding of the products is very much important. Looking at ways to reduce operational expenses is key, and having relevant regulations and policy in force as well. That's also extremely important, so that so I mean in Nepal, for example, there is a policy framework that has made agricultural insurance mandatory, but that also sort of compels or forces the banks to finance farmers. So they have, through their policy, they are basically compelling the banks to finance agriculture, and they're also compelling the insurance companies to provide agricultural insurance. So whether it be compulsion or encouragement. I think these types of policies would also help, and also having subsidies being implemented in a smart way and in an inclusive way, so that you're also, you're actually crowding in different insurance companies into the sector. So yeah, I think that's pretty much it. I've gone over time a little bit, but if there's any questions or comments, I'm happy to respond. Thank you.
Thank you very much, Agrotosh, for that insightful presentation. Ladies and gentlemen, may we please give him another loud round of applause. At this point in time, I will take any questions. Do we have anyone who has got questions that they would like to ask? Yes, there's a gentleman at the front. You may go ahead, sir.
Thank you. Very wonderful and insightful presentation. My question relates to adverse selection from the farmers. How do we come up with a multi-year commitment, given that we know that there are cycles in agriculture? We know in Zambia maybe it was 1 in 4, now it's like 1 in 3 in terms of drought incidents. In Zimbabwe, I think it might be 3 in 5 or 1 in every 2 years. But how do we ensure that the farmer is in for a long haul, so that there is some kind of cost recovery? That is, we want to balance affordability and profitability. Thank you.
Yeah, so no, thanks for that question. So I would say it's, I think it's in a few different ways. I think, and I think none of it is quite easy to implement really. But I think with, we are seeing with certain, I mean, at the end of the day, it's about how the farmers are being reached. Yeah, so if they are being reached on a, usually the approach we see, it's like a B2B approach, insurer reaching the aggregators rather than the farmers directly. So in that case, even the aggregators tend to do what, I mean, they don't tend to consistently take out insurance every year, which is part of the challenge. But in some cases, we see that, one way would be for aggregators to really understand the value of the products. And then if once they do that, maybe after the experience for maybe 2 or 3 years, then I think the insurer can, propose to them this kind of a multi-year approach. But if it's a multi-year approach, what I've seen is that this has happened in some cases, this kind of multi-year approach. Then in Bangladesh, there's a few aggregators which have actually gone into this, including BRAC, the big MFI there. But there, for BRAC to go into it, what they will also look for a discount on the premium rates for that to be done. But also they would look at other features. So I think one of the features that they've looked at is this kind of profit share, in a way that, okay, if so in the years when, when the insurance is quite profitable, they would also, be able to access some of that profit share. So that was been one of the one of the ways of incentivizing this kind of multi-year approach. But also it comes down to, so I think it really comes down to what incentives you can provide to the aggregators, and also if the aggregators see a value in doing this. I think currently a lot of aggregators, they don't always see the value of doing it on a ongoing basis. So they might take out insurance in the years when they're expecting a drought, and in other years they may not take it out. But if they understand that there is value on a consistent basis, then they would agree on a multi-year basis potentially. Yeah. Okay.
Thank you very much. Any more questions? Going once? Okay, I see a question there.
Thank you, Agrotosh. I don't know whether it's by coincidence that your name and the topic, they are coinciding. But my question is, there is a slide that you beamed, which had some premium income, was it 18 million? And then the claims triggered was like quite a small amount. Then I was asking myself, if this business is this profitable, why shouldn't anyone be in that particular industry? Or maybe, was there a typo on the numbers? I don't know.
Yeah, so it really depends, really. I mean, I would say when it comes to agriculture index insurance, overall the claims ratios we've seen in different countries in Africa, I mean, it varies a lot, but averaging out, it's been around, I would say around 60%, 60 to 70% in that kind of range. So I think maybe the stats I was showing was in a couple of years where, I mean, I think that, yeah, there it was relatively better. I think there also the claims ratio was around the 60% mark roughly. But then in a bad year, like this year, in most countries in Southern Africa, claims ratios are exceeding 300%. And even for cases where, you know, where the scheme is quite diversified or like where the risk is spread out, like in Zambia with the FISIP scheme, it's in all the provinces. Even there, the claims ratios are, I think, well over 200% roughly. In some provinces, it's even over 400%. So I think that's the issue that, I mean, I think in some I mean, overall it can be still profitable, but it's a case of, you know, in some years you would have very low claims ratios, but again, in other years, the claims ratios would be extremely high because it's, you know, because of the catastrophic nature of some of the weather shocks which are being experienced, yeah.
All right, and there goes our time. Agrotosh, thank you so much for coming through. Ladies and gentlemen, may we please give him another round of applause. Before you go, we have got something special for you on behalf of the Actuarial Society of Zimbabwe. Just to say thank you for being with us this morning and for sharing those nuggets with us. So we have a special something for you. Housekeeping announcements. The owner of a motor vehicle with registration number AFW 9083, AFW 9083, may you please go and urgently attend to your vehicle. You left your lights on. We might not have jumpers after this. And knowing people, they'll be rushing home anyways, so you might be stranded. So AFW 9083, please go and attend to your motor vehicle. Allow me to acknowledge the presence of our guest of honor who has just walked in, Honourable Deputy Minister of Finance and Investment, who is Honourable David K. Mnangagwa. Thank you for joining us, and we welcome you to the Actuarial Society of Zimbabwe annual conference. May we please welcome him. He is here to officially open our conference. At this point, may I kindly ask all of us to be on our feet so that we can sing the national anthem. Thank you very much. We may take our seats. Just a disclaimer, I stepped away from the microphone so that you guys could not hear me sing because I didn't want to show off. But I can actually sing very well, and I heard that, actuarial scientists are very humble people, and since I am identifying myself as one today, I just decided to be humble as well. At this point, allow me to call upon our president, Prosper Matiashe, so that he can come through and introduce our guest of honor.
Good morning. Let me say all protocol observed. In the interest of time, our guest of honor has other commitments. Ladies and gentlemen, it is my singular honor to welcome and introduce our guest of honor for this event. Honourable David Kudakwashe Mnangagwa is the Zimbabwe Deputy Minister for the Ministry of Finance, Economic Development and Investment Promotion. He is also a member of Parliament for the Midlands Youth Quota. So we have someone, I think if you look at our profile, a lot of us are below 35, below 40, so you qualify to be youth. And we have a esteemed representative in Parliament also looking at our needs and considerations. The Honourable Deputy Minister, he has a diverse and impressive entrepreneurship and academic background. In 2011, he obtained a BSc degree in Actuarial Science from Drake University in the United States of America. He then worked at Aon Hewitt, which is a Fortune 500 company and one of the leading global insurance companies, as an actuarial associate in the US between 2011 and 2014. The Honourable Deputy Minister, he has a very impressive track record in entrepreneurship that should also challenge us today, including his presence that upon returning to Zimbabwe, he co-founded a venture capital firm, Flame Lily Ventures Capital Group, which specializes in private equity investment and financial advisory services. Flame Lily's portfolio boasts of interest in infrastructure services, financial services, mining, real estate, and construction. He also served as one of the founding board members for the National Building Society, NBS, between 2015 and 2020, influencing its operational and strategic direction and decision-making processes for the institution. He also went to pursue a Bachelor of Laws degree at UZ, University of Zimbabwe, graduating in 2023, and was recently admitted as a legal practitioner by the High Court of Zimbabwe, which further diversifies his professional and academic background. So the challenge that I also picked from introducing the minister is that I had sort of plateaued and had a bit of self-actualization when I became a fellow. But now the deputy minister has pursued law. I'm challenged whether to take law or maybe engineering, but it's a challenge to all of us. Ladies and gentlemen, please welcome the guest of honor, Deputy Minister Mnangagwa. Thank you.
Thank you, Mr. President. You know, it's been a few months since I stood at the same podium, probably with the same group of people. It was the President's dinner, right? And it was a handover and takeover. I'm glad to see that it was successful. They invited me to oversee the incoming president come in and the outgoing. I didn't actually see it happen, but I'm glad that the president, so kudos to the actuaries, I guess, for being humble and for following procedure. But allow me to recognize the president of the Actuarial Society of Zimbabwe, Mr. Prosper Matiashe, Actuarial Society of Zimbabwe Council, the past presidents and leadership, captains of industry, distinguished guests of this special event, members of the ASZ, members of the Fourth Estate, ladies and gentlemen, let me say all protocols observed. It is my singular honor to be standing before you today to officially opening the 10th convention of the Actuarial Society of Zimbabwe. I'm delighted to be addressing a room full of intellectuals, industry leaders, and bright young minds. The president mentioned that we've got a very huge youth dividend in Zimbabwe. I'm sure you'll testify that when we look at our youthful population, we're about 67% in Zimbabwe. When we look at 40 years and below, I think we go over 70%. So it is heartening to see young actuaries, young leaders participating in such events to make sure that the discourse of the future is decided by those most affected. Now, let me talk about the profession and the convention. Remnants of the Actuarial Society of Zimbabwe can be traced as far back as 1983. Initially, local life insurance companies were the primary employers of actuaries. Since then, the profession has grown into leaps and bounds within the country and has become a pivotal profession in the financial services industry. Actuaries now serve in every corner of industry, including in banking. I think we have Shepard Fungura heading ZB, insurance, investments, and less conventional career paths like mining and agriculture, and even politics and government where we are there. We also have an actuary as the chief investments officer of our sovereign wealth fund. So I would like to say actuaries are actually breaking new ground in the Zimbabwean market. Over the same period, the Actuarial Society of Zimbabwe has grown to become become a leading voice representing the actuarial profession in Zimbabwe. I understand that the first Actuarial Society of Zimbabwe convention was held in 2015. Therefore, this 2024 convention marks the 10th convention for the Actuarial Society of Zimbabwe. I take this opportunity to congratulate the Actuarial Society of Zimbabwe on achieving this milestone. This is a key milestone that must be celebrated as an indicator of the progress made by the profession. I think you can give yourselves a round of applause on that one. Now, various key initiatives, including the ASZ Education Trust, the Secretariat, and the Actuaries Bill have come out of the convention's deliberations. Therefore, I have confidence that the profession will continue to hold transformative conventions and grow bigger as a profession for the benefit of our country. I therefore challenge the profession to influence government policy and industry development. As a ministry, our expectation is that actuaries will drive innovation and sustainable industry growth through developing relevant products and ensuring financial soundness of companies. We also support government policy decisions through in-depth insights from data you use in your work. I think I was quite clear in our last, at the President's dinner, that we want to provide solutions to problems. Zimbabwe is a very unique market. We have a very unique context, which provides a challenge for actuaries to make sure that they think outside the box and provide models that work for the Zimbabwean context. Now, this year's theme is Actuaries as Strategic Partners, building a sustainable financial services ecosystem for Zimbabwe. The theme is very loaded with meaning in our economic journey as a country. I've granulated the theme into key words to paint a picture of how to apply the theme to your work as actuaries. The first one being strategy. Actuaries are a leading profession in terms of providing insights to inform strategy and broader decision making. This at both industry and government level. I challenge actuaries to ensure that your work isn't just done for statutory purposes, but rather influences the strategic direction of the company. Your voice should be clear and influential in strategic discussions. I'm not sure if our humility as actuaries will allow for this, but this is a challenge. Your voice should be clear and influential in strategic discussions. We need to have a louder voice. As such, I encourage the profession to assist its members to develop skills to be able to influence strategy at their various workplaces. Partners. I'm comforted that Actuarial Society of Zimbabwe realizes that the profession is a partner to key stakeholders in the economy and the country at large. Being a partner means you don't just focus on the monetary component of your client and stakeholder relationships only. It means that you seek to solve problems for clients and stakeholders. It means the profession seeks to develop win-win solutions at long-term view. Therefore, I encourage the profession itself as solution sellers that clients seek your input at every opportunity. Another key word I'll be building into this is building. Building entails creating something that withstands the test of time. Buildings are built on strong foundations and involve a great effort in planning and designing. In the same vein, buildings require reinforcements to support the superstructures. As they stand the test of time, buildings routinely undergo refurbishments so that they remain relevant to the needs of their users. I view the actuarial profession as the architects of the financial services industry. Therefore, the profession should develop tailor-made solutions to our challenges as a country. I challenge you today to put as much effort in planning and designing financial services products that spur growth of our economy. Reinforce such products with sound pricing, capital adequacy, and risk management principles. Above all, over time, frequently review and assess suitability of the products to our environment and the needs of the economy. For example, the profession should be at the forefront of reviewing the suitability of traditional pension systems in our society. Now, on the journey to Vision 2030, through NDS 1, what government has done is created a template that shows that indeed, as Zimbabweans, we can build our own country. At the beginning of the inception of the vision, government told industry that we can build our own roads without having to invite foreign companies, that we can surpass agricultural targets that have been there since time immemorial Rhodesian days, that we can have our own dams that can give us food self-sufficiency. This might have seemed as a pipe dream, but a template was set with government leading from the front. Ordinarily, it is the private sector that should be taking this role and spurring our economy forward. The challenge that we're now giving the private sector and the people in this room is to call upon and each other to have a private sector-led economy, as is envisioned by His Excellency in his vision. Private sector will always move faster than government. Government has set a template. They've shown that it can be done. It is now time for the private sector to lead and take over our growth trajectory. Now let's talk on sustainability. Through the current drought, the country is experiencing a kind reminder from Mother Nature on the negative impact of climate change. The frequency and severity of these climate risk events is expected to increase in the future. Financial services products will be required to consider the sustainability issues and support the migration to a green economy. As government, we are actively supporting initiatives to enable the country to be able to mitigate the consequences of climate change and adapt to the climate change environment. Such initiatives require significant input into the potential impact of climate risk events, investment required to finance the programs, and the transformational impact of initiatives on people's lives. I believe that actuaries are among the key risk modeling professions at a global level. Therefore, actuaries should be a leading voice in the sustainability journey for the financial services industry and the economy. The Actuarial Society of Zimbabwe is already participating in the Access to Insurance Initiatives, A2II, Area Yield Index Insurance. This is an exciting initiative with significant potential to transform the lives of small-scale farmers across the country. I therefore encourage the profession to build on this early work and carry forward into the following aspects. Number one, the mobilization of climate finance funding for local banks to on-lend industries pursuing green initiatives. Number two, to design insurance for both life and non-life risks that may increase due to climate change. Number three, ensuring that catastrophe insurance for local entities is sufficient and priced optimally. And lastly, but not least, ensuring that enterprise risk management frameworks incorporate climate risk management practices. Now let's talk about the ecosystem. Now I'm also delighted that the Actuarial Society of Zimbabwe, recognizing that the profession is broader of a bigger ecosystem that has multidimensional interdependencies between participants. The key to growth of the financial services ecosystem is positive competition, so that we can bring the best out of each other. Therefore, collaboration between various professions, industry, and government is of paramount importance. I encourage the profession to actively support government, industry associations, and other stakeholders in any key initiatives that they will be carrying out. As the government, through various ministries, we are collaborating with actuaries in various initiatives, key among them, assisting in setting up the Road Accident Fund. I'm sure you saw this in the finance bill in December. Assisting in setting up the National Health Insurance Scheme, spearheading research and participating in key decision-making at Zimstat level, participating in climate risk financing, sustainability reporting, and other ESG initiatives being spearheaded globally, and inviting actuaries to provide business and statistical projections in sectors such as mining, agriculture, and different investments like those under the recently formed Mtapa Fund. Now, if none of you have been involved in this, it means that you're being left behind, so maybe you need to take a proactive approach to pitch your solutions if you have not been approached. So I'm confident that if the profession can live and practice the 5 sub-themes I've mentioned, the profession will thrive and surpass our imagination. In such a positive future, more actuaries will be occupying the C-suite level in large corporations, and several actuaries will be in central government, working full-time in policy making and becoming strong government advisors. Personally, I've taken such a huge step in joining government, and I believe it's a new path opened for other actuaries as well. Let us take this new wave of actuaries breaking boundaries to further our voice and make sure that we reach our fullest potential. Now, what are our key professional maturity areas? As the profession grows to the next level of maturity, the following are key areas that will transform the profession and are key enablers for the financial services industry. The first one is data. Policy and insights rely on credible, relevant, and accurate data. This isn't readily available in the local financial services industry. A central data repository is therefore needed to enable some strategic direction at a national level. The recently launched mortality tables are a good example of such initiatives. The profession should build on the mortality tables project and expand to other areas of actuarial practice. Now, the other area is in education. I believe the government is already supporting and creating opportunities for actuarial work. However, creation of such opportunities needs to be matched by a commensurate supply of qualified actuaries with appropriate skills. I understand several universities now have an actuarial science degree. The next stage is to ensure pathways to fellowship, qualification, and have appropriate study support, financial support, and mentoring. Contextualized training for the local market is also critical to complement international certifications. Therefore, the ASZ is implored to work extra hard to grow the number of qualified actuaries that serve our market. The other area is market conduct. The Actuaries Bill is an urgent matter before myself and the ministry as a whole. I understand that there will be deliberations to fine-tune some of the provisions in this conference. I would hope that we can expediently get that done so we can champion this bill in Parliament. Now, this is a key artifact for the profession's transparent regulation and professional maturity. The Actuaries Bill seeks to strengthen the relationship between the actuarial profession and its key stakeholders, eliminate doubts over the conduct of actuaries, especially given the outcome of the Justice Smith Commission of Inquiry, which apportioned some of the blame to the actuarial profession, and to promote the growth of this profession for future generations. I therefore challenge the Actuarial Society of Zimbabwe to finalize the bill and take it to the next stage. The President has assured me that before the end of the next quarter, we'll be able to take it to Parliament. I would hope that you can put that as one of his KPIs as President to make sure that he stays true to his word. Now, the last area is the Secretariat. I was also a guest speaker when the Actuarial Society of Zimbabwe launched the Secretariat at the Presidential Dinner. Now, this is important as it becomes your key pillar of brand presence in the market. I encourage the profession to increase brand awareness, including visibility of your offices and presence at key industry and government events. Work should start now to plan the construction of a head office for the ASZ. So where, as actuaries, your humility does not allow your voice to reverberate in your corridors, let us utilize the association to have very strong position papers that you have all come together, developed and agreed on, and make sure that becomes the voice of everybody. I think as a collective, the association, the society, can get a lot more done. Now, in concluding, I congratulate the ASZ for achieving the milestone of holding its 10th annual convention. The future of the profession is very bright, and I encourage all members to actively participate in this journey. The ministry is in full support of ASZ and its initiatives, and at a personal level, I continue to support the society to move forward. With these remarks, I thank you, Siyabonga, Tinotenda, Asante Sana. I thank you.
Honourable Minister, may I please invite you back to the podium? Like, wait, no. Yes, just whilst you're still there, I wanted to just make sure that I maximize the opportunity that I have as the Master of Ceremony to have a picture taken with you. Oh, there's another one.
She wasn't joking when she said she wants to maximize on all the cameras.
All right. Well, you are an actuary. I think you understand the concept of risk-return analysis, which is a framework that assesses the relationship between risk and potential return. So I had to calculate my risk and say, what if he says no? But I knew he wasn't going to say no. So I am very happy with my return. Like I said, guys, I am an actuarial scientist after all. Thank God for ChatGPT. Whilst we're still there, may I please invite our president to come through with a gift for our guest of honor. I think I got so many things that I also got to learn as a marketer today. One thing that really struck out for me was from his speech when he mentioned about having a voice as actuarial scientists so as to foster sustainable policies and solutions which can be applied at organizations that we work at. Did you understand that? Charity begins at home. So sometimes we need to come up with strategies that are going to help the organization, even fostering collaboration between departments for the organizations that we work for. So thank you very much. May we please give our guest of honor, Deputy Minister of Finance and Investment, Honourable David Mnangagwa, a round of applause.
I was asking the president if this is the actuaries bill, because I've been bothering and asking for it, but he says it is not, it is still coming, but I'll continue asking for that bill and we'll push it through. Thank you very much.
Thank you very much for officially opening our 10-year celebrations as the Actuarial Society of Zimbabwe. The other thing that I wanted to mention, which was a huge takeaway for me, was that we need to make sure that the data we collect is credible, relevant, and accurate when we want to consider policy making, which is very key. Even as an ordinary person, the budgeting that we do in our households, the data that we're using, is it accurate, is it relevant, and is it credible? At this point in time, we're going to take a 10-minute break so that we stretch our arms, we get very comfortable. We still have a long day ahead of us. So at exactly 10:33, we all should be back seated at our positions so that we may continue with this program. I urge you to talk to someone during this break that you haven't met before so that you introduce yourselves. The minister said we need to have a voice. We need to make sure that our brands are out there, and we have to take advantage of that opportunity. So thank you. In 10 minutes, we convene back here. As a marketer, I'm sure you can understand that every opportunity I get to make money, I have to utilize it. So those that are outside, don't make me fine you, please, for coming into the room late. All right, welcome back, ladies and gentlemen. I trust and hope that you've managed to interact with someone that you've never met before and created those sustainable relationships we need in order to foster collaboration. At this point in time, may you please put your hands together and help me welcome our President, Prosper Matiashe, for the presidential address.
Good morning. I think it's still morning. Let me observe the presence in absentia of the Deputy Minister of Finance, Economic Development and Investment Promotion, Honourable David K. Mnangagwa, who was our guest of honor. Let me also honor the presence of industry leaders who are here present. Let me also honor the presence of past presidents of the Actuarial Society of Zimbabwe, the Actuarial Society of Zimbabwe Council. Ladies and gentlemen, it is my honor to welcome you to the 10th convention of the Actuarial Society of Zimbabwe. We had the first convention in 2015. It was an idea back then, and there was a question whether we can sustain that over the years. The good thing is that we have been able to sustain that 10 consecutive years. Therefore, it's a key milestone in our journey as a local profession. Some of the achievements you would say, what have we achieved over those 10 years? The first thing is actually achieving the 10 years, right? For some institutions, you can start but fail to achieve the consistency. So we ought to celebrate and say we have been able to do that, right? And if you look at it, in terms of attendance, there were years where we would have, for example, 120 people attending, 150 attending. Nowadays, especially for this 10th one, we have already crossed 200 attendees joining the convention. For me, that's a key milestone that we also ought to celebrate. It tells us, one, that the profession is growing, right? It tells us, two, that there are people who may not be part of the profession but find it valuable to spend 2 days with us, right? You know, I have a bit of history with the profession. I'll talk about, you know, pathways to education. That's something that I'm keen about. But when I said I want to be an actuary, my mother was very angry, right? She thought I would be a doctor, right? So she was very angry. I have to thank my father because he said, let him do what he wants to do. It tells me that the profession in some corners is not known, right? And if you compare 10 years ago, even within our profession, you would find that in certain departments of the companies that we work for, if you ask to say what does an actuary do, they wouldn't know. I hope and have confidence that we have managed to improve that, even with the stakeholders that we work with. Over that process, I've been lucky. I think out of the 10, I was the treasurer for some years, right? The sponsorship levels have increased by more than 200%. What it shows is that the sponsors see value in supporting the event. The sponsors see value in supporting our profession. And we would like to thank the sponsors that have been consistent in supporting us over that process. The quality of delivery of the event has also improved, right? There were days, for example, just print the program, black and white, it's done, right? Today we have a booklet. So in my reflection, the quality of delivering the event has also improved, right? Previously, you would just take Prosper because he can speak maybe and he becomes the MC. It's good to have our own talent. But now and then, you also need to have maybe professional, right, speakers who have trained and who live that, right, and who have managed to improve on that. Even, gifts, for example, some goodies, some bags, and so on. So you can see that the content and the delivery that we're trying to deliver for this event is substantially improved over the years. As I've said, there is significant growth in membership. We used to be maybe close 80, 100 subscribed members, right? But now we can confidently say that we have already crossed 160 subscribed members. We talk of 30 to 40 subscribed fellows, right? This has involved one, enabling the local companies to pay for their students, for example, right? So that they also become bona fide members of the profession. It includes enabling actuaries who may be working in the diaspora to be actively participating with the local chapter and also become members. There is room for improvement. Of course, for example, one of the areas that I always think about is for people in financial services, you find that, for example, the people that audit us are actuaries maybe from different jurisdictions, for example, right? They ought also to have localized knowledge of our environment. So we ought to engage with the accounting firms, for example, so that we can build a case where even the people who review our work, even if he is from South Africa or is working from UK, has contextualized knowledge of our country and is also a member of the profession. We have seen an increase in the C-suite presence, right? We have more managing directors, CEOs in the board members, right? Executive management of the companies that we have. We have also seen, even at regulatory level, the actuarial profession being represented. This has also happened over the past 10 years. We have established, for example, the secretariat. The secretariat, we have had more of a developmental process. We started it, we sort of closed, then we resumed, and I hope now we can consistently proceed forward with that. We have the Education Trust. We have actuarial support to investees. That has also increased. Now we have a definite career guidance event for every university running an actuarial science program, right? And we hope we can make it less of an event, but more of a culture and process that is embedded in what we do. Actuaries have penetrated into banking, general insurance, data science, mining, and we think that's also a sign of progress that we have had. We have also supported, for example, the government in various initiatives, for example, the mortality tables that were really sponsored by industry with the guidance of the regulator, Insurance and Pensions Commission, and the actuarial profession or the ISZ had prominent presence in assisting to ensure that the mortality tables are there, right? But we ought not to celebrate and stop, if I may say, right? We have a first copy of mortality tables. Can we have them running 5-year series so that we can continuously improve them going forward? We would like to then thank various stakeholders who have enabled us to have this progress, the sponsors. Let me also thank the government through regulators who have provided much support. The Insurance and Pensions Commission as the primary regulator for most of the clients that we work for or employers has provided a conducive and supporting environment for us to thrive as a profession, right? If you look at some of the processes that we now have at a regulatory level, right? SI 95 has a lot of actuarial presence, right? When I joined the profession, I think in GI, actuarial evaluations were neither here or there of being statutory. Now they are statutory. So it's increase in work that has happened for us. The compensation process that has happened, actuaries are really involved in that. With the index insurance being again coordinated by the regulator, the regulator has provided us support. And what you also note, across all these years, the regulator has also been a primary sponsor, right? When I was the treasurer, one of the guys that I would know that they would support us in one way or another is the regulator. So we want to thank that. And we want to extend that, for example, to the RBZ to build more collaborative processes with the RBZ, SECZIM, for example, as the regulator of capital markets, so that we can continue to create opportunities for our members and also influence growth going forward. Given that this is the 10th convention, I reflect and think that the theme is very good for us. We are strategic partners, right? It's very easy to say we are actuaries. We are maybe the most learned in a room, right? What we should see ourselves is we are partners, being able to deliver value to our clients, right? Walking the journey to solve the problems that our clients face in a sustainable manner, right? Some of the problems that we now face going forward are not necessarily traditional problems, right? So, for example, if you look at what is happening with droughts, for example, look at what has happened with floods, cyclone Idai, and so these are the emerging risks that we need now to solve. To what extent can we incorporate that in our products? You would have seen we had parametric insurance being presented. It's because we recognize that these are some of the areas that we need to solve going forward. We also have topics around data science, education, soft skills, pension reforms, ESG, that also are going to be presented. Now, it's a foregone conclusion that this event is going to be a success. Therefore, I look forward to the next 10 years of the profession, right? What do I dream of and what I think the profession will be? One will be an international member of the actuarial profession, right? Right now, we are an associate of the International Actuarial Association. What it means is that when countries vote for something, there are certain stages we don't participate, right? We have already applied to be a full member so that we can also add our unique voice to the discourse of the actuarial profession at an international level. Therefore, I'm confident that in 2034, right, when we meet again for our 20th convention, we will be an international member. I'm confident that by the next 10 years, on our 20th convention, we would have strengthened our pathways to qualification, right? To what extent does a child in Gombe or in Chimanimani dream of being an actuary, right? You will find that they want to be in medicine, they want to be an engineer, possibly an accountant. There is no problem to that, but we want to be part of the discussion. To what extent do parents dream of their children becoming actuaries, right? So we want to strengthen and build a pipeline that enables every child in Zimbabwe to dream of being an actuary. And we want to create a conducive environment. The universities, they ought to be capacitated to be able to deliver the right knowledge, right? If you are a boss at work, let me challenge you to say, if you have frustration with students that may come and you think they are undercooked, challenge yourself to say, can you be a lecturer at UZ or at NAST or at Tichareva so that they can be overcooked, right? And by the time you have them in industry, you are the happiest person, right? Let's create pathways to qualification, right? Some of the students lack support for them to be able to qualify, right? I think of the girl child, just looking at some of the friends that I have who are from the girl child side, right? You want to study for exams. You know, most of our exams with IFRS, they come around the 18th of April, right? Just after Easter, right? But there is an event in Kumusha, right? Where maybe Tete or CC is getting married. So for you to say, I want to write exams, it's difficult, right? To what extent do we even create platforms where parents know how demanding the course is for the girl child and how they can create a conducive platform for their girl child to succeed? Like, that's a pathway, and it's something that possibly we don't think about, right? But we need to create those platforms so that to a greatest extent possible, qualification doesn't become a traumatic experience, right? So someone said, when someone is in actuary, they start boasting a lot. I said, you know what? These guys, they have trauma, right? If you see a bullying people at school, they probably have trauma from home or somewhere. And when actuaries boast, they have trauma of study. So we need to make sure that it's not a traumatic experience. It's a well-supported experience that you enjoy and are able to bring back value into the profession. We want to say in the next 10 years we are able to influence and advise, right? Currently, for example, when there is a call for budget from input from the minister, one for the 2025, two for the mid-year, to what extent have we prepared our papers to influence, right? The goal which should happen for us in the next 10 years, if the Actuarial Society of Zimbabwe releases a paper, people should listen. I foresee a case where when we have released a paper, even the president is going to read it, right? How we need to create a pathway of communication with government. We need to prepare a pathway of communication with regulators. We need to create a pathway of communication with multilateral organizations, the World Bank, the IMF, all those entities, because sometimes if you can't reach a certain office, we can't be in New York, to be honest. But if we work with the World Bank Zimbabwe office, our input is going to be incorporated into what they do in New York. So that's a very important aspect. We need to support and give so much input to the economy, right? I foresee in 2034, Zimbabwe will have a yield curve. You might say there are macro issues that don't make us have a yield curve. But we have to dare and dream and say we have a yield curve. I foresee that by then, we will be having maybe 3 or 4 series of mortality tables, right? I foresee maybe we would have actively participated in creating a sustainable road accident fund, a national health scheme that enables everyone to have universal access to health, right? So as a profession, we may be big and it may be technical, right? But what does it mean to a person in any place? If it's access to education, if it's access to health, that's what they take home, right? So I foresee that we will be participating in there, right? I foresee that there will be more of us in the C-suite, right? Myself, possibly, I will be a marketing director, not an actuarial director. We will be having an Actuarial Society of Zimbabwe Act, right? Or an Actuaries Act that governs us. Currently, we have a bill that is in draft. I foresee that in 10 years, we will be having a bill that is at least 9 years old, right? So what it means is that it's either coming this year or early next year. I also foresee that in 10 years' time, we will be having our own head office, right? If there is any collateral that shows you are there and you exist, is a house, right? Look at the boom of residential building that is happening. It's because for you to establish yourself and say, I own something in Zimbabwe, I think if it's not cattle, it's a house, right? Therefore, we need to have our own head office, right? And a full executive. Right now, the council runs a lot of stuff, right? But the council should be a board providing strategic direction. Operational implementation of our activities as the Actuarial Society should be run by a CEO or a managing director, right? Just like our mature societies, like, for example, Actuarial Society of South Africa. So that's what I dream in 10 years for us, right? I foresee that as the Actuarial Society of Zimbabwe, wellness will be at the core of our activities, right? For what I've seen with some of my junior friends, when they become fellows, they gain a lot of weight. Myself, I became 120 kg at some point, right? That tells us that qualification is not really commensurate to wellness. We need to change that, create pathways in which as actuaries, we can also have more balanced lives, right? The case where actuaries are known of long hours of studying, long hours of work, and not having a balanced life, we want to ensure that we turn that, right? For example, this year, I think we're actually going to have a ASZ half marathon, right? So I hope we will all participate, right, as a start to our wellness journey. So this is how I envision the society in 10 years. However, if you look at sets in Form 1, you have an intersection of sets. So there's a set for the Actuarial Society of Zimbabwe, there's a set for you as an individual. What I envision in the next 10 years is that these sets will have a greater intersection. A set intersection in me should be as big as possible, right? And I challenge you today that what do these 10 years mean for you, right? Is it that you will be a fellow? Is it that you will be an executive? Is it that you will be a millionaire? Is it that maybe you have started your own consultants firm? Is it that possibly you have started or you are running the biggest consultants firm in Africa from Zimbabwe? Is it that maybe you've been mining on agriculture? Ask yourself, is it that maybe you'll be running a venture capital firm yourself? However, whatever that 10 years means for you, our commitment as the Actuarial Society of Zimbabwe is to walk the journey with you towards your definition of actuarial success in those 10 years. We also ask you to move the journey with us towards head office, towards more fellows, towards more qualification. As others qualify, as we have the head office, I hope you have your million. I hope you become the director you always wanted. I hope you become the MP that you have always wanted. Whatever that defines success for you, I hope you achieve it in the next 10 years. Ladies and gentlemen, this is a challenge to us all, that the journey is very promising. We have had the 10 years of success, which I would call mild, and we want to make it hot, right? Therefore, please join me as the president, right, and future presidents on this journey to actuarial success at a personal level, at a total professional level. Thank you.
Another loud round of applause for Mr. President. I think the future of the society is in good hands. And you can see some of the plans and these wishes of how this society should be in the next 10 years to come. I heard everything, and I think if ever I was more convinced that I should now become an actuary, it's when you spoke about how people gain weight. Some of us are fortunate to be those kind of people that can eat as much as they want without gaining weight. So my takeaway was, when you become an actuary, food is something that just comes to you. It's just unfortunate that some gain weight. So for some of us, I think this is the moment that I've been convinced, just like the minister, as a marketer, I should now also officially become an actuary. Thank you very much, Mr. President, for your address, and we are really looking forward to the work being put. And I hope each and every one in this room was listening and paying attention, and also taking note of how each and every one of us can contribute to that vision. Because by himself or the society alone, we cannot do it alone. Everyone has to contribute in one way or the other. And it is my hope and prayer that we'll all be able to be active and take part in ensuring that this vision is realized. Moving on, we shall now have a promotional break. Allow me to call upon the Managing Director of Claxon Actuaries, who's also our platinum sponsor. If we can please clap hands for them. Oh, the teas, this very nice ambience would not be possible if our sponsors also don't come through. So, Mr. Tafadzwa Chiduza, may you please come up front and tell us a bit more about Claxon Actuaries. Ladies and gentlemen, a loud round of applause.
Thank you so much, Prosper. Thank you so much, President, for the wonderful speech. You know, you always feel the energy that fills the room whenever you listen to such a powerful speech. We are really, really grateful for that. And coincidentally, I'm also the immediate past president. I'm bound to say I'm now less jealousy. I believe we are now in capable hands, and we really look forward to your vision going forward. So thank you so much to all of you, and thank you to the ASZ for arranging this convention. And from us, when we were thinking back at the office to then say, how do we help Actuarial Society of Zimbabwe? You then look at the big plans that are sort of spreading across, and you think and look back, and you say, we want to be part of this journey as well. we want to be able to support. So we then inquired and said, how best can we help? And we came through. And thank you so much for allowing us to be a platinum sponsor for the event. And with that, to us, I say, if you look at ESG, the S looks at sustainability. When you talk of sustainability, at the moment, people would quickly think we need to make sure that we don't have droughts, we need to make sure that we don't have a lot of the calamities around climate change and the like. But sustainability really then looks at us as people. How do we empower ourselves? How do we make sure that we are also creating an environment for the future generations? So sustainability really talks to human beings and well-being. Why am I saying this? If you look at the society, we want to be sustainable. We want to develop. We want to grow. So us as Claxon Actuaries, we are saying we are there to help shape that journey, help shape the sustainability goal of the society. There's no better way for us than to try and help financially and any other form of support that may be needed by the society. So when I talk of that as well, allow me to also say we work closely, both our employees as well as colleges and universities. We are there to help mentor, to help shape. So we've created one of our flagship programs, which we call Claxon Excellence Academy for Professionals. Why did we create that program? It was meant for us to be able to connect with the young graduates that are coming off college, just coming out of college. How do they make sure that they also get a very good footing? So the program really is about bridging the gap between the practical nuances of the working world and what we have learned at college. So we've had our first graduation, and before the graduation even came along, most of the students actually had secured employment, and we are happy and proud about that. And we think even when we come to the society, we want to be able to extend such initiatives to then say, how do we help connect? So if you've got your young brother, you may be established and they are looking for a graduate traineeship program, it's a special program which can take as many as 30 to 50 students, and then we work with them to help them also secure employment. So it's not only for us, it's also to then empower each and every entity that we also have probably in this room, to also have people who are much more, probably with one more year of experience added for you to be able to then develop them further. That's something that we want to do. Now, going forward as Claxon Actuaries, if I'm to project forward us as an organization, what is it that we also want to do? We want to go beyond our borders. We want to be able to offer our services globally, regionally. So we are already there. We are in the region. We are not only in Zimbabwe. We service markets such as Swaziland, your Botswana, your Zambia. We stretch all the way to Egypt. We go beyond the African region. We are now in the Middle East as well, where we do Saudi Arabia. We are also partly now in Europe, where we also help through other entities. And we are trying to open up opportunities for you and I, for everyone, to then say, how do we even go? You know, it's high time we say, like what the president said, if you are to look at yourself here in Zimbabwe, it's now possible for you to carry out work for an entity that is actually in the US, in Europe. So all of that we are trying to open up. So I'll round off by saying, we've also looked at a challenge where us as a market and our stakeholders, we sat and said, we need to develop platforms and systems. So as Claxon Actuaries, we are now more into systems development as well. And two of our flagship products include a system that we've developed, which we've called Onyx 17. That's for IFRS 17. It does the end-to-end computation of all your IFRS 17 requirements if you're an insurance entity, and it's a cloud-based system. That means you can just plug in the same way you log into your Gmail account, and you are able to carry out your computations. So we said, why do we have to develop that? We were seeing that entities are having to go all the way to Europe, to the UK, to be able to acquire such systems. And we challenged ourselves and say, but we have got all the talent around us. We've got all the companies around us. Why are we not developing these solutions? So we came up with that as a solution, and we extended that. We also developed one for IFRS 9, that is for credit risk modeling. That now looks at banks and microfinance institutions at large, where we then do credit risk modeling as well. So there is a system that's there, and we are inviting all of you, even if you are a practitioner as an actuary, We have got that automation done for you. All you need is to then plug in your data, and all you have are your results. You analyze more of your results, and you are able to engage your clients. And the clients directly, we can engage with them. So that's our story as Claxon Actuaries, and we believe we want to be part of your journey. Also, we want you to be part of our journey as well. And we congratulate Actuarial Society of Zimbabwe once again for having this successful event. We thank you so much to the organizers, and thank you for allowing us the opportunity to speak with you and connect. Thank you so much.
Thank you very much for all the work that you continue to do and for supporting the Actuarial Society of Zimbabwe. Moving on with our program, we shall now have one of the speakers who's going to come through. I was very impressed by her profile, so I'm going to read it to you as is. She is from General Insurance, and her name is Sheila Kirika. Sheila is a fellow of the Institute and Faculty of Actuaries and currently works at Old Mutual Africa Regions as Actuarial Manager, General Insurance, in charge of 9 countries, including Zimbabwe. Did you guys get that? I think Mr. President was talking about the girl child that is thriving as actuaries. I'm going to read that again. Sheila is a fellow of the Institute and Faculty of Actuaries and currently works at Old Mutual Africa Regions as Actuarial Manager, General Insurance, in charge of 9 countries, including Zimbabwe. She is passionate about seeing insurance being used as a vehicle to improve the dignity of lives. At Old Mutual Africa Regions, she is the corporate actuary supporting group reporting on reserving solvency and earnings at risk for all countries. She is also the corporate actuary for Namibia and Botswana, in charge of board, group and management reporting on solvency, reserving risk and reinsurance. She has won 2 awards for IFRS 17 implementation, the Africa Regions Awards for Radical Leadership, as well as the CFO Recognition Award. Her main specialization is general and medical insurance. She has vast experience in consultancy, in consultancy industry, as well as education, having successfully led high functional teams. She has served in numerous panels, including the Health Financing Expert Panel in Kenya, which was responsible for the work behind the NHIF Amendment Act 2022. Sheila is a thought leader, having published 3 articles, and is an expert storyteller. She is especially gifted at telling the story behind numbers. She has been invited to speak in conferences in Zanzibar, Arusha, Nairobi, Kigali, as well as numerous online webinars. She is also an influencer on LinkedIn and regularly posts content on hashtag winning at work, hashtag actuary life, and hashtag diaspora life. Ladies and gentlemen, may you please help me welcome to the stage Sheila Kirika. She's not yet here. We keep clapping.
Good morning. Is it still morning or afternoon? Okay, good morning. It's very nice to be in Harare. The last time I was in Harare, I was 12 years old. So it's really nice to be back and to be with all of you. All right, there are the slides. So today I'm going to be speaking about earnings at risk. So as a background, we all do solvency calculations, right? So when we look at solvency, we are looking at the risk of extreme events happening. So what would happen if we had an earthquake? What would happen if maybe there was an extreme event like COVID, for example? Those are the kind of extreme events that we're looking at when we look at solvency. But what I'm going to be talking to you about today is earnings at risk. And earnings at risk is a way of measuring risk that is similar to solvency, but we're looking at events that are not as extreme as solvency. So for example, having a negative claims experience that was worse than you expected, those are the kind of risks that we're going to be talking about. Okay. So I have been well introduced. I'm a fellow of the Institute and Faculty of Actuaries, and I'll ask if I can move. I'm very short, so I can't see the screen. Okay, that's much better. Okay, so I'm a fellow of IFOA, the Institute and Faculty of Actuaries, and I work at Old Mutual Africa regions. So that's who I am. And what are Kenyans known for generally? Well, right now, I know we are known for protesting on the streets. But before last week, what were we known for mostly? Right, marathons, exactly. So that's what Kenyans are known for. But for me, I don't run. Even if I was paid to run, I don't run. So the half marathon that you're going to have this year, if I was in Zimbabwe, I would be cheering. I would be at the finish line cheering everybody, but I don't run. And also I'm short. Many Kenyans are tall, but I'm short. But I'm still very much 100% Kenyan. Okay, so that's who I am. Proud to be Kenyan. I'm a Kenyan and I live in Rwanda. But I'm Pan-African. I work with many countries and I love traveling as well. So, as I said, today I'm going to introduce you to a new way of measuring risk that is similar to solvency, but not quite the same. So we'll look at understanding what earnings at risk is, and then we look at how we can use it in our companies. I'll take you through a practical example, and I'll request when we're going through the practical example that we interact a lot. I can see every table has a mic, which is great, and then we'll finish with questions. Okay, so what is earnings at risk? Earnings at risk is a measure of downside risk, meaning it's a measure of how much could your earnings go low or not as expected because of a 1 in 10 event. So basically we're looking at events that are not as extreme as the ones for solvency. So it's a variation on earnings that could occur once in a 10-year period. If I was presenting to non-actuaries, I would say that to simplify it, it's basically a 10% chance that your IFRS profits could drop by the EAR amount. So just to make it very clear, if, say, we were planning IFRS profits over the next 12 months, and we were saying that we plan in 2025 that we are projecting that we're going to make 80 million USD of profit, yeah? And then the actuary came and told you that your earnings at risk is 10 million. What that would mean is that there's a 10% chance that your actual profits would not be 80, but 80 minus 10, which is 70, right? So say differently, I would go to the business and say, okay, it's very good that you're projecting profits of 80 million. However, being an actuary, your strategic partner, your business partner, I think that there's a likelihood, a 10% likelihood that your profits will actually be 70. And then I would go on to explain why I think that your profits are going to be 70 instead of 80. So that's what earnings at risk is. It's a way of communicating to the business how risky their profits are. So what kind of risks do we measure under earnings at risk? The first one is insurance risk, which is the uncertainty around the timing and amounts of claims. There's also credit risk, so the risk arising from default from our counterparties. So for example, the risk of our reinsurers defaulting or our premium debtors. And then there's also the risk in adverse movements in asset values due to market fluctuations. And then operational risk is the risk arising out of failure in processes and systems. So those are the 4 main categories of risks that we're looking at. And to note, we are not looking at extreme events. So for example, in my country, Kenya, we recently had floods. Those would be the kind of events that we're talking about, 1 in 10 events. Not catastrophic, but could easily affect your profits. All right, So earnings at risk is a coherent risk measure. And there are 4 ways of telling whether a risk measure is coherent or not. The first one is sub-additivity. What sub-additivity means is that the risk of A and B combined is less than the risk of A plus the risk of B. So for example, let's say I write both fire and motor policies, right? Remember, I'm in general insurance, so my examples will all be talking about general insurance. So let's say I write fire insurance and motor insurance, right? If I write both fire and motor, there's a diversification benefit I have by writing the both of them. So that is accounted for under earnings at risk. And that's what sub-additivity means. It allows for a diversification benefit when you're writing more than one risk. So that's the first thing. And then the second thing is monotonicity. Monotonicity means that the risk of A increases with an increase in the exposure of A. So, for example, simply put, if I was to write more fire policies, then my earnings at risk would increase. So that is how earnings at risk also works. The more you expose yourself to a certain line of business, the more that risk increases. So for example, if motor insurance is loss-making, I think it's loss-making for many general insurers in Zimbabwe. What you're saying with earnings at risk is if motor insurance is risky, the more you write motor insurance, the more your risk increases. Thirdly, positive homogeneity. Positive homogeneity means that the risk of K times A, where K is a constant, is equals to K times the risk of A for any constant K. The best example of this would be to talk about if you had quota share insurance. If you increase your retention under quota share insurance, then your risk would also increase in the same proportion. And then lastly, we have translation invariance, where basically the risk of A plus K, where K is a constant, is equals to the risk of A plus K. And what we mean here is that, and today when I was looking at the slides, I realized this is a bad example for Africa. The example I give here is that if you added government bonds to your portfolio, your risk wouldn't increase because government bonds are supposed to be risk-free. But I'll throw the question to you. Can we really say government bonds are risk-free? If we look at Africa's situation right now, not really. So ignore that example. I think maybe if you're in Europe or a government that is stable. No, but right now, even in Europe, the governments are unstable. So I don't think government bonds are risk-free anymore. But if they were, then that would be a good example. Basically, if you add a constant, then your risk increases by the same constant. So basically, we are dealing with a coherent risk measure. And some of the benefits of using earnings at risk is that it meets the qualities of a coherent risk measure, as I've just told you. It's easy to understand. So unlike solvency, where we are talking about extreme events, it's much closer to home. All we are saying is you've projected profits of 80 million, for example, and I'm telling you, those profits are at risk. You're more likely to have 70 million of profit. So it's much easier to understand. And then it deals with the likelihood and magnitude of different adverse scenarios. So we're looking at credit risk, market risk, insurance risk, not just one type of risk. And then it also focuses on the short term. So for solvency, many managers and excos in insurance companies struggle to understand solvency because it seems so far away. In fact, most professionals in insurance don't understand why solvency is important, simply because those events seem so far away. Like, what's the likelihood of an earthquake happening, for example? But then earnings at risk is very focused on the short term. And so it brings out very realistic conversations. So the kind of conversations I have on earnings at risk with the different countries I work with, sometimes the risks actually pan out. So for example, there's one of the countries in East Africa where we did the earnings at risk and we realized that their biggest risk is actually growth risk. Last year, they didn't meet their profit targets, and it was actually mainly because they didn't hit their top line targets. So what we're talking about is a very real and practical measure, and I've seen me as an actuary becoming like a prophet, because a lot of the time what I warn about in earnings at risk happens. Last year, the biggest risk for our Kenya business was insurance risk, and that has actually ended up coming true, because now we've had the floods, we've also had a lot of upper respiratory tract diseases happening in Kenya, and so actually insurance risk is their biggest risk this year. So it's a very practical measure that focuses on the short term, and it's very real. And I can tell you, having done this for a number of years, a lot of the time when we give an earnings at risk scenario, it actually does end up happening. So as I said, it's based on a limited time horizon, so we're just looking at the next 1 year, just 12 months. We're not looking at events which are like 1 in 100. So that's actually a disadvantage, because earnings at risk can only tell you what your risk is in terms of your profits for the next 1 year. So it has a limited time horizon. And then the second disadvantage is that it can promote risk-seeking behavior. So for example, you might do your earnings at risk calculations, and if your earnings at risk is low, then you might be like, okay, fine, then that means I can invest in riskier assets, for example. I can take on loss-making products. But it's very important to analyze earnings at risk alongside other risk measures. And in the example we'll be doing, I'll show you how to do that. It also assumes that we have a static mix of risks, that those risks are not going to change in the next 12 months, which is not realistic. So a lot of the time when I engage with CFOs on earnings at risk, I would be presenting the earnings at risk calculations like 4 months into the year. But then they'll tell me, Sheila, you're giving me this number as my earnings at risk, but there's many things that I've done in these 4 months to actually reduce my risk exposure. I've hired a claims analyst who's going to help us with predictive claims analytics. Why haven't you accounted for that? So that is a weakness of earnings at risk. It assumes that the mix of risks and the nature of the risks will not change over the planning period. And then it's also very sensitive to the assumptions that you make. So that's another disadvantage of earnings at risk. And what I would say is, in order to counter the disadvantages, you should use earnings at risk in conjunction with other measures of risk. So how do we use earnings at risk? Again, just in line with the theme, earnings at risk helps us to become a strategic business partner. So it's a very useful tool in risk management because it's forward-looking. So this is the one way where, as actuaries, we can be involved in the business planning process for our companies. I don't know, maybe by a show of hands, how many of you are involved by your companies when they're doing budgeting for the next 1 year? Okay, very few. So normally when our businesses are doing business planning or budgeting, they don't really think of the actuaries, right? But this is actually a way that we can add value in the business planning process by basically showing management the risks that their business plans are exposed to. So these results, apart from just using them to show the risk of making profit for one company, you can use earnings at risk to evaluate different companies. So for example, if an investor was making a decision on, let's say 3 different companies and which companies to invest in, earnings at risk can help. They can be used to evaluate different portfolios, products, and even different customer segments that venture into the short term. And the calculations are a great conversation starter for risk appetite conversations. So I can tell you, we've been presenting earnings at risk in all mutual Africa regions for like around 3 years now. And now the chief risk officer and her team are much more interested in in defining the risk appetite for each country. So seeing the results that we've been presenting for earnings at risk has made our risk team more aware that they need to accurately define what the risk appetite is for each particular country. So this is a way where, as actuaries, we can actually show the business, guys, we are doing all this business planning and budgeting, but we don't even know what our risk appetite is. So for example, if I want to buy more equities are quite lucrative in Zimbabwe, right? So for example, if I want to invest more in equities, as the CFO, what guides me in that decision? Earnings at risk is a very good guidance in terms of that decision. For example, should I invest more in equities or not? So it's a way where earnings at risk helps us as actuaries to add to the conversation on risk appetite. Not even to add, to prompt the discussion on risk appetite. So for example, if I have my earnings at risk calculations, I would actually challenge the CEO and say, okay, fine, you want to invest more in equities because equities have been performing well, but this is what the earnings at risk is saying. Have you considered this? So how does earnings at risk inform our risk strategy? It gives information about the relationship between risks. And then when we look at the ratio of our earnings at risk as a proportion of planned earnings, it gives us very useful information for business planning. And the most important, it can actually point us towards mitigating actions. So for example, the business that I talked about, the country where we actually had earnings at risk results and we showed them that growth risk is their biggest risk, what they should have done was to ensure that they had actions around growing the business. That is where they should have concentrated most of their energies. So earnings at risk can point you towards mitigating actions that you need to take in the short term. All right, so now we're going to have an example of an earnings at risk calculation, and I want us to be, now I want you to also talk to me. We're going to do this example together, just to help you understand more about earnings at risk. So I took an example of 3 Kenyan insurance companies. Let's call them A, B, and C. And I considered market risk, credit risk, insurance risk, and operational risk. So similarly to solvency, what we have is different shocks, right? So we have different shocks for the different risks. So for example, equity risk, of course, would have the highest shock of 20%. Cash risk has a very low shock of 1%, and so on. So these are the assumptions that I had. I also had to make assumptions on planned NEP growth and planned GEP growth, and also the planned growth on profits. All right. So here we have the results for earnings at risk for company A, company B, company C. So if I was to look at company A, the earnings at risk, that line there that says total risk, that is, so these numbers are in millions. So the total risk, earnings at risk for company A is 2 billion, right? That is the earnings at risk. But they are planning profits of 1 billion. What this means is that they are planning profits of 1 billion, but they are at risk of not just losing that 1 billion of profits, but they're actually at the risk of making a loss. So in other words, what we're saying is they are planning their earnings of 1 billion. So if the total earnings at risk is 2 billion, there's a 1 in 10 chance that their profits will be 1 billion minus 2 billion, which is minus 1. Right? So this looks to be quite a risky company. As you can see, the earnings at risk as a percentage of planned earnings is 194%, which is high. And if you look at their earnings at risk, what is their highest number when it comes to earnings at risk? If you look at those numbers there, you have equity risk, property risk, cash risk. Anyone can just tell me which is the highest risk that this company is facing. So you have equity risk 598, property risk 748, cash risk 135. Which one is the highest?
Premium risk?
Premium risk, exactly, premium risk. So they have a very high growth risk. They also have quite a high market risk. So they have a high property risk and high equity risk. And remember, for a general insurance company, this is not necessarily a good thing because we are supposed to have liquid investments because we are constantly paying claims. So they have very high premium risk. So if they don't grow as planned, their profits are at risk. And they also have high equity risk and property risk. So that is company A. Let's now go to company B. Company B is planning profits, let's say in 2025. So company B is planning profits of 9.2 billion, 9.3 billion in 2025. But their earnings at risk is 5.3 billion. So that means that there's a 1 in 10 chance that their profits could be 9.3 minus 5.3, which is 4 billion. So basically, I would be telling the CEO of this company, you're planning 9.3 billion profit, but there's a 10% chance that those profits could actually be 4 billion instead. And we can see that the highest risk for this company is their equity risk, right? So it seems that it seems that it's a company that makes very good profits, right? But it's driven a lot by the equities they invest in. Probably they invest in really good equities, but their equity risk is quite high. And then the insurance risk is then comes next. So what I would say about company B is that they're a profitable company, and they have different risks, but the biggest one seems to be their equity risk. So what this can tell me is that this company probably makes really good profits because of equities, but that also makes them more risky. And then we have company C. So company C has they're planning profit in 2025 of 1 billion, but their total earnings at risk is 5 billion. So someone answer for me. There's a 1 in 10 chance that their profits could be. Yes, I had some answers. There's a 1 in 10 chance that their profits could be -4. Exactly. 1 minus 5. So I would be telling the CFO, you're planning profits of 1 billion, but there's a 10% chance that your profits could actually be -4. And where are their biggest risks coming from? There's premium risk, just like for the other 3, but there's also significant market risk. So equity risk, property risk, and cash risk. But also, unlike the others, there's also a significant investment credit risk as well. Investment credit risk comes from mostly cash investments, right? Company B also had a high investment credit risk, but if you look at it in the context of the fact that it makes 9.3 billion, the investment credit risk for company C is much larger. So in a summary, we have company A, B, and C. Company A, we've seen that they are quite a risky company. Most of their risk is premium risk. Then we have company B that is not as risky as company A, and a lot of their risk comes from equities. And then we have company C that is the riskiest of them all, and most of their risk is actually in market risk. So if we look at the proportions of risk, for company A, 34% of their risk is in market risk, and then 41% of their risk is in insurance risk. So what I would say for company A is, the only problem is that for market risk, we would expect the proportion of earnings at risk to be between 5 and 15%, but they have 34%. So their proportion of market risk is quite high. For company B, what we notice is that a lot of their risk is in market risk. 40% of their earnings at risk is in market risk. That's a lot, because this is supposed to be an insurance company and not an investments company. So the question begs, for company B, are they interested in insurance or investments? And then for company C, same thing with company B. They are heavily exposed to market risk, and so that is another problem. So that is company A, B, and C. And now I will be throwing the question to you. So here I'll actually be asking you your thoughts on which company you would invest in between company A, B, and C. So to summarize what I've just analyzed here, company A is the one there on the left. Company A has quite a low return on net asset value, right? 2%. And it's quite risky. So the earnings at risk as a percentage of planned earnings is about 200%. So low return on net asset value and quite risky. And then we have company B. Company B is the biggest circle over there. So for company B, very high return on net asset value, 16%, and the earnings at risk is quite low. So it's not very risky in comparison to its net asset value, but remember, it's heavily exposed to equity risk. And then we have company C, that's the one in the middle. Company C has an average return on net asset value, 8%, but it is the riskiest out of the 3. And it's also heavily exposed to market risk. So I would want to hear 2 different answers. Which company would you invest in? If you are an investor and you're given these 3 companies, which company would you invest in? Actually, we can have these 2 parts of the room, so we can have one answer from this side and one answer from the other side. So would you invest in company B because it has a high return on net asset value? Would you rather company A, which has a moderate amount of risk? And remember, company A wasn't as heavily invested in equities as the other two. Would you invest in company C, which is the riskiest, but it has a better return on net asset value than company A? Let's have an answer from this side. Yes.
I think B. I would invest in B, company B.
Why?
High return on net asset value. Because it has got high return on asset value.
Okay. All right. Thank you for that. So you don't care that they're heavily invested in market risk for you, as long as they have a high return on net asset value. Perfect. On this side, remember, there's no right or wrong answer. So it's a discussion. So this side of the room, which company would you invest in? And why? Anyone? Yes.
I think there are different things that we need to consider. It also depends on the investor. The risk aversion, whether they are risk averse or risk seeking. But personally, I would go for company B.
Okay, why?
For the reasons that have already been given, there's a higher chance that they make profits and I get my dividends from the profits that they make. So I know that there's a chance that I will receive a dividend. Maybe compared to company A and C, I would rather go for B.
You'd rather go for B. Okay. So the consensus in the room seems to be company B. It has quite a high net asset value and it is less risky. But I could throw the question back to you. What if the equity market performs really poorly in 1 year? Your profits would then be at risk, right? So you could have someone who could argue that company A is better because they are not as heavily invested in equities. As much as their earnings at risk is quite high, the biggest thing there was premium growth, which is easier to control. You would just increase marketing efforts and so on. So you could argue between the three companies based on different reasons. So I will give us some more information before we make our final decision. So just to summarize the key risks that each company are exposed to, market risk is the key risk for company B and C, accounting for 40% of the total risk. So what this means is that if there's a year where equities are doing badly, or if the property bubble bursts, for example, so if you see what is happening in China right now, if you had heavily invested in property, you would not be smiling today, right? So we have company B and C who are heavily invested in equities and properties. But we know that for equities and properties, if things go wrong, then you could lose a lot. Then we have the credit and counterparty risk. So it seems all three companies are okay in terms of premium debtors. But if we look at company A has actually quite a high percentage of reinsurance recoverables as a proportion of premiums. So that's something to note. And then insurance risk is a key risk for all three. So I want to ask my two friends who gave me answers. We now have additional information about company B. Their loss ratio is 97%, right? And their net loss ratio, the gross loss ratio is 97%, and their net loss ratio is 105%. The loss ratios of company A are actually lower, and then company C is in the middle. Would this make you change your answer? Looking at the loss ratios. So
Yeah, I think considering the loss ratios, company A seems to be better than B and C. 69 for company A, 97 for company B, and 71 for company C, loss ratio.
Okay.
So I may consider.
You'd change your
consider-
answer. Okay.
Yeah, because I now have more information.
You know?
Now I have more information.
You have
to
more
decide, yeah.
information. Okay. What about you? Would you change your answer?
I'm sort of not sure. I would also need more information. There is,
You would need more information.
yeah, this is information which is coming in bits and pieces. So
Okay.
I have to get all the information, then I make my decision.
Yes,
Yeah.
okay. No, but what you said is actually a very good point, and it's exactly what I was trying to prove, that earnings and risk in and of itself you cannot make a decision based only on earnings at risk. You have to evaluate earnings at risk alongside other measures, right? Which is one of the things I gave as a disadvantage of earnings at risk. It can make you risk seeking. So for example, all of us were going for company B until we saw, this guy's only making money because of equities, but the core insurance business is not performing well, Another thing is also for company A, we said, okay, fine, company A is not taking on a lot of market risk, but from what we can see here, they have quite a high exposure to their reinsurers. What if they've invested in bogus reinsurers and then they default, So you're very right in what you said, that I was not being very fair in asking you to make a decision because earnings at risk doesn't give you all the information. So in a summary, earnings at risk needs other measures for you to be able to make a good decision. So some other questions for you to just think about. We saw that company B was profitable and it had a very high return on net asset value, and that's why we were all choosing it. But it has high claims loss ratios. What do you think could be happening with company B? Somebody else. Why would you have a good return on net asset value, but you're making losses? How does that happen in an insurance company? What could be happening there? I'm very sure we have examples of companies in the industry that are in this situation. Companies that are very profitable, but you look at their loss ratios and their loss ratios are bad.
So I think what I've seen, if you look at the profit and loss, so either their profitability is driven by insurance, the core business, or they make a lot of money from investment, which I suspect is the case here. That
Exactly.
They're doing more of investments than the core insurance business.
Exactly.
Which obviously, as a regulator, as I'm sitting, I have to make a decision whether I keep you with the license, or
Yes.
I ask you to return my license and then get an appropriate license for investment.
Exactly. That's a very good point. Yeah, that's a very good point. They seem to be more in investments than insurance. That's a very good point. If you are the regulator, you would be asking serious questions. Then for company A, we saw that company A, let me just go back to that slide. Company A had quite a low credit risk, right? 14%, compared to 24% and 23% in company B and company C. So you have company A having a low credit risk, but in the previous slide we saw that their reinsurance recoverables are actually higher than expected. So what could be happening here? So just to take you back, we saw that their insurance recoverables as a percentage of insurance premiums are high, but at the same time, their investment credit risk and counterparty default risk equates to 14%. So, okay, I'll give you the answer to this one. The answer here is that if you look at these other companies, the investment credit risk is quite high. Investment credit risk is because of cash. But then if you look at counterparty default risk, you'll notice that company A has the highest. So company C has 2%, B 6%, and A 8%. So in other words, with earnings at risk, you have to look at the nuances. If someone was just to tell you company A has the lowest proportion of credit risk, that is deceiving, because you have to look at which kind of credit risk. There's investment credit risk because of cash and bank balances, and then there's counterparty default risk. The other companies have high exposure to investment credit risk, which is acceptable, but company A has a high exposure to their counterparties, and we've seen that it is reinsurers. So I think now you're starting to understand what I'm saying, that earnings at risk numbers don't give you the full answer. You need to dig much deeper. But they are a good indicator of the kind of risks that a company is exposed to. So I think I don't have to ask this again. We all changed our answers to company A. Does anyone have a different opinion in terms of which company we should invest in? A, B, C? Are we still all on company A? So company A is investing in the right things. They are investing in their core business. Their loss ratios are low. They don't have a lot of equity risk, but they have high exposure to reinsurance counterparties. Is that the company that we are all going for? Or does anyone have a different opinion? None of you still like company B? Yes.
Sorry, assuming that the numbers have been recorded using historic cost accounting, it's possible that B is more profitable if we inflation adjust the numbers.
I love this. Okay, I've never gotten such an answer, but that's true. That is true. So then in that case, you might still go for company B. Okay? So I think I have made my point very clearly that earnings at risk is a very good tool and gives you good information, but you have to look at other risk measures as well before making a decision. So in conclusion, earnings at risk is very useful for risk management because it's forward-looking. We can use the results to evaluate different companies, portfolios, products, and customer segments. And they are a great conversation starter for risk appetite conversations. And the earnings at risk models are not difficult to build. All you need to do is to get to model. For example, if you're modeling equity risk, you would model your share prices and then get a distribution from your share prices and then determine what is the 1 in 10. Basically looking at the 90% confidence level. Very similar to what we've been doing with IFRS 17. So with your reserve risk, you would look at your reserves and then the difference between the 90% confidence level and the 50% confidence level, that would be your reserve risk. So it's actually not that difficult to calculate the shocks for earnings at risk. And I would encourage you, if you're interested, you can talk to me on the side to talk more about it, because I think that we can be strategic business partners in the business planning processes as well. So that is it. That's what I had for you on earnings at risk, and I can now invite questions. Oh yeah, before we forget, follow me on LinkedIn. I'm an influencer. So I had 2 different people, our president saying that he would be a marketing actuary. I think I can be an influencer actuary. So follow me. I regularly post content on LinkedIn. So yes, now I can invite questions. MC, do I have time for questions? Okay.
All right, thank you very much, Sheila. I will now invite questions. Yes.
Thanks, Sheila. My question is on your columns with company A, B, and C. One of the considerations I was also thinking about is proportions. Also, you need to consider it's a proportion of what amount. So 10% of 1,000 and 10% of 1,000,000. You're talking 2 different things. So am I correct in saying that's one of the considerations as well?
Excellent, that's very good. So for example, we saw company B had 40% percentage of equity risk as a percentage of the total risk, and then company C also had 40%. But if you look at it in context of the profit, the percentage of earnings at risk of the profits of company B is much lower. So yes, absolutely, that is also something else you need to look at, the proportions in light of the total amounts. So say differently, company C could easily have made losses because of equities, but company B, as much as it was heavily exposed to equities, because it has such a large profit, 9 billion, the most it could lose is like half of those profits. So you'd rather expose yourself to a company that can lose half of 10 billion as opposed to one that could now become loss-making just like that. Yeah.
We have a question over there.
I didn't get, maybe you can speak closer to the mic.
So my question is, can you also say, can we also use the same model to say someone wants 80, and then we are taking it positively, and then say it can be 100?
Yes, absolutely. So that means that you'd be looking at the opposite side of your distribution.
Yes.
So instead of looking at downside risk, you'd be looking at upside risk. Yes, absolutely. That's actually very interesting. I should try that. Yeah. But I think as actuaries, we always care about downside risk.
Okay, my question is, how would you come up with those initial shocks that you then apply to the various asset classes? I think that process is quite important for us to have more meaningful results.
Right. So the easiest example I would give is, for example, with reserve risk. So with reserve risk, I believe many of us have done IFRS 17 modeling. So with reserve risk, you would take your 90% confidence level of your reserves instead of your 50%, right? So you would then take the same concept as how we do a risk adjustment. So you would take what your reserves are at the 90% confidence level, less what they are at the 50% confidence level. Then now you'd express that amount as a percentage of your best estimate. So that percentage would be your shock in that case. So it's exactly the same way as we would do solvency as well. You create a distribution, and then now the difference between your 90th and your 50th percentile, that would be the amount that would give you the risk adjustment. Then now you express it as a percentage to be, and that would now be the shock. So of course, the more years of data that you have for you to build that distribution, the better.
Okay, I see questions. Yes, sir.
All right, thanks, Sheila. I've got maybe two questions. The first one is on the comment that you made about the timing of these calculations. You said 4 months into the year. So how valuable are these results to the people? And can you then monitor after you have been advised of the actions that the senior management has taken to make sure that the profits are not exposed to so much risk? Do you then recalculate during the course of the remaining year? Do you need to revisit the calculations and provide feedback to management? Then you have run your calculations. Do you also provide recommendations on de-risking the balance sheet? I wanted to hear a bit more about what you then make as recommendations to senior management running an organization. Then my last question obviously is on the projections of the earnings at risk. You know, with OSA, you can project the solvency ratios. Can you do the same with earnings at risk, like projecting it into the next 5 years, just to get a sense of how it can progress in the next 5 years? Thanks.
Okay. Thanks. Those are very good questions. So on your first question was on the timing, yes. Interestingly, I recently presented our earnings at risk for the 9 countries, and that is the challenge that I was given by the management. That Sheila, you can't just be doing this only once in a year. You need to be adjusting it. So if you're giving us these results in June, you need to adjust them for the management actions that we've been taking in the first 6 months. So yes, definitely from what I've seen in engaging with management, it would be ideal to update the calculations at least every 6 months. So for example, if let's say the company has hired additional claim staff who are now doing predictive analytics, then you can reduce your shock under reserve risk, for example. So yes, definitely, that's possible. And then the second question I'll answer is your last one, where you talked about projecting earnings at risk for the next 3 years. You can, although if you did that, you'd be assuming that nothing is changing in the company for the next 3 years, which might be unrealistic. So yes, you can project earnings at risk for the next 3 years, but it would be with a caveat that this assumes that our mix of risks doesn't change, that there's no significant changes in the business that would happen over the next 3 years. Because remember, earnings at risk is a risk measure we use for a very short time horizon. And then the second question you asked was on? Yes, recommendations. So yes, absolutely. So the most recent time when I presented this, I had like 3 key messages for the countries. And for example, one of my key messages was on credit risk. So I observed that across the 9 countries, we were taking on more credit risk than our risk appetite allows for. And this looked different for different countries. There are some countries that were taking on too much risk with premium debtors. There was one country that was taking on too much risk in terms of reinsurance counterparties. So then my recommendation there was to reduce the proportion of premium debtors and also reinsurance debtors. And for some of the countries, like now, for example, with reinsurance debtors, it would mean doing reconciliations with the reinsurers. Because what I've found in general insurance is that sometimes we tend to have very high balances of reinsurance receivables, but we haven't reconciled them. And so when we go to recover from the reinsurer, then we end up recovering much less than we expected. So yes, they have, every year when I do this, I make very clear recommendations on what we need to do going forward.
Hi, Sheila. Given that earnings at risk is a coherent risk measure, and given the principle of sub-additivity, I just wanted to inquire on how you're aggregating the risks to come up with the total earnings at risk for the various risks, and also in terms of a group company, which methods are you using in terms of aggregation?
Okay, so to get the aggregate earnings at risk, we allow for a diversification benefit. So we have a correlation matrix that allows for diversification between different risks. So that is how we actually allow for diversification. If you were to just, like if you went to the slide where I had different amounts, you would find that the earnings at risk is not just the addition of all of them. We apply a correlation matrix because there are correlations between the different risks. So that's how we do it, using a correlation matrix. I don't think I got the second. Was it the same? It was more or less the same thing. Yes. So you do have to allow for correlations. And then for us, because we are in 9 different countries, there's also correlations among the different countries. So a very good example is, this is a bit of a story, but it took 24 hours for me to get here from Kigali to Harare. And that was because internet connectivity was switched off by the Kenya government when we had our protests. So internet connectivity in Kenya affects internet connectivity in the region. So what that meant was that my flight from Kigali to Nairobi got delayed because of the Rwandan internet issue. And my flight from Nairobi to Harare also got delayed because of the internet issue. So you see, if someone was calculating my probability of delay, those 2 flights were connected. The risk of being delayed in the Kigali flight and the Nairobi flight were connected, right? So in Africa regions, for example, in Old Mutual, there's also diversification when we look at risks when we look at the earnings at risk in the different countries. So for example, East Africa I've found is very correlated. What happens in one country will also happen to the other countries. But then again, it would also mean you have economies of scale to deal with the problem. So for another good example is this year in East Africa, where we do our medical business, Kenya, Uganda, Rwanda, there was an outbreak of upper respiratory tract infections. But because the three countries were able to talk and strategize, we were able to come out with common measures which affected all three countries. So yes, there's diversification among the different risks, and if you're doing it for different companies or different regions, there's also diversification across the regions or the countries. Yeah.
Is there anyone with a very burning question?
It's a simple one as well. What happens when one of the risks, say market risk, like in our case, when it gets extreme, is the model flexible enough to attend to that?
Yes, actually, whenever I do earnings at risk, Zimbabwe is always my biggest issue. It's the one where I struggle. The one thing I can say is that we normally use USD, right? Because we have to remove the effects of currency risk. And then also, we haven't been able to model equity risk explicitly. So yes, I don't have a straight answer for you, except to say that earnings at risk is easier to use where you have data, adequate data and stable market conditions that would allow you to do that. But in conditions which are not necessarily stable and predictable, it is a challenge, and we definitely are, exploring different ways that we can adjust for that in our model. So I don't have a yes or no answer for you. My answer is more of it is a challenge when you have unpredictable market conditions, and it's something that we are now looking into. At least the one thing that we decided is that we're going to use USD. So yes. Not a very great answer, but it's a work in progress. That's what I can say for Zim. Yeah.
Ladies and gentlemen, help me thank Sheila for the wonderful presentation.
Thank you.
For some of us that are quite fast, we had already sent you a connection on LinkedIn. For those that do not know, LinkedIn has got what it calls top voice. And it's something that is very prestigious for you to be recognized by LinkedIn as a top voice in whatever field you're in. So she is actually a LinkedIn top voice when it comes to these matters. So you want to be able to connect with her so that you tap into that knowledge as much as you can. I see so many aspiring actuaries amongst us. It would be good to connect with experts in your fields like her so that you can learn as much as you can and also share that knowledge with people that will also follow you. Yeah, I'm wearing heels, but I'm sure like her, you can see that I'm also vertically challenged. All right, so we have a gift for you, just to say thank you for spending time with us and for sharing those gold nuggets with us. We really appreciate. So, ladies and gentlemen, if we can please clap hands for Sheila as she receives the appreciation gift. I hope we are all taking note of all these conversations. If you are on social media, our guest of honor spoke about having a voice. And one of the things, your starting point could also be sharing what you are learning from this conference on social media. And you tag Actuarial Society of Zimbabwe, hashtag 10 years convention, hashtag ACZ, hashtag Actual, whatever it is, make noise, at least in the next 2 days, that we are part of this event and we're proud of it and we're learning. So don't be shy to share your key giveaways from the speakers that would have come up front. So we want to see those tags on LinkedIn, on Facebook, on Twitter. go tweeting and share something that you might have learned. It's actually my challenge for all of you this lunchtime. I will read out some of the things that you would have written, or single out certain people and ask if they have shared with their audience anything they have learned. We are now going for lunch. Just outside the exit point, you're going to see a box, an Old Mutual box. So kindly put in your business card in that box. You will stand a chance to win something. All right, so if you don't have your business card, make sure you write, look at people loving things. Now, all of a sudden, people are talking. When I was trying to crack jokes here, you people were not laughing. So if you don't have your business card, not to worry. Just look for a piece of paper, write down your details. I think what's key is your name, surname, organization, email, and phone number. Email, phone number, name, and the organization you come from. And then you drop that in the Old Mutual box, which is just by the entrance there. So thank you, ladies and gentlemen. We may now break for lunch, and we will convene in exactly 1 hour. Enjoy your lunch. Thank you. Good afternoon, ladies and gentlemen. Good afternoon, ladies and gentlemen. That's more like it. Welcome back to our second session. I hope that we all enjoyed our lunch and you've managed to speak to someone we didn't know. We are now moving on to our panel discussion, which is going to be focusing on pension reforms and retirement security in Zimbabwe. This discussion is going to be moderated by Chiduza Kondenga. Chiduza Kondenga has 10 years work experience, 5 of which are in the financial services sector. She is currently the general manager of African Actuarial Consultants, a position she has held since February 2024. She joined AAC in 2023 as a senior actuarial consultant after leaving IPEC, where she served as an actuarial analyst from 2020 to 2021, before being promoted to technical manager in 2021. She has also worked in wider fields, holding positions of internal auditor and accountant. She holds a BCom honors in actuarial science and is a qualified member of Association of Chartered Certified Accountants, a certified internal auditor, and working towards attaining fellowship with the Institute and Faculty of Actuaries. Chiduza is passionate about problem solving through taking on new challenges as seen by her career progression. She's also passionate about learning new skills and helping other individuals realize their potential. A true future actuary at heart, Chiduza is committed to the vision of uplifting the Zimbabwean financial services sector through the profession. A hardworking professional, Chiduza is delighted to be part of the Actuarial Society of Zimbabwe convention. Ladies and gentlemen, let's put our hands together for our moderator. She is still coming up. Hi, Chiduza. How are you? All right. Joining Chiduza up front as a panelist is Rutendo Magorimbo. Rutendo is a visionary, results-driven business leader with over 20 years of experience in the financial services sector. She holds a Bachelor of Honors degree in Actuarial Mathematics and Statistics from Heriot-Watt University in Scotland, an MBA from the University of Cape Town's Graduate School of Business, and is a fellow of the Institute and Faculty of Actuaries from the UK. Rutendo is the current managing director of Old Mutual Life Assurance Company, Zimbabwe. Prior to this, she has held various roles with the Old Mutual Group, which include General Manager for the Life Assurance Company in Zimbabwe, Chief Risk Officer for Old Mutual Africa Holdings, where she had risk and compliance oversight over the 13 countries on the African continent, excluding South Africa, where Old Mutual has operations. Head of Strategy and Reporting for the Old Mutual Zimbabwe Group, and Actuarial Executive for the Zimbabwe Life Assurance Company. Ladies and gentlemen, let's put our hands together for Rutendo Magwarimbo. Hi, Rutendo. How are you? Our next panelist is Willie Faston Chibaya. Willie has extensive experience in the insurance and pensions industry and is passionate about the growth of the industry and bringing about a positive impact to pension funds. His senior management experience was acquired working for Bright Insurance Brokers, Old Mutual Life Assurance Company, and First Mutual Life Assurance. He recently serves as the chairman of the ZAPF, a voluntary non-profit making organization which provides services aimed at the promotion and protection of pension funds. Ladies and gentlemen, let's put our hands together for Willie Faston Chibaya. Our last panelist is Taurai Jamu, who is the Actuarial Executive of Old Mutual Life Assurance Company. He has over 15 years of experience and has worked in pensions, project design and pricing, and actuarial valuations. He is a former council member of ASZ and is an active volunteer in the society, assisting the society in various matters, including organization of this convention. Ladies and gentlemen, let's put our hands together for Taurai Jamu. All right, at this point, I will leave the microphone to the moderator as she will take us through the panel discussion.
Okay, thank you. Good afternoon, everyone. I will be moderating the discussion on pension reforms and retirement security in Zimbabwe with the panel comprising of the three individuals, that is Rutendo, Taurai, and Willie Faston. So pension funds play a vital role in the economy by investing current pension contributions in different assets and then converting those assets into predictable post-employment income. However, Zimbabwe's pension system has substantial obstacles, such as inadequate funding, governance issues, and the effects of the macroeconomic environment. The pension system has struggled to provide adequate financial stability to pensioners. And following the pension and provident funds compensation for loss of pre-2009 value of pension benefits, the regulator has only approved one pension funds compensation scheme as of now. Given that most pensioners are aware of the program and expected to be compensated, the press release containing only one approved fund has raised concerns. This makes the topic of pensions a sensitive issue, and the panel would be taking us through the discussion on this topic. So we will start with Willie as he leads the discussion on the current state of pension systems in Zimbabwe.
Thank you, Chair. A very good afternoon to everyone. So looking at the overview of the current pension system, what we can say is that the setup or the system, the pension sector is shrinking. That's the key issue. That's what we see when we're looking at the current industry. Let me try to share some stats around why we say that the industry is shrinking. Number one, when you look in terms of membership, membership itself has been stagnant, just over 900,000 members, and you're going as far back as 2009. But in between, you saw membership also coming off. And where we are now, with people seeking greener pastures, with people commuting, and with people having to move jobs, what we're seeing is that that number is actually coming off rapidly. Then from a setup perspective or funding perspective, you would find out that our pension system is mainly predominantly your defined contribution funds, your defined benefit funds, which in the past probably used to give better benefits compared to probably what people are getting out of the DC funds. You're actually finding that the DC funds only constitute about under 4%. Then the other worrying aspect within the industry that we're seeing is the number of funds that are actually contributing, that are active. We currently have about 1,000 funds that we deem to be still registered, but out of that 1,000 funds, 50% are active. And out of the inactive funds, we are probably looking at about 80% plus of those having to be dissolved. So that says that we are seeing a shrinking industry. But this could be a symptom of certain factors that I'll then highlight on. Then the other issue that's there, which is pointing towards this shrinkage, is in terms of the contributions that are going to the fund. When you look at the absolute, or at our peak, we used to bring in about USD 220 million in terms of contributions. But currently, in the last decade, we have come down to about USD 125 million in terms of contributions. So that says that this industry is on a downward trend. Then you look at the assets. Assets at our peak, USD 2.1 billion, currently USD 1.2 billion as of December. But that also depends on what exchange rate you are looking at. So that actually says that there is another shrinkage that's coming to the fore. Then in terms of assets supporting this industry, the major assets is in property, which constitute about 50%, and then equities, 23%. So it then also talks to how are we investing within this pension fund. What are the other trends on a social side that we're seeing? The pensions themselves that are being paid on a monthly basis have come off significantly. And a lot of pensioners are now destitute. They can't afford medical aid. They can't even afford to live off that amount. And if you want to test the fact that our minimum monthly pension is pegged at USD $40, it tells you something, that a person cannot live off the pension that they actually are getting. And the other trend that we're also seeing is of partial withdrawals, as people are switching jobs or either leaving Zimbabwe altogether, seeking greener pastures. Then if we are to look at the assets themselves, probably in terms of the overall return over a period of time, if you are to look over a decade, maybe 2013 to about 2023, about minus 4.6% in terms of a loss that we're seeing in there, in terms of coming down. Then when you look at one of the major investment vehicles, which is equities, and you look at the market cap, at our peak, 5.2 billion, we are probably down to 1.9 billion. So that tells us something in terms of value destruction that's happening within that particular space. So having said that, what was also happening within the industry in terms of investments? Where are they investing, especially when you're looking at your prescribed assets, apart from property and equities, which then constitute about 75% of investments? You're finding that under prescribed assets, money has been invested in construction. It has been invested in energy infrastructure, which is a welcome development, and the next portion is in agriculture. However, things like health, the health sector, there's very little getting to that space, even servicing of stands. Shopping malls, yes, they are coming up of late, but in terms of the contribution, it's still on the lower side. And then what's worrying is that around road and sewer, you find that the contribution is very, very low, almost 4.7 million. That's what we saw getting into that space. So having painted the overview of the industry, maybe I can just touch on the challenges, if I may, Chair. Yes. Right. So what we are seeing, the shrinkage, is a symptom of a very big challenge that we face as a nation. That challenge is what I call the currency and inflation cycles that happen in Zimbabwe. So the inflation and currency cycles, they then manifest themselves in terms of loss of confidence. Then that loss of confidence then says that people are not interested in putting money in what? In pension funds. And the issue of compensation that you alluded to earlier on, Chiduza, is also stemming from that particular issue, which talks to policy. So when you look at the Zimbabwean environment, pension funds can only thrive in a stable currency. That's a key. So in the absence of a stable currency, then you'll find the challenges that we have. So as a nation, if I'm to look at probably that cycle of currency and inflation, you start as far back as 1980, Black Friday, and then you move to Operation Sunrise. You move to the initial removals of zeros, 2008, 2009. You move to a period where the local currency was declared moribund. That's 2017, right? You then move into 2019, SI 142, 1:1. And then SI 85 of 2020, you've got dual currency in Zimbabwe. Then the last one, SI 60 of 2024, you've got creation of ZiG currency. So you can see how this has fed into inflation, and it has resulted in loss of value, which has impacted on confidence in the industry. Moving away from the issue of currency, let me probably just touch on the issue of the contributions themselves. Why are we seeing that shrinkage from a high of USD 220 to a low of USD 125, right? Number one, 2019, you bring in 1:1. Then on the back of that, industry responds to that. They don't want to commit to paying an allowance in perpetuity. What do? They bring in a non-pensionable allowance, which cannot be converted into your actual salary. So in essence, that was the starting point of the shrinkage in terms of contributions. So number one, non-pensionable allowances have been dwarfing the pensionable allowance. So that has brought in a reduction in terms of contributions. Number two, we see non-remittance of contributions are real issues, which the regulator is always talking about. So that again results in the shrinkage. Then, deliberate avoidance of contributing to a pension fund because people have lost trust. Then the other aspect is the informalization of the economy. Why? Because a lot of the people are moving away from the formal economy, getting into the informal. But in the informal sector, do we have a pension system in place? No, we don't. So what it then says is, for the shrinking formal sector and a shrinking pensionable allowance, what's coming into the sector also gets crowded out by those non-pensionable allowances. Then there's the issue of the coexistence between who and who, the private pension schemes and NASA. So on one end, you're using PDL in terms of stepping up your cap. On the other end, you are actually basing your salary, it's not moving in line with PDL, what you're taking on your private pension scheme. It's actually static. So that has also resulted in that gap. And then lastly, when you look at the Zimbabwean environment, even the level of contributions themselves, I think in the past your DBs would range from about 15 to 22% overall contribution. Currently, you're looking at a DC which on average members contribute from 5% to 7.5, and then the employers from 7.5 to 12%. Already you can see that what actually is being put in is on the lower side, right? Having talked to those factors, what are the other challenges that we are probably seeing? It's being able to even access pension eligibility conditions. You're still restricting them to permanent employees. So that again says from a membership point of view, if you're not willing to cover your contract members, then they will not be able to get onto the pension scheme. So that's another factor, just by being able to say, is one able to actually access a pension fund or to be able to join a pension fund? How easy is it for one to be able to join in there? But the biggest issue that we're grappling with as a nation is around loss of confidence, which has resulted in people losing trust in the pension schemes. Be it the design that we have, is it responding to those needs? I think no. So that's the background in terms of where we're coming from. So probably let me pause here and I'll allow my other panelists to come in. Thanks.
Okay, thank you, Willie. Rutendo, do you have anything to add?
Thanks, Willie, for that. I think for me, some of the challenges you mentioned are symptoms. And what we need to really address is the root cause. We have, how do I put it? I think first we need to acknowledge, both members of pension funds, business, and policymakers, we need to acknowledge that we do have a crisis. And I know actuaries, we tend to look back in the rearview mirror to try and fix things, but in this instance, I think we need to start from where we are and look forward as how do we fix it. We'll use what has happened so that we don't fall into the same pitfalls. But just touching on from some of the things you've said, it's not unique to Zimbabwe. You know, I was researching that we are not the only nation to have lost pensions, but I think how we've responded is what sets us apart, because up to now we're still talking of 2009. And I'll give an example in reading. Australia's got the 4th largest pension fund investment. I think it runs into about 3.5 trillion US dollars. During the 2008 crisis, they lost 75 billion US dollars, but it didn't stop them. And I think we are in a situation where we are failing to acknowledge that value was lost, but how do we move forward? So some of the things, I'm glad you mentioned confidence, and I think some of the recommendations I would put across is really to address that confidence issue. People don't want to hear about pensions at the moment because that line, security, does not exist. We are paying $20, $30 monthly pensions at the moment, so clearly no one would want to put money in a pension fund. So how do we close that gap? I think as a start, the policymakers need to put in place a pot. We need to create a pot whereby we can have a means-tested pension. So we've already alluded to the fact that the formal sector is shrinking, so it's not about creating another tax because we're already overburdened as it is, but it's to say how do we use existing taxes to create a pot to close this gap that we have so that we can start building some confidence to say there is security in retirement. Because even if economic shocks come, there is a safety net which the government should provide, and I think that's the first thing that we need to do. And some of the sources of funding that when I look across the array of taxes that we have is we've got an AIDS levy. That levy came into effect at a time where we as a nation were facing a crisis. And I would like to think that that crisis is not at the same level it was when it was introduced, so perhaps we can use some of that money to top up pensions. We have IMTT. Formal economy we can't tax, but IMTT touches everybody. So perhaps we can use some of that IMTT to close this gap. And why closing the gap would be important for the policymakers is that there's no economy that has progressed without pooled investments. So that is the plus side for the policymakers to go that route. The second thing is building trust between us, industry, and the government. So we claim we're long-term investors, but the longest bond we have is 5 years or 6 years. That can't be long-term. And I think if I was to build something where I would want my son and his children and his children's children, it's to say we need a 30, 40-year bond. And what would build confidence is for the members to see how that money is utilized, which is the transparency. So I'll give an example. Government issues a bond, 30 years. We prescribe to it. That money is used to go and refurbish Parenyatwa. It's used to go and make sure that the sanitation and water facilities and electricity are functional. Those are things that can be utilized by generations 30 years from now. And members currently when they retire, and I think to your point, if currently I'm putting into my medical aid more money than I'm putting into my pension, it means when I retire I've got no medical aid. But guess what? If Pari is working, I'll be indifferent. Because that safety net, I have invested in that safety net through prescribing, through getting into a bond with the government that's 30, 40 years from now. So I think from us is, we need to meet each other halfway. There is no trust, but we must start from somewhere, otherwise we're going nowhere. And I think finally, the last point I had was really around the informal. It's a very big, we keep saying the economy is becoming more and more informalized, yet we are taxing in order to close the gap that is being created by the informal on the fiscus. We are taxing more and more that shrinking formal sector. So again, we're taking ourselves in circles. So how do we tax the informal in a manner that they, I don't know how to put it, that they enjoy being taxed. And I'll give an example. I was talking to someone in Europe. I think in that particular country, their tax rates are more or less similar to Zimbabwe, but they're happy to pay them. Why? Because they'll then say, I've got free health access. And what they termed public is what we would call avenues. It's our private. That is the standard of their private health sector. They're happy to pay taxes because from a certain age, transportation is free. So they are investing in their own future. So I think we ourselves need to change our mindset, both the policymakers, us as members, so that we actually have a mindset to say what happened, but we now need to move forward. And for the policymakers themselves, I don't know if my regulators in here don't hold it against me, but I think we also need to have a principles-based regulation rather than a prescriptive. Because once we are prescriptive, as we all know anywhere else, regulation lags behind innovation. So the minute we have a prescriptive regulatory framework, we're stifling innovation. So I think let's try and work together, meet each other halfway, and allow industry to innovate those products that will help us get to where we want to get to. I'll stop there, Chiduza.
Okay. Thank you, Rutendo. That was quite insightful. And I think, Taura, you might have something to add, right, to the discussion.
Thank you, Chiduza. So I think as you begin your actuarial journey, since this is an actuarial conference, we have to say something actuarial. So as you begin your actuarial journey, I think one of the lessons that you are taught is that actuarial control cycle. And we talk about the general economic environment which is around everything that you are going to do. And one of the first steps is around defining the problem. So once we start to talk about pension retirement reform, I think we need to be very clear around which problem are we really solving for. Because we might start to try to solve for something that should be working and neglect the real problem, which could be an elephant in the room that needs to be solved. So I think it is important for us to actually be very clear around the problem that we're trying to solve. Having said that, I think we can actually dissect the problem and try to bucket it in particular ways that can help us to reach a particular solution. I think we have seen challenges over the past 20 years, if not more, around pension because of the outcomes that are coming out of those pension schemes that people have contributed to for long. Some of the issues are due to the macro environment. Some of them are due to maybe the systems actually not working. So talking about the system, so Zimbabwe's pension system is actually probably made up of 3 pillars. We have got the social security by NASA, which is compulsory to any employer who employs a certain minimum number of employees. They are required to automatically enroll people without an option to opt out into the National Social Security Authority scheme. Then we have the voluntary occupational pension space. So they're actually voluntary, which means it is actually up to the employer to offer pension benefits to their employees if it makes sense to them, if it is affordable to the employer, and if it can be a differentiator when it comes to the employee value proposition. Then lastly, we've got the individual pension plans, which people can then take up with insurance players, way to augment their pension outcomes. But what you can see in all of this is that they're actually all targeted around the formerly employed. And from the stats that you were sharing, and from the stats that are available from Zimstats, we have got over 6 million people who are actually actively employed within the informal sector. And we have got a very small formal space. So in as much as we are trying to correct and focus on the formal sector, we're actually neglecting a much bigger problem, which is around the informal space. Because those people will not be able to continue working at CSO, at Magaba, doing whatever that they are doing currently forever. At one point, they need to actually say, we are done, I need to go back home and retire and sit and enjoy. But can they achieve that level of retirement when they have not been saving, when there have not been any mechanisms to save. So I think it's a real challenge that as an industry we need to reflect on. As actuaries in this room, we need to reflect on and see what sort of solutions can we actually bring that can be of help to those people who are within the informal space. Then speaking of the formal space itself, we need to ask ourselves, what are actually the objectives of a pension system of retirement outcomes? So you will see that we aim at income replacement. And under DC funds, we even go on to actually calculate what we call income replacement ratios, which is a percentage that tries to measure how much of your income you will be able to replace once you reach retirement. But if you're going to ask actuaries who calculate that metric, they will tell you weird numbers that will actually astound you, that we are not actually anywhere nearing replacing any. I think the name of the ratio itself is actually a misnomer, because it would seem that we're actually not aiming at replacing your income, because there's no relationship between what you are going to get out and the income that you actually need in retirement. So it means retirement outcomes are actually failing from the word go. We are aiming at longevity risk as actuaries, and we saying that people are living longer by the day, and we need to provide that income in retirement for longer. But this is the $40 minimum pension that Willie was talking to, and the outcomes, when you look at many individuals, that $40 is probably a starting pension. 2-3 years down the line, that would have fallen off. So can people survive for that for long? And as you grow older, obviously your needs, your financial needs actually increase because you need medical care at old age. Then I think the benefits of risk pooling, savings facilitation, and social security. So I think these were the aims of a pension systems. So we have to reflect and ask ourselves, given our pension system, is it meeting this? What is it that needs to change? Clearly, we need to embrace the informal sector. We need to bring the informal sector into the fold. That needs a combination of both private effort and government effort. So the IMTT that you were talking about, there's a lot of taxes within fuel, there's lots of tax within your airtime and so forth, which is taxes that actually you've got a kind of like a universal coverage, which can enable everyone to contribute towards a better social security, not necessarily just aimed at those people who are formally employed. So this would embrace those people that are within the informal sector. We then need to ask and question maybe some of the assumptions that are within the retirement system itself. So we aim at replacing income in retirement, which means we want somebody when they reach retirement age to actually annuitize. Is this the right outcome maybe for people in Zimbabwe? Is this the right outcome, perhaps given our volatile economic environment, to allow people to annuitize? Perhaps a lump sum at retirement would serve people better. We need to ask ourselves that question and answer it appropriately based on models, based on research, so that once we start on the journey of reforms, we know exactly what we're trying to solve for and what we are likely to achieve. Lastly, I'll just touch maybe on South Africa. So they are going through some reforms of their own. They've just recently introduced what they call a two-pot pension system. So basically, I think it's probably based or was more emphasized during the period when we were in the COVID years, where people needed access to their pensions to help them to live by, but the regulations were not allowing. So the regulator, together working with the industry and various other players, have come up with a system which is they're calling the two-pot system. It allows somebody to have access to a portion of their fund during their working life to address any emergencies. And the rest, about 2/3, remains available for you to keep until retirement and for it to then form your retirement benefits. So it provides a win-win situation where pensions provide a proof of test that it can help you along the journey, and it does not necessarily need to be a promise that can only be realized in your retirement. But if we ask ourselves, how many people in Zimbabwe are reaching retirement age?
Okay, thank you, Taurai, and those are questions that get us to think. I'm sure everyone is now thinking about how can we make the pension system in Zimbabwe work. So now we move on to the questions, a question and answer segment with the audience. If we have any questions, can we please raise our hands, and the MC, can you assist us for this session?
Hello. I always ask simple questions. Do we want to reform or to restart? And because from my experience, I've talked to others in the same market, and they seem to be saying we've found ways of surviving in an unstable economic environment. So the question is, can we create a pension system which can work in an unstable economic environment without talking of reform? I think we need to restart and develop something which can work, because other sectors are making money as we are complaining. So the question is, can we create a pension system? Let's think outside the box. Can we create a pension system which can work despite the inflation, despite the currents, whatever? Let's create that system. Thank you.
Thanks, Dave. Yeah, thanks, David, for that. I think the key thing is we must create something. So I know the current status quo is, as you've put it, everybody will say, I found a way to survive. I don't need this. But I think the flip side is, and it's an example we always use, I can have my house, I've got my solar, I've got my borehole, I'm okay. But the day I get sick, if there's no hospital and there is no other infrastructure that can only be built by pooled investments, then we're shooting ourselves in the foot. We're becoming I instead of we. Because if you look at any, and I've said this earlier, there is no nation that has grown without utilizing pooled investment funds. So I think we need to get out of the mindset that I'm okay at my house, because it's not going to, you're looking at the now, and we're not looking at 3-4 generations from now. So to your point, we must restart, whether we call it reform or saying we've got a clean slate, we must figure out how to make this thing work in Zimbabwe, because we all need hospitals to work. We all need good roads, and I think we're enjoying the good roads. You know, we're enjoying the new infrastructure we're seeing coming up in roads. So imagine if we can facilitate by enabling government to do more to build that social infrastructure that we can all enjoy while still getting a return, and while still ensuring that at the end of it all we get something. But and I think Taurai touched on it earlier, that something we get out really speaks to how much am I putting in? Because we can point a blame on the macro without actually looking at what role we've had to play ourselves. So for most of us sitting here, if you're to look at your pay slips, how many are putting in more into pension fund than they are into medical aid? And that's a start. So if you're not saving enough to start with, you can't then say this thing doesn't work. So we need to have a clean slate and then acknowledge what the member's role is, what the government's role is, and what the regulator's role is to make this thing work. I don't know if you guys want to add anything else.
Thank you. So I think there's a case to revisit the model that we have. That's what essentially we are bringing to the fore. What's behind the question is to then say, we adopted a defined contribution scheme. We adopted the DB scheme, but there are assumptions in actuarial work based on an assumption, and the assumptions that's being violated is around the fact that you started with, which is macroeconomic stability. So, number one, you want to run a system where you violated the, the initial assumption. So it tells you something that, look, probably the solution that I'm coming up with does not work in that environment. But for us to be able to get to that space, it therefore then says that, number one, is industry. We are bringing to the fore that innovation. That's one. Number two, the regulator has to be willing to come to the table. When I say the regulator, it's because in the past we had that archaic Pension and Provident Fund Act. We brought in another bill in 2022, isn't it? But guess what? Nothing fundamental changed in terms of the structure. We know that our people will go through these 5-year cycles. That's what we go through in terms of currency. People want partial withdrawals. We know what members want for this system to work, for them to be able to put more into the system. So it therefore calls upon us, the technocrats now, to craft something that then responds to the environment that we're operating in. So I would say, yes, there is a case for us to revisit the model. And it's up to us to then craft how we are actually going to be able to do that. But what we also require is the support of the regulator for us then to be able to move forward.
I would just add also, just maybe to emphasize that the need for reforms, I think, is there. Why I say so? Because people are still retiring, but they are retiring perhaps with no income or with inadequate income. And somebody is having to fill that particular gap. And we have seen an increase in the black tax burden on the society. We are also seeing a burden on the government itself in terms of trying to feed the nation. So when you look at the number of vulnerable households from Zimstat statistics, when you look at the bill that government says they need actually to fund for people during this year because of El Nino, when you look at the number of adults that are trying to remain actively involved beyond their ages, I think it's just testament to say something has not worked and something needs to be done for it to work. So there are parts of the system that are working, and there are parts that need investigation, validation, and perhaps rethinking so that we can actually come up with a framework that is more clearer. Because when you sit with a customer, they tell you that I worked for 40 years. They don't tell you about the contribution level. They don't tell you about the investment returns. They just tell you about the 40 years. So for them, they worked for a lifetime, which was 40 years, and they expect to live off a pension for the remainder of their lifetime. So we need to ask ourselves, is our pension system promising that? Or do we need to recalibrate either the pension system or recalibrate the outcomes and then educate the populace on what they should surely be accepting? Because the conversations you have with the customer and what is actually happening on the ground are two different, which means the system is not producing maybe outcomes that are expected from the people that are contributing to it, and they actually don't know what they are contributing, what it actually leads to. So there is work that needs to be done there.
Okay, thank you. Do we have any more questions?
Thank you very much for the discussion. My question, maybe it's not a question. It's saying, to what extent maybe as the Actuarial Society of Zimbabwe, to what extent do we have influence on policy making with respect to these reforms? Because looking at it, we are celebrating the 10th convention, but if you could just go back to the topics or that we've discussed from 2015 up to now, I think this has been topical. So what are we going to do from this discussion? Maybe we need someone to be saying action points like what we just do in the meetings, because I think we have been going in cycles like the actuarial control cycle. Thank you.
Okay, thank you. Can we have 2 or 3 more questions so that we can answer them?
Thank you. I think I just want to confirm and support the point that has just been made. So
I'll put it in the form of questions, right? Do we have a problem with the current pension funding arrangement or framework? I guess the answer is yes. Do we need to restart or reform? I guess the answer is yes. And thirdly, do we have a role to play as Actuarial Society of Zimbabwe in that process, whether it's restarting or reforming? Obviously, the answer is yes. And perhaps what we now need is a resolution of this convention to say this is an issue that we need to deal with. These are the steps that we need to take on to address this issue. And I guess the answer to that as well is yes. So perhaps this is to the President and the Council, and obviously some of the senior members of the society to provide input and support to put together something that can be taken to the regulators and say, from our perspective, this is how we can fix this pension issue. And let's take it from there. Hopefully by the time we come back, this time next year, we'll be talking of an update in terms of what is happening to that position paper. There are a lot of issues that we are talking about right now in the industry, and we seem to be good at talking about them and perhaps not taking action as my colleague has mentioned. We talk about, and there are certain phrases that when you hear, even in a different environment, they give you panic attacks. You hear loss of value. It has got a certain meaning that comes with it. You hear compensation framework. It has connotations that come with it. But we are talking about these things, and I think it would be great if at the end of the day, tomorrow, this convention, as it closes, has on the agenda something that speaks to resolutions. We have resolved over the last 2 days to do A, B, C, D, so that we can then get a report back even before the next convention. Thank you.
Thank you. Great insight. I would like to look at pension contribution as magic water. A water that doesn't sink, that doesn't evaporate. And if we were to look at that from the contributions that people have done, the real value ones, would we be able to trace where it all went? Let's go back again and look at, for example, the USD contributions. And then we say that money could have gone into banks. That money could have been, someone is living in a house right now where he paid maybe 20% of the value. Why don't, so to me I look at the compensation framework as a very piecemeal, not fully, because let's trace the trajectory of the money and let's see who has it. That's the first thing. The second thing would be, if we want to go back, let's go back even to demutualization. Everyone had a piece in First Mutual, a piece of Old Mutual, a piece of Fidelity. The assumptions might have been that people are going to live longer. Then boom, HIV and AIDS came and they all died, most of them. Who went back to say, these people, they left value. What we thought could happen did not happen. So I concur with Rutendo that I think we should not become or continue to be a view mirror profession, the way I call it. We should look much further into the future. I think the tools are more now, the models are more. We could do better as a profession. Thank you.
Thank you for the questions and comments. So I think certainly around the need for resolutions and the need to take some of these conversations forward, I think it is imperative because these are matters of life and death. These are things that are impacting on the generality of our society. and they're actually counting on the best brains within the economy to try to solve this for them. So I think it's a conversation that needs to actually continue outside of this, so that we can have formal papers being presented to the right forums and necessary discussions taking place. I think it's good to see that we have got a draft actuarial bill. It's good to see that there is conversations around it, because it then gives impetus and a lot of weight to the Actuarial Society of Zimbabwe for some of the conversations that need to take place. But I think it is imperative. Then coming back to the topic at hand, which is around reforms and perhaps maybe the comments from Dr. Choa. Yes, I think it is important to have those reflections and ask ourselves, what is it that has happened? Can we trace the contributions? Because when a member makes a contribution, they are not doing it just for the sake of doing it. They are doing it because they are expecting an outcome. When an administrator accepts the money, they are not just putting it into a simple bank account and leaving it. They are putting it elsewhere. So in as much as we talk about the insurance and pensions industry, the money is not actually sitting in some vault somewhere, in FML, some vault somewhere in Fidelity, in CBZ, and so forth. That money has been deployed elsewhere. So mortgages are a case in point, where funding was provided to the banking sector. People went on to buy houses on credit, and as things happened, things changed, monetary policies changed, and people got away with houses, not having gone to pay in for 25 years. And the very same people who then made those contributions are now being asked to compensate themselves. So we need to reflect and say, is that a more holistic approach to the compensation framework? And maybe not to just go compensation framework. When we look at this problem more into the future, how do we want to solve for it? So the pension funds are invested in Delta, they're invested in INSCO and so forth. At one point, that stock market was valued between 6 to 8 billion, depending on the valuations. If you look at the joint valuation of both the VFX, as some of the stocks have migrated to that BOUS, and the ZSE, and you look at the joint valuation, it's just slightly around 3 billion. And you ask yourself, where is the rest of the value gone? So it means companies are actually not operating. So there is a bigger conversation just outside the pensions. We need also to fix the macro and have the necessary supporting pillars that enable the macros. We can, yes, embrace that we are operating in a difficult and volatile economic environment, but there are certain minimums that we also need if we want to create value for our people. Those must also be part of the conversations when we talk about these reforms, because reforms without some minimum criteria being set will also just not yield the necessary results.
I think just to add on to that, Tarai, is, and I'll always go back to the safety net, because it seems with, you know, when I did my reading, we used to talk of 1 in 200 shocks. In Zim, it's like 1 in 5 or 1 in 2. So it's to say that safety net becomes very important, because it looks like we experiment in a live environment. So those unintended consequences, I think it has become the norm for us. And that safety net, we need to really figure out a way of how, without creating additional taxes, how do we have a fund from the many taxes that are already there so that we create that safety net? Because it's become the norm that maybe, yeah, we've got ZIG now, who knows, in 5 years' time we might have another shock. But it doesn't mean that whoever is supposed to be retiring should not have at least some form of livable minimum, which we need to define. And then we need to, because we're the only ones who can quantify how big that pot needs to be. And based on our experience, if we're going to be having these shocks once every 5 years, you know, how big does that pot need to be? Who needs to contribute it? And how do we change the mindset? I know Dr. Choa started talking about 209. You know, I've changed my mindset, because the more I watch the news, the more I see that, you know, there are more people having worse crises than we are. But 2-3 years down the line, it's like it never happened. Yes, we're still stuck in 2009. So perhaps we also need to ask ourselves, how do we change our mindset? How do we change our mindset so that the next time we're sitting here, we're not talking of 209. we're talking of 2040. This is what the future needs to look like.
Are we concluding? So that so for me, I think the key takeaway is, yes, there is a case to revisit the model or to look at pension reforms. And there were certain levers for me that came out through in the conversation. Number one, product relevance. We need to design and issue products that are meant for the Zimbabwean market. And then, number two, we don't need to copy and paste international pension designs. And number three, we require innovation, because to buttress the point that you're bringing to the fore, Tinoda, that talks to innovation. So we need to have that as another lever if we are then to move forward. Then the other key aspect is around regulatory oversight and transparency, not being prescriptive, but helping the industry transform and move forward. Then, talking to the point that was also raised, there is need for engagement with regulators and the government for an appropriate policy environment. I think if we are to take those resolutions forward, that's what it means under that particular line. And then the last one for me, which is also key, is member engagement. Open communication, supported by financial literacy. And I think if we work on those, then I think we might see some change in terms of how we've been approaching the pension story in Zimbabwe. Thanks.
Thank you. So I think my thoughts, maybe as we conclude, to say that we need to be very clear what we need as a retirement promise, or to what we must make as a retirement promise to people that are contributing. And that must be a key focal point of any reform that we may carry out. We need to be very clear what are the supporting pillars that are required. Whilst a commission of inquiry can be appointed by a president, we need to have systems and bodies or institutions that can facilitate that process throughout the life of a retiree. So we can have a pension ombudsman office who can look into some of the issues that affect people and can address them at that level without necessarily needing a worldwide investigation to be carried out before maybe certain actions can take place. Any reform would need to be supported by regulatory reforms to bring into life those particular reforms and to enable some of those things which may need also us to rethink the way and approach we want regulation to work. Then when we talk about the financial inclusion, we need to look at those that are excluded, those that are unsafe, those that are undersaved. What do we want to do? They are clearly a tax burden to the government and to you and me in here. We've got black tax as well that are associated with those particular individuals. What do we need to do that around that space? Then we need to think about what are the complementary things that actually need to be in place for us to have a working system altogether. Because when somebody has retired, they will need medical care. And at this rate, they cannot afford to go to a private hospital. They can only access the public hospitals. So some of the pooled funds need to invest in the public infrastructure with the hope that that infrastructure will then save the general population. Once we have those layers working hand in hand together, we can surely have better retirement outcomes for Zimbabweans.
Thanks. I think for me, my concluding remarks are just let's execute on what we've discussed. I think I cannot live to see another compensation framework 5 years from now. So I think it's in our best interest to execute so that we start looking forward and stop this habit that we seem to love to have, to be looking backwards and pointing fingers. That's my concluding remarks.
Okay, thank you, Rutendo, and thank you all panelists. I must say that this discussion has me thinking of what part I should play, and I hope we are all thinking of the same, and we should come up with a collective solution to this issue. And the first step is acknowledging that we have a problem, which we have done now. And so what comes next is what we do to ensure that this problem goes. So as we conclude this discussion, I would like to say that what are we going to do and what part are we going to play individually and collectively as a team? Thank you.
Thank you very much, ladies and gentlemen. Let's give a loud round of applause for our panelists. Whilst you are still there, as per tradition, we've got a few thank you gifts to our panelists, just to appreciate you for shedding light on this important topic. I think whether we like it or not, the issues of pension affect everybody, even us who are here. So it's very important that we take note of these issues, we try to come up with solutions, and most importantly, we follow through on the implementation strategies that we would have discussed. All right, thank you so much. May we please clap hands for them as they take their seats. At this point in time, we shall have a promotional break. I understand there's a video that is supposed to play on the screen, so the technical desk, if you may please assist us with that. Whilst they are working on it, those that are on the WhatsApp platform, there are questions that have been sent on the WhatsApp platform in the form of polls, just 15 questions. So if you can please just take time to answer those questions, we'll need that information for the following presentation. It's just 15 multiple choice questions. If you are not on the platform, please see Maria, Kim, and Edson. Maria, Kim, and Edson, so that they can add you onto that platform. They are here with us. If you can stand, Maria, Kim, and Edson, so that people may see you. All right. So please see those ladies if you're not on the WhatsApp platform, so that they can add you. Those that are on the platform, please respond to those questions.
We all want to know that our loved ones have been afforded a dignified funeral service when they pass away. Old Mutual, in its quest to always enhance the experience of its customers, has launched end-to-end funeral services to complement the existing cash policy.
Today, we add another enhancement to Old Mutual's product offering, a key milestone in the objective of providing customers with a one-stop shop integrated financial services offering.
Old Mutual Funeral Policy is set to provide clients with a superior financial plan as well as an exceptional funeral service experience.
As Old Mutual is saying, death is an event. The intention is for us to see to it that as our most valued customers, we are helping you to give your loved ones a befitting send-off as well as celebrating their well-lived lives.
Very excited by it. I think it's very cost effective.
and what they have on display is of top quality. So I would recommend definitely myself and my family and co-workers to look into it.
The Flexi Funeral Service policy offers features such as cash payouts on each plan, free cover for biological children, a nationwide bus service, family courtesy vehicles, and an option for cash in lieu when claiming.
Our customers kept asking for more. They loved the products, the funeral cover policy, which is a policy that would pay out cash benefits. The launch of our mutual funeral services business is actually a demonstration of our commitment to serve our customers better, to say that we are with you. Do life, we will cover you.
A round of applause for Old Mutual Financial Services. Now we all seem a little bit tired. Let's get our energies up. Everyone, may you please get on your feet. Let's stand up. Oh, and now I see lots of people stretching and all of that. All right. Of the people that are standing up, how many of us are actual actuaries, have already qualified to be an actuary? How many of us are aspiring? Okay, so let me understand this. If you are not aspiring, you are not, already not qualified, what are you? Okay, how many just admire the profession then? This side, there are lots of hands I'm not seeing. I don't understand. I'm not going to ask you difficult questions. I just want to get to know you better. As a fellow actuary, what is wrong with you people? Anyways, I've got a question. So, all of us, either you admire the profession, I'm pretty sure you've done a little bit of background on it. Some of us are already studying towards it. Some of us are in the midst of writing examinations. Some of us have written exams. Someone was telling me that there are about 18 exams, 26 exams. I don't know how many needs to be written for you to qualify. But I know it's a significant number of examinations. So I can only assume that some people are already midway when it comes to writing those exams. So I'm going to ask questions, and if the answer is yes to the question, you may take a seat, and then we shall deal with those that will remain standing. If you lie to me, I will ask you questions. Now, raise your hand if you've ever used your actuarial skills to negotiate a better deal. You may take a seat. Do you see how many dishonest people we have in this room? Guys, I am short, but I can see everyone. Some people did not raise their hands, but they are sitting down. I do not want to move row by row asking you to tell us the details of those deals. And then now you have to come up with something. All right, one last time, please be on your feet. And please do not cheat. Because if you can cheat about this, what about? I didn't say anything. All right. Sit down or raise your hand if you've ever used any knowledge you have about actuarial science to your advantage during a date. If you're trying to convince someone you're one of the smartest people in this world when you've gone on a date with your partner. All right, thank you so much. You may take your seats. I just wanted to see if this actually works, because before I venture into this profession, I need to see the advantages, and I'm calculating the risk of switching. So I wanted to see if I one day want to get myself a life partner, what's going to happen. Yeah, I know I've got a ring, and most of you are like, what do you mean? Don't worry about that. Anyways, we're going to move forward now. Allow me to introduce our next speaker. His name is Tichareva. He's going to come through and talk to us about pertinent soft skills for actuarial professionals. Those skills that you are not taught in schools, that do not require you to calculate and do all those formulas and, computations. Tichareva is a fellow of the Actuarial Society of South Africa, a fellow of the Institute of Actuaries, and a fellow of the Actuarial Society of Zimbabwe, who also holds a BCom honors degree in actuarial science and an MBA from This Business School, specializing in banking and finance-related subjects. He attended some of his MBA electives at Farquhar School of Business at Duke University in North Carolina. Michael entered banking practice in 2008, having initially qualified as a pensions and employee benefits actuary in 2004. These are the people we are looking for. And practiced life assurance, pensions, and investments over the years until moving to banking in 2008. In addition to complex investment, banking transaction, structuring, and advisory under National Standard Finance Africa, Michael leads a team of banking actuarial professionals at Claxon Actuaries International based in Johannesburg. In delivering banking consulting assignments that includes IFRS 9, expected credit loss modeling, banking risk management, transaction advisory, as well as insurance and pensions-related actuarial assignments. Michael currently leads at a global level in developing banking practice for actuaries and continues to present at various international platforms on the involvement of actuaries in banking. Michael has been the chairperson of the Banking Virtual Forum of the International Actuarial Association since 2016 and is the founding member of the ASA Banking Committee that he chaired from 2010 to 2017 and is again the chairperson for 2024 to 2025. Michael is also a member of Council of ASA and sits on the Education Board. He is also currently involved in the development of actuarial education on the African continent on behalf of ASA. He is the current course leader of the Investments Fellowship subject since 2008 and the Banking Fellowship subject since 2015 for the Actuarial Society of South Africa. Michael has also been actively involved in soft skills development sessions at various ASA professional development programs. Now, how is that for a profile? Let's clap hands. The reason why I am reading all these profiles and not paraphrasing is so that we give credit when it's due. People have worked for these accreditations, and it's just important that we celebrate them as we are learning from them. Ladies and gentlemen, without further ado, please help me welcome to the podium Tichareva.
Thank you very much. Tino did part of my presentation already. I could see the soft skills you guys have when you sat down and you had actually not raised your hand. Everybody sat down. Everybody. Very interesting. Okay. The question on soft skills is quite an important one. And I heard some people here saying we need resolution after the conference. How are you going to have the resolutions if you don't fix your soft skills? Maybe not. How are you going to implement the resolutions if you don't fix these soft skills? Maybe not. Maybe it's going to be very difficult to do that. So that's why I want to speak about that today. There is a presentation that I think should come up.
And I think Tino did mention that some questions have been posted on WhatsApp, on the Actuarial Society of Zimbabwe WhatsApp platform. Please try and answer them. What we wanted to do is to, as we go through the presentation, we wanted to have real-time responses, but it looks like we did not have they call it what, an audience response system. So we're putting it on the WhatsApp. Those of you who have WhatsApp, please try and answer. After I have presented, I will, we'll then go through the questions and just see. They are very much tied to this presentation. All right, so here's the agenda as you see. This is what I'm going to talk about, the importance of soft skills. Then I'm going to include us as normative skills program, which is being used for delivering soft skills. And then I'm going to touch on each of those top 10 soft skills. So I'm calling them top 10 soft skills, right? Emotional intelligence, communication, teamwork, problem solving, time management, positive attitude and strong work ethic, adaptability and flexibility, self-confidence, ability to learn, networking. Then I have a slide on key outcomes of developing your soft skills. And then I also have another slide on other soft skills. So soft skills can be learned. Some people are born naturally with certain attributes, but in general, soft skills can be learned. We will see the definition of soft skills shortly. We have seen over the years, okay, some of us qualified in the 90s, others in the 2000s, and throughout, and others in the 2010s, and others now. And throughout that whole period, one thing we saw that is really, really ignored is developing the soft side of things, the human side. A lot of you nail exams, those hard skills, and you do that so well. But we have seen that the development of soft skills is very difficult, which causes a lot of problems, probably on client delivery, even working in teams, and a whole lot of things that do happen. Because then you're not considered a complete professional. I think some of you will resonate with this. A lot of you would have been in certain situations, either with clients or workmates, or anyone, or even, okay, I think the easiest one is husband and wife, or girlfriend and boyfriend. I think that's the easiest one. Sometimes it's as a result of certain issues that are happening. You could have handled a situation better, but you found yourself not handling a situation better. It's those issues, and we find them in the actuarial profession. So before I move on, you were talking about fixing pensions. David asked the question there. I had my phone and I did some calculations, and I realized if you retire with 2,000 goats and you kill a goat every week, you will have food for about 38 years. That's a pension, eh? So you would have solved your problem there. And I've got one of the soft skills as problem solving. So don't think about pensions, just keep goats and then you'll be fine, right? Regulator, I don't know what you regulate there. We just keep goats, 2,000 goats at age 60, 38 years, you'll probably be fine. Right? So that's a problem solving skills. I've already solved the problem, but thank you. Now let's move forward. So soft skills are quite important because they allow effective communication, leadership, teamwork, and problem solving. If I look at effective leadership, as actuaries, we always do a lot of complex work, and we need to communicate with a lot of different stakeholders, regulators, clients, colleagues, and everyone else, sometimes to the board. So if you can't communicate effectively, that creates a big problem. And that requires very strong interpersonal skills, because communication on its own does not end when you send something. Also when you receive and how you respond and a whole lot of things. Then leadership. A lot of actuaries are in leadership roles that we find here. So developing your soft skills does help you if you ever then move up the ladder into leadership roles. Then teamwork. A lot of actuaries, you work in teams as actuaries or actuarial professionals, but with other professionals as well. There could be professionals from admin or accounting and finance or risk departments or anywhere else, right? So you work in teams all the time. And the need for collaboration is very important. And then problem solving. I just already spoke about problem solving. We are always solving problems. These are just 4 I listed. I mean, there's a lot more. So developing those soft skills does help with this. Now, this slide, I won't spend too much time on it, but The Actuarial Society of South Africa in the 2010, from 2010 onwards, realized that we're definitely lagging behind as professionals in terms of soft skills in whatever we were doing. So they came up with a program which is called the Normative Skills Program, is delivered throughout the learning journey of a student actuary until they qualify, and beyond that, obviously, you need to continue developing yourselves. So it starts with Foundation Actuarial Professional Practice, then goes to Core Actuarial Professional Practice, and then it goes to Fellowship Actuarial Professional Practice. And the Core Actuarial Professional Practice and Fellowship Actuarial Professional Practice is also expected to be delivered through a work-based learning program. Why is that so? Because soft skills, when I qualified, all we knew was when you qualify, you go for a 2-day fellowship, fellowship program. And that was it, right? And then you're told you need to follow CPD. But soft skills need to be practiced. They need to be applied in everyday work, everyday life. You need to be doing it all the time, so that you catch some of this. So it's really about practice, just the same way you do practice when you do when you learn your hard skills. So ASA came out with this and developed this program. So every person going through this, going through the Actuarial Society of South Africa's actuarial qualification has to do this. So you learn all these different issues, some of the things we're going to learn now, but you learn all these different issues that are to do with the soft skills, knowledge of the industry, knowledge of the regulations, knowledge of code of conduct, professional guidance, and all those things throughout your learning process, and then you're expected to continue. So there is that program. So I thought I would just show you. I think the IFRS has got some program, because ASA was the first in the world to introduce such a program, and then we were talking about it at IAA meetings, and then some associations are now implementing it. So that's an important program. Then my top 10 skills, I already spoke about them when I introduced. But here is the definition. These are personal attributes that allow you to relate to others effectively. So essentially, they allow you to deliver on your professional promise. And I've listed 10 of them. So let's go through the 10 of them, right? Each slide that follows now deals with each of the soft skills. I would need to be watching my time. I hope someone is going to just show me. All right, so we've got these slides where we're just gonna go through. So let's start with emotional intelligence. Definition of emotional intelligence: the ability to recognize and understand emotions in yourself and in others. And to use that awareness to guide your thought and behavior, and manage stress and communicate effectively in a professional setting. So that's the definition I've given of emotional intelligence. It contains 4 elements. There is self-awareness, there is social awareness, there is self-management, and there is relationship management. So those are 4 aspects of emotional intelligence that you actually need to develop into yourself. And the slides do include definitions of each, but for time purposes, we are unlikely to be able to read every slide. But let's look at self-awareness, for example. Your ability to recognize our own feelings and emotions. And people who possess self-awareness are able to accept constructive criticism and improve. I will tell you, I'm probably one of the worst guys. Well, I used to be. I think I'm better now. When you criticize, I'm feeling, but you start beating yourself, or to think maybe it shouldn't have been. But it's just one of those things. When you're aware and you're criticized, what should you be doing? Take the criticism positively, see what you can learn from it, and then maybe the outcome is better. But the slides will be available. You can always read them in terms of the definitions. But I would like to move forward. So emotional intelligence is one very important and top soft skill. And a lot of people really do struggle when it comes to emotional intelligence. Right. And I think emotional intelligence is linked to empathy. Empathy being your ability to see what's happening. I am seeing Zoom here. So your ability to put yourself in someone's shoe. Putting yourself in someone's shoe. That's empathy. Very much related to emotional intelligence. Sorry, I wanted to, is it on my side or? Okay, so the next slide is on professionalism, I would assume. Yeah, professionalism, and just try to link this with emotional intelligence. But let's first define professionalism in actuarial science. Quite interestingly, these slides, I gave information and they were developed by someone who is in this room. And mind you, that someone has learned a lot on soft skills. She put this definition on professionalism in actuarial practice, which means applying principles of integrity, objectivity, competence and confidentiality in professional conduct, and upholding the public interest through high standards of practice and communication and also continuous development. We can go further and say professionalism is the ability to conduct yourself with responsibility, integrity, accountability, excellence, and seeking to communicate effectively. I haven't been putting on suits, but today I came on in a suit. And usually we used to say, oh, geez, he's very professional, simply because I'm wearing a suit. Doesn't mean that, right? It doesn't mean that. Professionalism has got certain aspects, it has got certain attributes that must be observed for you to then be seen to have acted professionally. Not because Michael Tichareva is putting on a suit. Therefore, he's very professional. So we used to do that. Tafadzwa, you know, I've never liked putting on suits. We used to laugh about this because professionalism is a lot of other different things which we are putting here. So that's an important thing to understand. So it doesn't mean when you come here and you really look serious. You're so serious. And that's a professional guy, not necessarily. So I think that's an element. And there's an element of emotional intelligence that goes with that. Because remember, we defined it and we said your ability to see emotions in yourself and in others and things like that, right? So that's a very important one to learn. Then if we move forward, so we have dealt with the first two. Communication. Now, that's the big one. I've already opened when I spoke earlier. So communication. We are always communicating, all the time. And that's the process of conveying information, ideas, and opinions to others, including the act of listening, understanding, and responding appropriately, right? So communication is all-encompassing, right? So your communication does not end when you send a message. The message has to be heard, understood, and probably responded to. So communication is a whole thing. And there are so many ways of communicating. I'm just going to touch on some of them. So body language. So when we are speaking, body language is actually a form of communication. And in fact, some research already says probably 50% to 70% of your communication is through body language. Non-verbal, okay, actually, non-verbal communication. What you do, the non-verbal aspects. So when you see me right now, when I'm doing whatever I'm doing with my hands and things that you are seeing, sometimes you may interpret it in certain ways. So body language, very important. Non-verbal communication, very important. Verbal communication is what I'm doing now, talking to you. If I go to the next slide, you've got artistic communication, communicating through art, you know, those cartoons you see in newspapers. Those are also a form of communication. So there is a lot of different ways of communicating. But relevance to actuaries, you know, how you present, firstly, maybe a report you write. Does it have an introduction, a body, a conclusion? Does it capture all the information that need to be there? The annexures. Do they have all the data, or whatever it is that needs to be there to allow someone to understand? Then from there, you want to present that. You're going to have to present slides. You develop those slides. Do they make sense? Can they be understood? And then you need to stand and actually present those slides. If they've been understood, then there's going to be feedback that's given to you, and then you're going to respond. All of that is the process of communication. So communication is a very important soft skill. That needs to be understood and learned. Right, I didn't move the slide, but it's good. We were about to move. But I wanted just to talk about active listening. Active listening, I think, is one of the most important one, and I think it's one most of us struggle with. What exactly is active listening, right? How many times have you found someone talking to you and speaking, and all you're waiting for is, when am I going to respond? I want to respond just right now. I want to respond. So almost all the time, sometimes we are listening so that we can respond very quickly. But we're not listening actively to understand what exactly are they saying. What are they looking for? What is the outcome? How can I possibly now respond to these guys? I mean, this is the stage where I say, do as I say, not as I do. So do as I'm saying right now. Because I'm probably one of the culprits where sometimes I just want to respond to this guy. They can't be saying this, you know. Yet it's actually something that happens very often. And it then affects a lot of things, the relationships, the outcomes, or whatever is happening at that point. And then openness and honesty, oh geez. People sat down without raising their hands. And I'm one of them. I just said, look, I will just sit down. So I sat down because I was already preparing for this session. It's part of communication. When your communication is open, you're honest, usually you deal with issues quicker and with a much better outcome when there is openness and honesty in your communication. But once again, you know, these are very big topics that will take a day on their own with exercises being done. I'm just doing what I'm doing just to shorten. Now, teamwork. I've already introduced teamwork. We work in teams, which involves collaboration, communication, and mutual respects among professionals with diverse skills and expertise, working together to achieve common goals, share knowledge, and provide innovative solutions to complex problems. Then I also included on the slide that when you are putting together a team that needs to work together, there are things you need to identify and understand capabilities of each team member. Let's say you're actually a team leader. So identify capabilities and identify capabilities of each team member. Then if you are part of the team, get into your role within the team, because typically you have to define the role. Then get in there and know what is expected of you and what is expected of others. Then if you are to enhance the collaborative efforts of actuaries and other professionals working together to achieve a common goal, you need to make sure that the first two have actually been addressed. And when you are in a team, you need to learn the whole process of the task that is at hand. So sometimes it's a very big task and team members have been allocated different roles. The common mistake we do in teams is just to know what I'm supposed to be doing. But you actually don't know the end-to-end of it. And that's a problem because you don't know where your piece of work, where it fits in, you know, in the whole thing, the final thing. So just try to learn what everyone else is also doing so that you know and then you'll be able to fit in. And getting into a flow state. Yeah, this is definition. Psychologists say, I don't know how many times when you find yourself, you can't even hear the noise around you. You're really concentrating on what you're doing. So that's getting into the flow of things. And it does help you. It increases productivity. So that's something that is encouraged. So teamwork is quite important. And these are some of the things you just need to grasp or learn, you know, when you are working in a team. Problem solving. That slide is quite interesting because all of these issues are problems. It's a messy slide. It's a messy slide. Problem solving, which is what we spend most of our time doing. But we're not going to spend too much time on this because the actuarial control cycle is well known. Right? This is one thing we have learned. You can apply it in problem solving. Firstly, you have to define the problem. I think that's one starting point that we miss, where we end up solving the wrong thing or symptoms or something else, instead of actually solving the actual problem. And you know, this may appear an easy thing, but defining the problem takes a lot of time. Actually sitting in a room and thinking and trying to find out what exactly is the problem here. Because you end up solving the very wrong thing and you haven't solved the problem remains. Yeah, so defining the problem is quite important. Then you start generating solutions. That's when brainstorming happens. And then you start evaluating any of the solutions you have put in place and the plans to implement them. Then you select the solution as part of the whole cycle and you implement and re-evaluate. And then when you have done that, you still need to go back and see if the problem is still there. You might actually need to look at the problem again, redefine it, or tweak your plans and things like that. But this on its own is a very big soft skill, and where you need to follow a structured approach for problems to be solved. So I go back again to resolutions that Mr. Magorimbo there said we need at the end of this conference. It's really to see if problems can be solved, right? So you have resolutions, and then you've got a whole year until the next conference. I want to see if we come back here. I want to see whether any resolution that is going to be taken here will have been at least addressed to some extent. Try and follow maybe a structured approach. But yes, whenever you have a problem, try and follow a structured approach. So that's another soft skill that's quite important. Time management. Now, this one is an interesting one. Techniques for time management. Time management is, okay, let me start with multitasking. How many of you love to multitask? Just raise your hand. How many of you love to multitask? Multitasking, multitasking. Some of you are so talented. Please raise your hands. Please raise your hands. This is your time to be honest. Please raise your hand. Okay, all right. Multitasking has been found that it increases the amount of time that you have to do a particular task by probably 30 to 40%. So it's not an efficient way of doing it, and I'm telling you now. Okay, so it's not an efficient. You will feel like you're doing a lot of things, but no, you're not actually. So this is just an example. I wanted to start with that one because it's an interesting one, because I also have done it from time to time. Because I'm aware now, I'm like, oh, why am I multitasking? Then I stop, and then I concentrate on one thing. Then I move to the next, So some of the techniques: plan and schedule your tasks to remind yourself. I remember when Outlook came, we used to keep the meetings in our heads. Some of us didn't have diaries to write. But that was like overusing yourself. So plan things, put in diaries, create schedules. Prioritize tasks. So again, that's just a technique to learn. Prioritize tasks. Then managing distractions. Some of you in office environments, someone just comes, distracts you and something, or emails or a phone. Try and manage, maybe ignore those things, right? So these are some of the ways to do this. But again, this on its own is a topic where we spend a whole day discussing and practicing certain things, and so that you can see how it works for you. Right. If I move from time management, the other soft skill is positive attitude, obviously alongside strong work ethic. Now, this does help in building relationships, but what are some of the attributes of positive attitude and strong work ethic? So I listed some of them here. Being clear about what you are working for, so that you can fully invest in a task. So what are you working for? Be very clear. Then finding a balanced way to care for others as you care for yourself. By being honest, communicating clearly, listening to others, and asking others about their goals to develop a more positive and productive work environment. So that's really looking at the others that you are with. Taking the time to build trust with those you work with, so that they can work with you, invest in you, and pursue shared goals with you. And then taking work as its own reward. Right. Work as its own reward. Prosper. We were talking over lunch. Taking work as its own reward. Are you enjoying what you're doing? So how many of you move jobs because they want a salary increase? How many of you? Raise your hands. Another moment of truth. How many of you, they want to move, they want a salary, a big salary. They are moving because they want a salary. Right. So it's almost everyone in this room. Let's not even lie. It's almost everybody. But God is seeing you, right? God is seeing you. God is seeing you. But anyway, but taking work as its own reward, meaning you're actually satisfied, you love what you're doing, you're excited. Usually it does remove a lot of issues. So taking work as its own reward, focusing on the satisfaction you derive from doing the work itself, as opposed to material or professional rewards, as when you are happy and you feel satisfied by the work you have done. So some of us work as volunteers. And I was talking to Prosper over lunch, and I said, but do you understand why we work as volunteers? Because we are satisfied by the outcome. I've done what I've done. I'm so happy, I'm satisfied. I'm not paid for it. Right? So we are saying, if you take that attitude, try it. Okay, try it. And I'm not saying don't move. If Rutendo is not giving you a salary, you can go to First Mutual. So that's fine. So I'm not saying don't move, but I'm saying try this. Try this. probably money will come. So this helps, just having a positive attitude. But anyway, sorry, Tent, I think they'll stay with you, don't worry. But anyway, so then adaptability and flexibility, right? Being adaptable. Now, this is usually in the face of change or things happening around you. So some of the attributes for adaptability and flexibility, avoiding romanticizing the past by asking yourself whether the past was really as good as you know. Okay, when I was thinking about this statement, I said, you know, when we grew up, I think a lot of you of my age, you would not make a mistake and you skip your mother beating you heavily. And when your father comes from work, the mother reports to the father, and the father beats you again, you know, and you know it's done, right? But if you look at it, you know, it built us the way we are. Today's human rights, child abuse, that's what they're talking about. But it built us the way we are. But if you look at it as if it was a bad period, that might actually distract you from seeing some of the good things, how you were modeled. So I was looking at this, I said, okay, that's an example I want to give. Then you need to show adaptability in the face of processes that may be changing in whether it's work or whatever is happening around you, or it's a project you're trying to do. And then recognizing that, especially for managers, that people cannot all be managed with the same style. So people are very different. So I think this is meant for people managing teams, managing others. You have to look at the different personalities that have come. They will all potentially require different ways of addressing it. There is usually no a one-size-fits-all. Then demonstrating that you're worth your weight in adaptability by showing flexibility and your ability to navigate change. And I gave an example here where you're generating alternative solutions and taking on new roles show adaptability in a company, and it demonstrates confidence, and demonstrating confidence and keeping calm is also a trait of adaptability. So that's another trait or soft skill you need to develop. Right. Then self-confidence, right? Again, I've got a definition here that says in actuarial practice, self-confidence implies the ability to trust your own calculations and decisions and to clearly communicate your recommendations to others, even in the face of uncertainty and potential criticism, right? That's what I said. But I then listed what I considered attributes of self-confidence, a lot of them, right? Let's read some of them. You intuitively know what's right for you. You must know what's right for you. You walk your talk when you say something. You actually follow through. You are honest with others. You are also honest with yourself. Today, I've been honest when I said I used something I know about actuarial on a date. Okay, so I sat down. I was probably the only one in the room, maybe a few others. So I was really honest there. I was honest, I tell you. Okay, you're not afraid to be wrong and you feel comfortable being wrong. So there is a list. So self-confidence on its own is a very, very important. You have to build this up. I remember when I really tried to speak on the stage. It was very difficult. I had to do a lot of things. I joined Toastmasters and a whole lot of things I had to do. Because building self-confidence was necessary, was important. I didn't even know that what I'm doing is going to help me later in life. But I had to do it. I had to go and do it. Right? So that's something you have to do. And it's something you can't escape because you're going to find yourself interacting, presenting, and doing a lot of things to colleagues and so forth. But I won't finish everything on that slide. These are also some of the, you dress your best. Okay, I think today, what do you think? What do you think? What do you think? I said today I'm not going to be scruffy. I'm normally very scruffy, and I said today, no. Self-confidence, I have to be in front of these guys. I cannot let them down. So those are some of the ways you stand up straight, you practice gratitude. It's okay. Say thank you. You compliment others, say thank you. You accept compliments even yourself. You spend time with people who build you up. All of these things will help you. And they're not one-day things. These things have to be done over time. I think dressing is easier. From here, you must go and buy your suits and everything if you don't have some, right? I would have wanted to see every one of you in suits today. Oh. Are you so self-confident in what you're wearing right now? Yeah, my friend? Are you okay? All right, no, that's fine. Okay, look, it's just some of the ways. I'm not saying, you choose what works for you, but I'm saying be aware of it, right? Let's move on to the next one. Then ability to learn. That's one thing I started with. Ability to listen, accept, and learn from criticism. That is a key component of self-confidence and demonstrate that you value what others have to say. And some of the attributes, I did put them there. When you're receiving feedback, especially harsh feedback, you keep the focus on what you can learn, and you listen with an open mind. You practice active listening, which I mentioned earlier, and when getting feedback, you stay engaged, listen to understand, and you thank the person who gave you the feedback. You always take the time to analyze the feedback, and then make a plan for what you will do with it, and what you can learn from it. You always clear the air after a feedback session. Some feedback is very tough, so thank the person, reaffirm that you value the relationship and the feedback that has been given to you. So you need to develop that ability to learn from the engagement that is happening between you and others, especially when feedback is being given. There is nothing wrong to receive criticism. There is also nothing wrong giving criticism if it's really done in good faith and you want to build others. So ability to learn is one important soft skill. Now, this is my last soft skill, because I then want to go to questions. How many minutes do I have? I only have 5. Okay, let's see, maybe only a few will be shown. So networking, what we're having here, what we're doing here is part of networking. It is quite important. Some of the things, when you are networking, some of you go and say, I want to see and so, because I want something from them. Maybe that's not the way to do it, right? Rather think about what you can offer that somebody. Approach with that. Naturally, when you can offer something and they can see the value that you can offer, you might end up getting what you need. This is just one example I'm trying to give. But networking is really one very big soft skill. A lot of people really don't network effectively or to the way they need to. But let me leave some of the stuff on the slide. I can't really finish them. Key outcomes of developing your soft skills. They are obvious. They enhance productivity, improve decision-making, stronger reputation, great job service, satisfaction, elevated confidence, expanded career options, enhanced credibility and trust, client relationship management, leadership and influence, adaptable problem-solving skills. These are just some of them, right? And then I have expanded on them on this next slide, just about 2, 4, 6 of them. I've just expanded on them, what each one actually means, right? The ones I outlined. Then finally, which is the last slide, there are a lot more other soft skills that I haven't even spoken about. Critical thinking, creative problem solving, business acumen, negotiation skills, stress management, anger management, knowledge management, personal branding, accountability, assertiveness, a whole lot of them. So there's a lot. And what's important about this session is this. I have really just presented the top, really only high level. All of these things need to be done. You need to be aware first that they exist. You need to learn them. And then you need to implement them over time in day-to-day work, in social environments, in all different situations. Start with the awareness and then try to implement some of these so that at least you'll be able to deliver your professional promise, and you can self-develop yourself. You can increase your productivity, you can increase your happiness, and a whole lot of things. A lot of these things are ignored, and I would like to emphasize they are so ignored. This is one of the things where you go to a company and say, guys, we want you to do this course. This is the last thing anybody will look at. Yet it's probably one of the most important things, not your technical skill. Because your technical skill, we know you guys were good. Some of you in this room were getting 20 points. And like I say, these guys are crazy. I mean, I never used to, 20 points and they go into actuarial science. Great. But these soft skills are actually extremely important because they make you a complete professional. So that's my story. Thank you very much. You said I have 5 minutes, so it means the time is over. And we can show 1 or 2 questions, if you don't mind. Tino, do you think I'm being too forceful? Can I negotiate with you?
You can go ahead.
Thank you very much. So, can we show something here? Let's see the results of the voting you were doing. Let's just see. Oh, okay. It was not yet loaded on, okay. All right, so let's see. So I did send about 15 questions. You will see them if you're on the WhatsApp. I want to see what people were saying or thinking. How many said this point? Or it matches what I've already presented. So I don't think we'll spend too much time. Tino, this is such an important subject. Just cut that break that is coming. Let's just go ahead on this. All right. So let's just put. That's the last part I wanted to show. Let's see what people have been saying. Right, so if you think about it, go backwards and look at all the things you have done or you have been doing, right? Start to think about how the outcome could have been different if you applied certain things or if you did things in a certain way. So that's probably that's probably the starting point to start seeing that, oh, the outcome could have been different if I had done this or if I had done that. And that's usually a result of soft skills that can actually be learned. It looks like the guys are taking long. Maybe we're going to have to...
Or we can start with questions for now.
Yeah, we can also do that. Yeah.
Hello? Is this working?
I can hear you.
Thanks, Michael, for the presentation. I think I always associate you with banking, and banking and education. So it was nice to hear something that is off-center of my view of you. And perhaps that's where my question actually is, to say, when I think of soft skills, I think there are things, depending on your personality, some actually come naturally because of natural abilities, innate abilities that you have. And then there are certain things that you actually need to learn. I wanted maybe for you to share with us, perhaps when you discovered that you as Michael, these are the things that you know naturally you do. And then you discovered maybe in these areas, you actually need to pay more attention around. What was that discovery? How did it go? And what has been the journey in terms of learning these things that do not necessarily come naturally to you? Because I think in as much as we can put the soft skills within a curriculum, most of them may actually need the individuals themselves to identify, then work on some form of development plan. Perhaps maybe a case study using yourself would be helpful.
Don't you think that's a very unfair question? Why did you pick someone else? Other people in here, right? Right, so look, I don't know. Some of these things maybe start with your upbringing, but let me tell you, for me, I am an extrovert. So I knew that. So I knew that I can go out there. But I also knew that, for example, my communication is not what I want it to be. So it started with being aware. It started with me looking at other people. There were a lot of people who were always ahead of me. So it started me just looking at people like, so I was trained by Livingstone Magorimbo, who is sitting there. I was trained by people like Mr. Java, is not here, Ruben Java. I was trained by people like Mr. Oto during my time, because they were all way my senior. So I would watch what they're doing and how they're doing things and start thinking, okay, what am I lacking, right? So it started with that awareness. And then I would start taking action. This is why I said, do as I say, not as I do. I wasn't joking, because there are still areas, lots of areas that for the next 50 years, I'll still be saying I'm developing, right? So one big example is I joined Toastmasters. There are a lot of things in Toastmasters. Emotional intelligence, empathy, being able to write a speech, writing it, then be able to deliver the speech. Then there is even a leadership track where you start leading committees, you lead initiative, you lead a whole lot of things. Because I was saying, but there are certain things. Me, I grew up at a farm, and we know we are the people, so we used to walk Tichareva, and so we already knew that I've got this in me, I've got this hardworking. But these elements, I had to learn them somewhere in a more mature environment. So it was an ongoing thing. That's why I said it was just an ongoing thing. Until only now I realized, oh, there's such things as soft skills. Oh, there are psychologists who have researched this thing. So whatever I'm saying here, this has been researched. It's a big psychological area. So you start being aware, so I started being aware. I started even reading up. I started checking myself, and I continuously do that. Everyone who has ever engaged me or be around me, they know that I'm always talking about soft skills. I'm always saying, but guys, do these things. Do they help somewhere? So I think it's a personal journey. Look at role models. Identify what you like about that. Identify what you don't like. Take measures to address those things. It happens over years. Actually, some of the things happen even with my children. I'm like, oh, geez, what this child is, I can actually identify certain very good traits there, and how you respond to others, and how others respond after you've responded badly. All of these things. I'm always asking myself, what could I have done better? Okay, how can I then make it better? So it's a personal journey. It's something that a lot of people need to put even in their personal development plans, because it's not easy even for you to identify it. You'll even deny and say, that's not me. You are lying. That's not me. But the others are seeing you in a different way. And this happens. Okay, thank you. Any other questions? Yeah.
Okay, my question is, how can the development of these different soft skills that you mentioned, could it be problem solving or communication skills, contribute to a successful transition from the academic studies to practical application, particularly in the context of internships and early career roles? Like, what's the role of these soft skills and how can they contribute to that successful transition? And also the other question that I have is, as much as you mentioned that all the soft skills that you said, they are mostly important, which ones do you think maybe are more important than the other for someone maybe going for internship or early career roles?
Thank you. I hope I got you. Let's start with the question of importance. When I said the top 10 soft skills that you need, it was really to grab your attention, to be honest. It was just me. I said, I want to say the top 10 soft skills that you need. But these soft skills are so interrelated. They are so interrelated. I try to speak to them individually for better understanding and awareness. But they are so interrelated. For you to communicate well, you probably need to have very good emotional intelligence. You probably need to be very confident in what you're doing. So, you see, I'm talking about all the things I listed. You probably need to be a good negotiator. I just negotiated my time here. She may be unhappy, but that's a problem. I mean, I got what I wanted. But, so, a lot of these soft skills are so interrelated, right? So I cannot tell you this is more important than the other. What's important that I can say is identify for yourself what you think you need to improve on. And that's on an ongoing basis to start identifying. Then you said, how do soft skills help you in transition from what? From your academics, from hard skills? Was that the question? How do soft skills help you? Look, I think this is one simple answer. When you are building soft skills, you are simply trying to relate with others, trying to increase your productivity, try to help maybe with your critical thinking skills and other things that help you achieve what you want to achieve. So if you come to me and you can do a function, the Markov chain, whatever it is, and you tell me all of that, and I'll tell you I last did that thing, I don't know, a long time ago. I'll probably be looking at something very different in you. You may have all your ones, but I may actually be looking for something very different in you. When you stand in front of me, I might reject you with your distinction because you might not be the person I need. You might actually be bringing problems in my life. Yeah. So it helps you because you become aware and you can address some of these things when you are aware. So don't, okay. Sherlene, can you raise your hand? So Sherlyn, the lady sitting there, has done probably 30 or so soft skills. She's probably even repeating some of them because she is at a stage where she's just trying to get the awareness. And you can also see that the way she's now doing things, she's at university, so she's going back to university, right? It's because she took it seriously and just started doing these things, Because the story is, you want to be a better person. Your distinction does not help. Thank you very much. Oh. Okay, so you wanted to take over. I think you can come and take over. I don't think we have time. But
you can finish off with the results.
yeah, but I think they can. Can I?
Yeah.
Okay, so these are some of the questions I was asking. That's quite interesting. Look, communication. About 44 people said that. We did ask which of the following soft skills do you consider most important. Well, that answers part of your question. People are having different views here, but at the end of the day, it's really about you. It's something personal. You need to identify that. If you move to the next question, I just want to show 3 or 4, not everything. If you move to the next question, I said, which of those components of emotional intelligence resonate the most with you? Self-awareness, self-management, social awareness, and leadership management. So we've got 11, 9, 28. A lot of people say social awareness, your ability to recognize the feelings and needs of others. These are just different people, nothing wrong, nothing correct, they're just different people expressing different feelings. Then the third one, I just want to show them which of the following professionalism traits relate to you the most? Responsibility, integrity, accountability, excellence, all of the above. 37 said all of the above, 15 said integrity. So join that WhatsApp group. I think all of these results are also in that WhatsApp group. If it had come earlier, we would have discussed it more on them. But otherwise, thank you very much, and thanks for listening to my, I hope, useful talk, but I hope also not boring talk. Thank you very much.
All right, a loud round of applause for Michael. We just wanted to appreciate you with a small gift for the talk that you gave us. Thank you very much. Ladies and gentlemen, may we please clap hands for him as he takes his seat. I'm one person who's very big on soft skills because, like he mentioned, no one teaches you these things in school. It's if we do English and communication skills, it's best, and that's it. And the challenge that we have now, especially in the corporate space, is a lot of professionalism has been lost somewhere along the lines, and we tend to just think that it's normal now for people to dress however they want to dress, for people to speak to other people however they want to speak to them. Even sometimes when you're writing emails, simple things as just formal business etiquette, some of us, we don't even know. So these are some of the skills that no one will teach you, but as an individual, you need to take accountability of yourself and just make sure that you have those skills. At this point in time, we're just going to go for a short break, a very short break for tea. But before we go, if the bell rings, because we're running behind time, may we please quickly come back and take our seats. I'm sure it's just a cup of tea and something to munch on. You can bring your cup of teas if you're not yet done, but we need to make sure that we finish on time. So may we please break for tea for just 10 minutes? If possible, let's get our cups and then come back and take our seats. The future of data-driven care. And her name is Henrica Makulu. I shall read her profile. Henrica is no stranger to ASZ. She presented on data, decisions, and disruption at ASZ's convention in 2021. She is a friend of the actuary profession and works with some actuaries in her current work. For example, Farai Mbubwa, her colleague, who was also a speaker at last year's ASZ convention. In her own right, Henrica is a Microsoft certified data scientist, passionate about leveraging data for better decision making. She is experienced in delivering advanced data products in telecommunications, fintech, and healthcare, and is also a LinkedIn learning instructor, technical trainer, mentor, and speaker. Using the notion that data speaks, her desire is to transform lives. Henrica currently does this through her role as a senior specialist, BI, for South Africa's largest health risk management services provider, MedSkim Holdings, as well as through her work as founder and mentor of HM Digital, which is a consulting practice offering training, mentorship, and advisory in digital literacy and data analytics. Henrica has impacted over 5,000 people through technical training and mentorship, both locally and internationally. She is a recognized thought leader in the African data science industry. She was recognized as one of Africa's leading women in data analytics by Tech Build Africa. Top 30 recognized by Data Loom, Top 30 recognized by Empower Africa, and a finalist for the 2022 Global Women Tech Awards. Henrica holds a BSc Honors in Applied Mathematics from NUST and is one of the first female data scientists in Zimbabwe. In 2022, she returned from Silicon Valley, where she was representing Zimbabwe at the prestigious Tech Women Program, an initiative of the U.S. Department of State's Bureau of Educational and Cultural Affairs, managed by the Institute of International Education. May we please give her a round of applause and help me welcome our next speaker, Henrica, to the stage.
Thank you, Tinoda. I'm super grateful, and thank you, ASZ, for having me today. This is not fair because people are ready to go home, people are tired, so I have a mammoth task of keeping your attention. However, I was watching your faces as Mr. Michael was presenting, and one thing I'm happy about is this is the Actuarial Society. We've got intelligent minds that are used to looking at these figures for hours because I could still see you engaged, so I'm not disheartened. Okay, we're talking about the future of data-driven care. Is this working? Okay, there we go. Thanks. So please help me give a round of applause to the ASZ for such an organized convention. I must say that I've spoken at a lot of places, but it always matters, the attention to detail, what you're given, the information you're given beforehand. You come prepared knowing this is the program, this is what time this is happening, and I think it shows on the professionalism we were talking about earlier. So well done, ASZ. It's speaking a lot for your brand. Okay, if there's one word I've heard throughout today, earlier on when the Deputy Minister spoke, he said, I would like to give you 5 keys to maturing the actuarial profession, and his number 1 was? I also then heard when Sheila was speaking from Old Mutual, and she said, I know this wasn't the main part of your presentation, but I highlighted it. She's like, for example, when you're doing your EAR and you hire a credit analyst and it reduces your shock. And I'm like, credit data analyst reduces. What do we do as data people? We reduce the shock, we reduce your risk. So I think data is very pertinent to all the discussions we've been having today and to all the work you do in your various industries. So while we're talking about health, this presentation applies to other sectors as well. Okay, so I take pride in being a friend of actuaries, and if there's such a thing as intelligence by association, then I have it. Because my first interaction with actuaries was when I was studying applied mathematics at NUST, and we were sharing the same lecturer for calculus and I think 1 or 2 other modules. And as applied math students, we were seeing fire. We would get 45% at calculus, and that would be our highest mark. The rest of us were in the 30s, you'd have to repeat. The actuarial science students, though, their lowest was 45. So while our highest was 45, that was their lowest. They was playing in the 80%. So since then, I was like, oh, similar to what someone said earlier, most of us didn't actually know what actuaries do. But all I knew is, whatever they do, 80% at calculus, these guys, don't play with these guys. So I've always had a very high view of the profession. And so I'm humbled to be associated with you. So intelligence by association. Okay, in my association with actuaries, I've got friends in my personal circle that are actuaries. I've got colleagues I work with day to day that are actuaries. I'm observing some of you today who are actuaries. As a data person, I categorized you guys into 3, right? The first is the type of actuary who's an arrogant actuary, who knows what they're talking about. This person knows it all. How many of us know one of those? If you're not lifting up your hand, maybe you are one of those. The second actuary I've come across in my circle is the afraid actuary. This person has sat through your exams and done all the great, amazing things you guys do, past calculus, but they feel like a fluke in the industry and they don't really think they know what they're doing, but they're doing the things, but they're afraid. Then the last one is the ahead actuary. This one's not arrogant, not afraid. This one just wants to get the work done. They're just about like, guys, let's not play with all these, let's just get the work done. So which one are you? And maybe I should apologize because earlier on the president said, you guys go through trauma. So now I'm feeling bad about saying they're arrogant actuaries because maybe it's a trauma thing, I don't know. But I would like us to take a quick poll. For those of you with data or whose Wi-Fi is working, please go to www.menti.com right now on your computer or on your phone. Type in the code that you can see there, 15171937, and tell us, which type of actuary are you? Let's see the type of actuaries we have. Okay, so the code is still there. At the top, you can see it in small there, 15171937. Okay, someone has answered other. Already, I've got some technical people who are trying to be like, I'm not in these categories you've put. And I wonder at the end of this if you can tell us, what are these other categories that I left out? Okay, let's wait a few seconds to hear what others categorize themselves as. Are you the arrogant one? Are you the afraid one? Are you the one who just wants to get ahead and get the work done? Looks like we're having connectivity problems. What I can do for the sake of time, because we're behind time and we want to move forward, what I can do is, so just keep voting, it's open for a couple of hours. I can take a screenshot later on and share this on LinkedIn. I'm very vocal on LinkedIn, similar to Sheila, so if you're curious, okay, there we go, connection's back. I will also put a screenshot on LinkedIn. So far, we've got ahead actuaries, and I don't know if that's us giving ourselves too much credit, I don't know. You be the judge. From the 6 people who said they are other, anyone bold enough to say what the other is? Anyone bold enough to share what I missed out in my assumptions? Let's be transparent and accountable, guys, and show our methodology. The 6 who said other, in fact 7 now. One of you tell me. Yes? I like how Mr. Immediate Past President thinks. He is a combination of all the others, and I guess now I'm seeing you guys are copying him. There's now 10 people saying, yeah, me too, me too. But it looks like, thank you so much, we can go back to the slides. It looks like most of us, 20 so far, identify ourselves as people who just want to do our work and get ahead. But yeah, I just found that very interesting to categorize my observations of actuaries. Okay, so, where am I? There we go. Now, before the afraid actuaries get comfortable, before the arrogant actuaries criticize me, and before the ahead actuaries kill me because I'm not going ahead, let's get down to business, why we are here, the future of data-driven healthcare. So this is my boss and my colleague. We were collecting an award for our company winning the most innovative use of AI. This was in Cape Town last year. And so I work for a company that is under what they call Afrocentric Group, but my particular division is called MedScheme Holdings, and we're health insurance administrators. So the bigger group is called Afrocentric, and the health insurance is called MedScheme. So I might use those 2 terms interchangeably. My boss, who is in the middle there, his name is Vukosi Sambo. He is one of the top 100 data leaders globally. You can look him up. He's got a background in economic science, actuarial science, mathematics, and AI. He's the head of data at Afrocentric Group. He's the one I report to. And I've learned so much from him about how to drive health using data. And so that's what I'm going to be sharing with you today. He's based in South Africa, and so I'm privileged to work for South Africa based here at home in Zimbabwe, and I can steal his knowledge and come and help the industry back home. So I hope you get something from what I've learned from my work at MedScheme. Okay, so at MedScheme, this is our approach to data-driven healthcare. We know that the healthcare industry continues to evolve, and the role of data is very important in driving efficiencies, improving patient outcomes, etc. In our digital world, which we have today, it's key to have optimal healthcare, and this relies on how well we know our customers. And I think someone earlier on said it as well, to say, look, if you don't know if you're not solving your customers' problems, all the other things you do can be null and void, right? So for us as data practitioners, data lies at the center of what we do in the digital world. And we always say at work, data is important when it comes to driving digital transformation and growing your business. But for us, when it comes to healthcare, literally lives are on the line. If we make a mistake with our data, people can die. That's how real it is. Okay, so I did a quick poll a few days ago on LinkedIn to ask who people think is the leading medical aid provider in Zimbabwe. Touchy subject, hey? And what I did was I initially put a first post to get the top few medical aids. This is according to people's opinions, by the way. And those from First Mutual, please don't kill me, because a lot of people have been saying, but why is First Mutual not there on those top 3? I took this from the comment section of LinkedIn. So if First Mutual people are not commenting, sorry. But my argument is, so far, from the 180 people who have answered this, 55% of those think CMAS is the leading one. Second is Alliance. Some are arguing between First Mutual and Masca being number 3, right? My argument is, if First Mutual, for example, thinks they are second or first, that other should be around, I don't know, 40%. Anyway, you are the actuaries, make your own assumptions. But I found this interesting, and this is such a pertinent question, because we know the harsh operating environment we have in Zim. We've been talking about it from the beginning. And so providing good health insurance is very tricky, and so hats off to those who are actually leading in the industry, your CMAS, your Alliance, your Masca, and your First Mutual. Out of interest, anyone think there's a name that should be on those top 4? CMAS, Alliance, Masca, First Mutual. Any other competitors that you think should be up there? Shout it out. Pardon? Cellmed. Okay, we've got a Cellmed. We've got a Cellmed and some laughs. I don't know what that means. Huh? Oh. Do you work at Cellmed, sir? Yeah, but I think this is a question we need to continue to think about. And so I'd like to marry what I've learned in South African healthcare and bring some of those learnings to Zim. Some of the indicators we look for. So what we like to say at MedScheme is, we care, right? And if you care as a health insurer or a health insurance administrator, what are the things you would do? And so you can see some of the things we look at. Are our premiums affordable? Do we cover comprehensively what our patients need? How's our customer service? When someone submits a claim, what's our turnaround time? So we've got 2 metrics we use at work, TAT, which is turnaround time. When a claim comes in, how long does it take to process it? And then we've got a second metric, which is called TWT, today's work today. How many claims did we get today and finish processing today? So turnaround time, TAT, and TWT, today's work today. And by us measuring those things, the first time it was measured, we had a dashboard and it showed our TAT and our today's work today, and the figures were astonishing. But with time, we've been able to reduce them. Obviously, there are challenges and we can't reduce them as much as we would like, but we've seen a significant reduction. Claims processing, like I alluded to. And then I'd like to talk about this big project we've embarked on, which we call the single care measure. The single care measure is an assignment I got when I first joined MedScheme. Such a mammoth task. I, as a data scientist, have to come up with a single score from 0 to 5 that tells me whether MedScheme cares or not about its patients and providers. From 1 to 5, are we on a 1? Are we on a 2? And that single care measure, which will be on a dashboard, is informed by like 100 other metrics to do with premiums, to do with customer service, to do with claims processing, etc. So you can imagine what a large task it is to start collecting all the data that speaks to those little things, and then use a certain methodology to collate it together, and then just come up with one single score. And I'll tell you which people have argued with me a lot: the actuaries. Because they're like, no, but you can't just simply come up with this one score. Have you considered this particular nuance, and this particular assumption, and this new regulation? I'm just like, so it's been very interesting, and it's been a mammoth task, but I think by us collaborating with each other, we've been able to make a little bit of headway towards coming to that single care measure. This single care measure, which we call SCM, is a value-based care model, and we use 5 pillars. So those hundreds of metrics I mentioned fall into 5 categories. Number 1, access to care. How accessible is care? The cost of care, which is obviously a big deal. The health quality outcomes, the patient experience, and the provider experience. Because it's one thing to have happy patients and then the providers are unhappy, or happy providers and the patients are unhappy. You need that balance of happy patients, happy providers, good health quality outcomes, efficient cost, and large or access to the care. So those are the 5 areas. So essentially you have your SCM, your single care measure, the 5 categories. Under those 5 categories, we now list the metrics one by one. How many claims did we process? How many out-of-pocket payments did we have? Etc., etc., etc. So this is the value-based care model that we use. So in us using these metrics to drive care, we've been able to identify patterns and trends in our patient behavior. For example, here are 3 examples: to proactively identify and manage chronic conditions before they become more serious, because we noticed that a majority of our claims comes from people who have chronic conditions. And there was an insight we found some time back to say the top 2 chronic conditions, I don't remember the exact figures, but the top something chronic conditions are actually lifestyle conditions, for example, diabetes, where if you start working out, all our high-risk patients, if they start working out, cut out sugar from their diet, some of these claims can be reduced significantly because of lifestyle changes. But obviously, it's now a whole system that you're trying to change, a whole mindset in people and how they live and how they do things. But because we care, we actually have to drill down to that level to say, what are our patients eating? What are their diets like? Are they working out? So we even go sometimes down to the data and say, when we last held a wellness event in this particular area, which of the patients in this area attended that wellness event and did the run, that half marathon that's coming up, etc., stuff like that. Then we also identify patients who are at risk for certain conditions and provide patients with personalized health information, like, hey, you haven't gone for your this and this test in 2 years. Would you like to go? There's a special, you can go and have it done for free. Would you like to? So these are some of the things that we try and do at MedScheme to be proactive with the way that we drive care using data. What about the big buzzword these days, AI? And I'm excited, I don't know if you are, for the presentation tomorrow that has to do with AI and machine learning. But these are people are asking, how can AI help us in our areas? And these are a few ideas. I've highlighted fintech and health tech because the theme of this convention has to do with financial services, health tech because I'm in health. But these are some of the things we can do: fraud detection, financial analytics, credit scoring, and at our company, I know we have a fraud detection model for the providers that we have in our system. Then in health tech, you can, like I said earlier, analyze your patient data. You can personalize medication and care and recommend different things, drug discovery, and computer visioning. So those are some use cases for AI within our different industries that we can consider. My boss, who I always praise so highly, Vukosi Sambo, and another colleague of mine, Shanwin Williams, published an article in the South African Health Journal under the Board of Healthcare Funders called AI Health Concierge, Optimization of Healthcare Services for Greater Population Impact. And in this work, what they did was they used predictive modeling and machine learning to do three things. To stratify, so to take our patient base and say, okay, for this particular group or subgroup or cluster, this is what this patient is likely to do, this is how much they are likely to claim. So you can see, for example, there on stratification, it says a 45-year-old male has high probability of being admitted for hypertension in the next 12 months based on the different features that they created in their model. Then personalization, the model also helped them pick individuals. So you can see there it says, this individual has not seen a GP in the last 7 years, for example. They live 15 kilometers away from the nearest best GP who is in our system. They've gained 8 kgs in the last 12 months. They've indicated to be under stress based on sleep and sentiment. Then there's care coordination. So for example, when we have wellness days, you know, encouraging our patients to go there, it says there this individual lives with a community, with a community where exercise programs are available. So you know that, okay, this person doesn't exercise, but the access is there. So it's more of a choice. So these are some of the things that we then try to personalize and help us use data to help us care more. Obviously, I mean, you're listening to this and you're like, yeah, Henrica, that sounds great in theory, but come down to practice. It's not easy to call this 45-year-old man and be like, my guy, go work out. Like, doesn't work like that, right? So obviously the challenges are there. This is not me saying MedScheme has it right, we do everything right, but I'm trying to show you the model or our ideal situation that we work with. Given the limitations we have, we then work around those. So for those of you who are looking to get into data for your different areas, whether it's in health or otherwise, what are some of the tools we use? We use the Microsoft suite, including Azure Cloud Platform Services and Power BI for a visualization tool. We also use SAS, particularly our actuaries have been using SAS for years. And then we also use AWS for some of our cloud, keeping our data on the cloud and working with it there. Then we also have something called Ecosystem AI. I don't know if you've heard of it. It's basically a company that works as a third party for us for some of our AI solutions and models. And then lastly, who can take a wild guess what other tool we use? Excel. Dear old lovely Excel. I love Excel. And I think people have started looking down on it, but there's certain things where if I try and use Python to do something, Excel will do it quicker in a few seconds. And so I think it's important for us to know which tool to use where, as long as you are getting the job done. For me, my major limitation with Excel is currently our healthcare covers 4 million lives, roughly, right? Excel has a limit of how many rows? Who knows? 1 million rows. Excel limits you to 1 million rows. So if I want a list of all the customers at MedScheme, 4 million, Excel's not going to cut it for me because of that 1 million limit. But if I'm working with a data set where I know I just want to look at the number of providers in this particular Gauteng province, maybe there are a few hundreds of providers. If I can do it in Excel in 5 seconds, why must I now bring out the coding and try and act clever when Excel can do it quickly? So tools are just a means to an end, and it's important for you to know that and to choose your tools carefully. I then wanted to end by showing you some visuals, because obviously in your mind you're thinking, okay, what do these things look like? But I was very selective because data is very confidential, and so I'm showing you what our dashboards look like roughly, but I've blurred. Yeah, it's kind of blurred, but if you're clever, you can kind of see. But like, this is what they look like. This was built in Power BI, and what this does, it just shows us at any given time what's our hospital claims summary looking like day on day, what percentage of out-of-pocket payments were processed in claims. So we then track that number to say last month, 8% of our claims, or 8% of the amount we processed for claims, the patient had to pay out of pocket. How are we doing this month? Have we reduced what the patient has to pay out of pocket? Has it gone from 8% to 7%? How is that percentage tracking? And so we track that month on month. And then we also look at different providers, different schemes, different plan options. Yeah, there's different things we look at. And this is just one small example. We have more complex visuals, but I just wanted to show you that This is what some of them look like. Okay, so I'll end by reading to you what MedScheme or Afrocentric envisions looking to the future of data-driven care, and I'll just read it word for word. Looking to the future, data will continue to play a critical role in Afrocentric and healthcare. We are committed to investing in the latest technologies and data management practices to ensure that we continue to provide the highest quality of care to our patients while driving efficiencies and reducing costs. By leveraging the ever-evolving potential of data and insights, we believe we can truly revolutionize the healthcare industry. So I will end how I began. Data, data, data is at the center of it all. Thank you.
Thank you so much, Mrs. Data. May we please give her a loud round of applause. Do we have any questions? Okay, Sheila has a question.
Thank you for that presentation. It was really interesting. So in East Africa, we do a lot of medical insurance, but each insurance company handles their own administration. And what I'm understanding from you is that you're not, MedScheme is not an insurer, but you do the healthcare admin. So if I was to build a case for our insurance companies back at home, why it's worth outsourcing healthcare admin to a company like MedScheme, if you can give me like 2 top reasons why. Yeah.
To be honest, I can't even think of 2. I can think of 1. And those of us, I see we have a couple of people who are familiar with the South African environment. The South African healthcare environment is highly regulated to the extent that it's a regulation that every single medical aid has to be under an administrator, something like this. I think other people can articulate it better than I'm doing right now, but I know that it's a regulation. And so under our scheme, we have, for example, GEMS, the Government Employee Medical Scheme. And GEMS, as they are with the infrastructure and the system they have, they are not able to run their own medical scheme without MedScheme. So I'm not really the best person to answer the question, but I know that's one big reason. I don't know, do we have someone here who can articulate the whole nuance behind the regulation in South Africa and how it's needed for you to have an administrator? Anyone who can do that better than I did? Out of interest. Please, go ahead.
Okay, so I think I'll try to answer the question. So the one main reason, well, I guess maybe let me start with the biggest one, is that businesses are good at what they do. So the downside of administering yourself is that you don't learn from anything else. So for example, I'll take MedScheme. They administer GEMS, they administer PolMed, they administer FedHealth. So they have an industry view which you wouldn't get if you just administered yourself. That's the first one. Then there's economies of scale. And then the third one, I guess I could give you more reasons, but the third one is provider engagement. So for example, when you negotiate and you administer yourself and you have a managed care function, the problem is that you are administering, let's say the scheme is like a big one. Let's say it's Jubilee, 50,000 people, 60,000 people. You are negotiating just for that group of people. But if you have a large administrator who's now negotiating for 250,000 people, all of a sudden your ability to negotiate increases. So it's just more, it's quite an efficient way to aggregate something that isn't the core reason you should be competing. You shouldn't be competing on your ability to administer, but rather on the benefits you offer, the efficiency of care, and so on.
Thank you so much. If I do receive a gift like other speakers, I'll share it with that gentleman. Thank you. Any other questions?
Thank you very much, Henrica, for the insightful presentation. My question is around fraud. In trying to fight fraud, so in this market, we don't really get information regarding clinical statistics from about patients from sales providers. So it's really difficult to fight fraud. So how do you go around the issues of not getting clinical data? Is it use of wearables where you can get information like vital signs for the patients for you to then be able to pick that fraud in the claims?
Thank you for that. Again, I will be honest and say what I don't know. So we have a forensic department that deals with our fraud detection, and they've been doing it for years. I know our team built a dashboard for them that had certain information, but to be honest, I really don't know. I would have to revert to the forensics team and come back to you, Gerald. Thank you. So since I'm saying I don't know to all the answers, I think I can sit down. Thank you very much.
Before you go, look at you running away from the questions. Anyone else with a hot question? Okay, I'm just joking. We've got a gift for you, which you promised you're going to share with the gentleman. Just to say thank you so much for all the insightful information. I'm sure we will learn a little bit more about data and how to use it to our advantage. All right. I think this has been so insightful, well organized, very useful to everyone who's been in this room. Trust me, I've hosted, I've attended so many conferences, and this room is still almost full from morning up until now. And for me, that's a huge indication that there is value that has been gotten from all the speakers, all the panel discussions that have been had. For that, may we please give a loud round of applause for all our speakers and the panelists. Thank you very much. We cannot thank you enough. Today is just day one. Tomorrow there's even more exciting things that have been planned for us. We're going to be talking about machine learning and AI. We're going to be talking about investing in property. We're going to be talking about the aspect of education that has been raised when it comes to actuaries and what has been done. What can we do to make sure that it's not just something that someone can think about when they have already advanced, but from a tender age, those that want to venture into the profession will have the necessary support when it comes to their education. So tomorrow, let's come prepared. It's going to be exciting, and we're going to have so much fun. We've got a branding store outside. I'm sure most of you have already seen the AZ team telling you about the nice half puffer jackets, the golf t-shirts, the caps. The branding team or the branding department is solely responsible for raising funds for the various initiatives that the Actuarial Society of Zimbabwe does. Some of the funds is to, take part in the preparations of all of these that we have right now. And I think it's only fair that we support these initiatives so that for next year and other conventions or whatever initiatives happen, we also can have a nice experience like we've done today. So the puffer jackets are going for $30. They have golf t-shirts that are going for $15. And tomorrow they will have caps going for $5. Those that can go 30, I encourage you to go 30. But for you to say you can't go 5, I don't think that makes sense. And I've told you in advance. So tomorrow, please come prepared. Don't say I'll be harassing you. I'll be by the door, checking if you've supported the society in one way or the other. At this point in time, I shall call upon the Secretary General for the society, Mr. Patrick Gombe, for him to give us the closing remarks. May we please give him a round of applause as he comes up.
Thank you, Tino, for driving the ship since morning. We want to thank you for leading us in facilitating the discussions this Thursday, and we're looking forward for you to continue facilitating the ship tomorrow. Let's give Tino a round of applause. Usually we forget to thank the director of ceremonies. So I have been very careful to thank you before any other person. I think my role is to make closing remarks. And in doing that, I would want to thank our speakers who made presentations during the day. I was listening to the presentations and they were quite insightful. They were quite impactful, and I hope each of us have taken some key takeaways from those presentations. I would like to just summarize a few key takeaways that I have been taking note from the presentations. Unfortunately, the first presentation that was made by Agrotosh, I was not in the room, so I cannot summarize the key takeaways, but I hope that you have articulated very well the issues of climate risk and how actuaries can be involved in that space to improve societies. Then, obviously, the minister's speech was quite insightful and informative. I think the key takeaway for me is for us as the society to work on the Actuaries Bill. We are hopeful, as indicated by the President, that towards the end of this year or early next year, we would have our bill gazetted, and we look forward that where we need your support as members of the society to contribute either by giving comments or whatever way for us to get the bill gazetted. Let's have you on the table and discuss those issues. Then I liked the presentation that was made by our President, Mr. Prosper. I think he summarized the key achievements of the society, which is quite a great thing. I think since 2015, he has articulated the key achievements that we have made as the Actuarial Society of Zimbabwe. He also summarized the key prospects of the society for the next 10 years. And I think I was touched when he said, in the next 10 years, you must have your own achievement that you want to make in the next 10 years. And the Actuarial Society of Zimbabwe will be with you on the journey for you to achieve what you want to do. And as the Actuarial Society of Zimbabwe also need you as members. For me, I think the greatest assets that we have as the society is our membership. That's our greatest assets. We don't put them on our balance sheet, but I think their value to us is more than what you see on our financial statements as the Actuarial Society of Zimbabwe. If you talk about the fellows, we've got 30, as has been indicated earlier. We also have, I think in total we have got in excess of 200 people, and the commitment that you give to the society is quite invaluable. Then we had a presentation from Sheila, where she talked about the general insurance. I think she talked about the earnings at risk. So it was quite an insightful presentation. When I was out during the lunch hour, some people were joking that as the regulator, don't rush and make a circular on earnings at risk. And I told them that, no, we are not going to do that. We understand the dynamics of this economy. We know that most insurance companies are actually making their profits from investments because of the dynamics of our economy. Then we also have a panel discussion from our colleagues, Rutendo, Willie Chibaya, and Taurai Jamo, which was moderated by Chiduza. It was quite insightful. I think the key challenge that we have is we need to, I think there's a debate whether we need to restart the pension system or to reform it. When I was reflecting, what does it mean to restart something? It's like we have to pay out all the people who are currently contributing or who are on pensions, pay them in full, and then just ask those who are currently employed to start contributing and start a new thing completely. I don't know whether that is what it means to restart the pension system in Zimbabwe, but it's a very extreme discussion point for me to restart the pension scheme completely in Zimbabwe. Then we had a presentation from Michael. I think for me, my key takeaway from Michael is that employers actually, they don't hire people who have got hard skills. They hire people who have got soft skills. If you have got hard skills and you lack soft skills, you'll be retrenched. They will look for someone who is smart, someone who can articulate issues, someone who can communicate, someone who can work with the teams. That's the key takeaway from Mike, the soft skills. And I hope that each of us who is going to work in one way or the other to improve our soft skills. Then we have the last presentation from Henrica on the health insurance. I think it was quite insightful, a comparison with amongst our medical aid schemes, and also the experience from South Africa. I think we will learn something, and as a country, we may be going to adopt a few things from South Africa. Then I think the other point that I want to make is that we encourage the members of the society to volunteer for different things or different activities that we run as the Actuarial Society of Zimbabwe. I was reflecting, I have seen actuarial consulting firms bidding for projects, and what I see there is an hourly rate. How much a senior actuary will be charged, how much this associate actuary or someone at this level will be charged. So we have people who are volunteering many hours to the society. And if we monetize those hours, I think we've got so much financial resources that we are getting from the members, which is not loud, because if someone volunteers, you don't see that there's a financial gain to the society. So I am very hopeful that as we go forward, we have more people volunteering to participate in the activities of the society. Actually, what I'm thinking next year, we can just have a summary of the number of hours that have been committed by different volunteers so that we can motivate others to also participate as volunteers to the activities of the society. Then I think let's take this opportunity. I have been approached by a number of people, especially the students from the University of Zimbabwe, who are looking for mentorship from senior people. I think this is a very important opportunity for colleagues here in this room to find some guys who can mentor you so that you can progress faster in terms of your actuarial exams, and you can also get more safety skills as you progress towards your qualification as either an associate actuary or a fellow actuary. I am hopeful that with the knowledge that has been shared by different speakers or that will be shared during the 2 days, 1 or 2 people are going to go and implement it in their organizations so that our employers can also value our annual conventions. If we ask them for support to fund the activities or to pay for your subscription fees, they don't hesitate, because once you come out of the convention, you go there, you make suggestions, you make improvements in systems, you produce new things and provide new information and new ideas, which is going to be a good thing going forward. I think what maybe personally I would do is, in the next 2025 annual convention, we have a prize for someone who can demonstrate that they've went back to their organization, developed something after this convention, which is in line with whatever has been presented. We can give that person a prize so that they demonstrate that these conventions have got a value that is just beyond networking. The other comment that I would like to make is that we as the society and our members, we encourage our members to be more visible in the activities of the society or other regional activities. We also expect that as members of the society, we are invited to speak at other conferences like ASA. We are invited to speak at regional other conferences like Kenya, the annual convention for Kenya. We should be having a number of people being invited to speak at regional and international conferences as the Actuarial Society of Zimbabwe. Then I think we have taken note of the proposals for us to take resolutions from this discussion for this conference, so that we can then follow through those resolutions, and by the next convention we should be able to report back in terms of the progress that we have made on all the resolutions that we have agreed by the end of this convention. Then without, I think I also want to acknowledge our sponsors who have made this event very much possible. Our platinum sponsor, Claxon. Thank you very much, Mr. Chiduza and your team, for supporting this convention. Let's clap hands for Claxon. We also would like to thank First Mutual, our gold sponsor, FBC Holdings Limited, cocktail sponsor, ZB Financial Holdings, NASA, silver sponsor, and the Actuarial Society of South Africa. Thank you, Michael, for helping us with finances to run this convention. Bronze, we have Econet Life, Mohana Foundation, Institute and Faculty of Actuaries, Independent Actuaries and Consultants, Beacon, Maus, Minerva, Old Mutual and Coronation, and ZAC Global. I think these are important financial partners in most of our activities as the Actuarial Society of Zimbabwe. We encourage you to continue supporting us as we focus on our growth and thrust to grow the profession in Zimbabwe. I thank you. Over to you, Tino.
Thank you very much, Mr. Secretary. May we please clap hands for him as he takes his seat. I will not take much of your time. This has been a long day indeed. Ladies and gentlemen, thank you for coming through. We hope to see all of you tomorrow as we round up our conference and enjoy. So may you travel home safely, and I hope to see you all tomorrow. Have a good night.